What's up, Tasty Nation? Welcome to the show. My name is Mike Butler. I'm here with Jermal Chandler.
What's up?
It is Tuesday, June 24th. We've got
Wednesday. I'm thrown off too, dude. I can't seem to keep track
June
of days.
20
I'm telling you, it's crazy.
Wednesday.
I know, it feels like a Tuesday.
It is nuts.
Yeah.
Time flies when you're having fun.
Hey, listen, that's how it goes, man. How you doing? We got a new guy. We got a new guy in Chicago. We got a new guy in Chicago Bulls.
Yeah, well-
I'm so excited. I'm excited.
Yeah. Number 4 pick. And then we got a shooter for the 19th pick.
Something like that, yeah.
I think we're going to be okay.
I'm happy, dude.
Yeah.
He's one of the guys that I saw during the season, and I was like, ooh, I mean, I'm a Duke fan, but this kid's a Carolina kid, but I liked him. So another North Carolina kid coming to Chicago. Mm-hmm. I mean,
Could be spicy.
could be.
Yeah, the Bulls are making moves. The Blackhawks made a trade to get a star defender. So
Yeah.
things are happening. You got the Cubs, you got the White Sox popping off.
Yeah, how about it?
Yeah.
Could it be that they
we're on the
all
up
are
and up.
good at one time?
No. There was that time earlier last year where it was like they were all 5-0, and it was the first time that all of them had a winning record for like 60 years.
Yeah.
And that faded quickly.
Yeah, I know.
But
I know.
yeah, you can only have a few teams. You can't have all of them.
I know. It's cool. But yeah, no, it's cool, man. I mean, the Bulls got the Caleb Wilson kid, another Caleb. How many? I mean, there's going to be, a lot of people are going to like be confused by that. Like older people, you know?
Yeah.
That Caleb Williams is so good on the basketball court.
That Caleb Williams.
Did you see Caleb Wilson's touchdown? It's going to be a lot of that.
Oh my God. A lot of crossover.
Yeah, for sure.
But yeah, markets are up, pre-market just a little bit, kind of an inside day for now, but we've got Micron earnings today. We've got plenty of guests to join us this morning, and I think we'll see some decent movement today, especially after yesterday's craziness. But yeah, join us on the YouTube channel if you haven't already. We're streaming on Tasty Live. You can throw in your trade ideas and questions along the right-hand side chat. We'll monitor them and cover them as best we can. But yeah, we just heard that Google is going to be entered into the Dow.
Yeah, I was, to your point. I mean, Micron reports earnings after the close. Google just replaces Verizon in the Dow Jones Industrial Average. First change there since 2024. So that obviously doesn't happen too often. We'll see if there's going to be a little move from Google here. Errol's going to join us live from the CBOE floor after the bell. And we have Justin Sacco of Sacco Financial. Apparently, this dude's pretty good at talking to people about ETFs, for using options for ETFs in Roth IRA accounts. So I want to get some good insights from him on that. We also have Tim Knight on charts, of course. We also are going to have Liz and TP join us. So should be fun. And then, Julia from the research team is going to show up with a piece. We got a lot of stuff for you. Like you said, submit those questions into the chat. We got a packed show for you. Should be fun.
Yeah. And we do have some of these products that had some earnings reports yesterday, actually. So it looks like FedEx is down a little bit here.
Yeah.
Trading at $2.95 pre-market. The up-only earnings reports are over for FedEx, apparently.
Yeah. I did some calendars in this one at the very end of the day. I kind of got into it. I did the 3, 4. It seems stupid now. I feel so stupid calling these out after you've done them, and the next morning we're here, and it's like, oh gosh. But whatever. They were actually very cheap. So I did the 340, the 345, and the 350 calendar calls, and they were like, $1.65, $1.40, and $1.14. So
yeah.
But yeah, it's down. But again, the whole idea is hopefully this thing can make a move between now and next week. Honestly, for those long calls in the next week.
Yeah. And we do have some other earnings reports. We got Nike.
Oh wait, we also had last night. We had Cerebras too, CBRS.
Oh yeah.
Yeah, it's not. I don't think it's really doing that.
The first report. Yeah, it's down 10%.
Those are the only
20
interesting
points
ones for last night.
Yeah. But yeah, we'll see how SpaceX behaves over the next couple of days here too. We got Micron. We got Constellation Brands next week. Nike next week. So we're kind of at the end of this, but Micron has become, the craziness and the product that everyone's watching. It feels like an NVIDIA style earnings report, and we're actually going to break that down with an options math check in about 10 minutes here. But We're going to take a quick 90-second break. Again, join us on the YouTube channel. Throw in your trade ideas, questions, and we'll get to them. But we're going to bring in Gus after this break. We're going to look at a couple of big movers today. You're watching Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Welcome back to the show, everyone. We've got E-minis up 20, NASDAQ up 140, and markets are moving today. Again, we got Micron earnings after the close today. Could be a wild day, but we got some other products moving as well. I'm joined here by Jermal and Gus. He's going to walk us through some money maps today.
Yeah, we got the trending names for the day. There's some fun stories that could move the market ahead of things today. The leading story for today, obviously, is going to be Wendy's. Wendy's has become the most recent meme stock, trading up about 16% in pre-market right now. They did hire a new CFO, but obviously this does not quite correspond to that. Wendy's was the second most discussed stock on Reddit yesterday. And as we head into today, 23% of Wendy's free float is currently sold short. Obviously, the company seemed to be nearing bankruptcy, down 50% in the last year. But that could potentially, now moving up 16%, create a situation where those shorts have to buy some shares to cover. And we know what we call that when that happens. It could be a short squeeze, dare I throw around that terminology. So, yeah, Wendy's certainly one to keep an eye on into today. Could very well, I don't want to go all the way to say it could become another Avis Rent-A-Car situation, but we could see a considerable and perhaps short-lived up move in Wendy's in the next few days.
Until they get the salad bar back, I don't care.
Do they still do the like lifetime Frosty keychain thing?
I don't know, dude.
That was I know that was always like when I was in like elementary, middle school. That was drip. If you had the Wendy's Frosty keychain, you could just walk in there.
That sounds great.
Yeah.
It does
Spicy nuggets that's where they have the differentiating factor. Right
Sure.
there. Spicy nuggets.
You are right about that.
Telling you guys though, that man, the salad bar was the bomb. I'm telling you, everybody knows. Watch, check the chat. If you around the salad bar, Wendy's salad bar, dude, that was the differentiator between McDonald's and Burger King and Wendy's. The salad bar and the Frosties.
Wendy's had beads in the windows too there for a little while, right?
Yeah.
It used to be lit. It sounds like, I don't know. Everything's getting glazed over now. Minimalism. Next story to dive into here is Meta. Meta is going to get their price point on Meta glasses down to $299. They're trying to make AI eyewear an everyday product. Zuckerberg, and then last week the Snap CEO saying that they believe smart glasses to be the next evolution to smartphones, the next evolution to computing. They want everybody in smart glasses, so lowering the barrier to entry to $299 on those, trying to stay ahead of Google and Snap, as I just mentioned, who are rolling out similar products. Meta wants glasses, and yes, they already ship more than 75% of the world's smart glasses. Going to be tough to retain that market share as time goes on and more companies dive into this field. So Zuckerberg doing everything he can, partnering with Kylie Jenner yesterday to roll out some very stylish Meta glasses that she designed, then lowering the price point on the main ones to $299. You guys in the market for smart glasses? Is that ever something you'd entertain?
I don't know, but it's not often you hear the hot chick teaming up with the nerd.
That is true.
It's true. He was very excited about it too. I don't know if you saw his interview. He was like fumbling with the glasses.
Oh my god!
He's like, we were really excited to work with her. You can see she put this gem. She chose to put this gem here. She really wanted it.
I used to love shorting Meta, and then he got the glow up with literally he had chains, wearing chains all day. And he's got the flowy hair. I'm like, ooh, I don't think I can short this stock anymore. But he still got it from the nerd side of things. But he was 2 weeks too late. He could have had her wearing those glasses on the sidelines of the Knicks game.
Oh,
for sure.
He's right.
That could have been.
That's true.
Yeah.
Could have been big.
I wonder if that was the plan, and somebody just
Contract negotiations.
Yeah,
What are you gonna
she
do?
could have been sitting there filming. It would have been such good.
Oh,
she's,
man.
she's right there for the hand of OG and all that. Would have been great promo. Zuckerberg.
Wait, hold on.
lock in.
I guess I missed. That's what they call this? The hand of OG?
Yeah, the game 4 tip in to win it. Yeah, call it the hand of
Don't
OG.
let Chris Vecchio hear that.
Yeah, I'm sure he already knows it. I'm sure he knows it.
I'm sure. Another one, rounding out things here. Procter & Gamble. They are going to revolutionize Tide Pods, it seems. They always, Procter & Gamble has had a long history of disrupting their own products before they let the market disrupt their products for them. So they are rolling out a new detergent called Tide Evo. They are calling it a tile, but really it's just a little piece of fabric. It's not actually that new. These little fabric detergent patches have existed with companies for a little while, but it's supposed to be better for cold water. Tide Pods obviously sold very well, so they feel that this is the next evolution. And let me tell you, I will be buying these because my Tide Pods sometimes don't dissolve all the way in cold water, and it's frustrating. So they have addressed my concern. Good old Procter & Gamble, love them.
I literally just had this discussion the other day. I was sitting over the laundry thing. What do we call it? The cylinder, filling up with water. Hot water instantly dissolves. Cold water, I was watching it fill up. I'm like, this is crazy. So I reached my hand in there and broke it up manually. I'm like, this is not how these things should work, right?
You're right.
But yes, I will also be a purchaser of these new devices.
Yep, they dissolve real nice and easy. I don't know, should be a cool thing. I'm a big Tide Pods user myself, though I do need the free and gentle variety. I'm a sensitive skinned fella. I'll break out.
I mean, yeah, P&G was always known as the company with billion-dollar brands, honestly, and there's just so many different things that they make. There's a question from the chat. Is Gus's blonde hair dyed, or is it the red mustache?
Neither are dyed. I get this question often. This is all natural. If I could dye them, I would dye them to match, not the other way. I think it's strange that these things don't match each other. But no, this is just the way it goes. I don't know what's Scottish hair, Irish face, something like that. I don't know what's happening in the gene pool here.
Irish.
This is how it comes in.
Nice, yeah.
I have a friend that has brown hair and an orange beard. And I'm like, how is this possible?
You got to introduce me to this guy. We got a lot.
I think my parents are lying to me. That's But yeah, thanks, Gus. Appreciate it. I think Meta's interesting. All these are interesting. P&G certainly in
P&G
play
sounds
here.
like a good put sale. I've been looking for names like this, honestly, like consumer staple names like this. I haven't done in a while.
Yeah.
And I would throw two more quick things into the ether as well here, not necessarily market movers, but just things I'm excited about. McDonald's bringing back the fried apple pie after 34 years, original 1992 fried apple pie, and Applebee's bringing back the Dollarita, both for a limited time in July. So
nice.
get at those.
Dollarita.
Yeah.
Well, when McDonald's brings back the Salisbury steak, I'll be all over that. I don't know why. I'm a psychopath, apparently. Yeah, I love it.
That's a McRib caliber psychopath take.
Yeah.
Salisbury steak.
Indeed. Well, thanks, Gus. Appreciate your contribution, as always. But yeah, handful of products to take a look at. You got Wendy's, you got Procter & Gamble, you got Meta. Lots going on here. But thanks for tuning in. We'll be back in about 90 seconds for a look at Micron with an options math check. You're watching Tasty Live.
thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Micron reports quarterly earnings after the close today, and the market is expecting fireworks. The stock just dropped 10% yesterday in a global chip rout, so the pre-earnings run-up already unwound. Here's what that means for the trade. The options chain is pricing in about a 130-point move this week. That's 13% in either direction, the widest implied move in 2 years. Looking at the last 2 years of data, we got some interesting takeaways. 5 of the last 8 quarters, the actual move stayed inside the implied move. Buying the straddle lost money 5 of 8 times, averaging a loss of about 22%. The premium seller has had the edge historically for Micron earnings. However, the last few times it broke out hard. Down 16% in December of 2024 and up 14.5% in September of 2024. So the real question is whether Micron beats or not. It's really about what the market's going to take in when it comes down to the actual move. They likely will beat the earnings announcement in terms of earnings per share and revenue as they have the last 12 quarters in a row. With IV jacked, are you the premium seller collecting rich premium on a name that usually stays contained, or do you respect that fat tail risk, especially when the drop yesterday may have already started the move? Let's see what the options market is telling us in this edition of the Options Math Check. So Jermal, I don't know how you feel about this, but market's kind of ominously up today. You still have a huge move implied for Micron. We're up about 40 points pre-market, sitting at 1090. And, we got call skew, we got huge IV, and 100% IV across the board all the way through October of this year.
Well, first of all, shout out to our team with those graphics. It's great stuff. If we could pull that one up again that showed the implied moves versus the actual moves, this is interesting because when I looked at that, I really haven't seen that data kind of all together once in a while, but that's actually something we used to do a lot at a prop firm. We would look at the average move over the last 4 quarters, and then the average implied move over the last 4 quarters, and kind of come up with an idea. And then they also had a system where you could kind of plug in and get an idea of where a vol crush might come into, and is this a good idea to buy or a good idea to sell? And you know what's interesting? As you were talking, I started thinking maybe this is actually one where it is probably worth selling, because I don't think it's going to explode to the upside. In this case, at least I don't feel. Yeah, thank you. That's kind of. I mean, when you look at it, look what stands out. The most recent one, 12% on the actual move. The rest of them were kind of small, right? Just looking at actuals, the implieds. I mean, they've been fairly big each time. I mean, at least more than 5% expected, right? So that's standard. It's just the implied moves. And last time obviously made a huge move, double what was expected. So I guess I got to think that maybe this is probably worth selling. This is probably one of those situations where there's a near-term bias, I would say, because again, we just had a 12% move last time. Are we going to get another one of those? And this is already pricing 13%. Maybe this is one of those times I never like selling earnings, but maybe this is one of those times I do, and maybe it's just an iron condor. It's not like I'm going to go in there slinging a strangle or anything like that in $1,000 name, but maybe this is one of those, times where it's worth going outside that expected move and maybe possibly selling something, because I don't know. I'm not sure if I believe this is one of those. First of all, I think it's probably too expensive for my typical calendar call, 2-day to 8-day play. I don't know if that's going to be feasible. So maybe this is one where I actually sell for a change, but defined risk.
Yeah, I totally agree with you. I think that's kind of where I'm leaning to, especially when you look at the implied move for this week. It's like 140 points, 130 points. But then you look at July and you've got another 100 points of implied move, so 240 points. So you could just sell an expected move July iron condor, probably collect 40% of the width of the iron condor, and still cover another 100 points beyond the implied move this week. And I think when you consider the fact that 5 of the last 8 were inside the move, that's likely because you had such a high implied move to begin with. So one of the things that I'm most afraid of when it comes to earnings announcements is when you have like a 3% implied move or a 4% implied move, because a 2 standard deviation move in that case is a 6% move or an 8% move respectively. So we see that every day.
Yeah.
If you have a 10% or 15% implied move like you do in Micron, for you to have a 2 standard deviation move, you really have to have a 20% move or a 30% move in the actual stock price. And that's a big move. Like it's more rare for you to see a massive chunk come out of Micron to the downside or be infused to the upside. So when it comes to selling premium, I'm much more afraid of earnings that have a 3 or 4% implied move compared to something that has this 10, 15% implied move, because it's just harder for the stock to actually make a move and beat you. But still, defined risk, I think, is obviously where we're going to go. It's $1,000 stock. I don't like selling strangles in earnings announcements anyways, just because you have that gap risk. Like you can have a 3-4 standard deviation move where Micron moves 300 points. It's hard to imagine, but it can happen. And I don't want to be trapped in an undefined risk position there. I do think I want to lean towards that expected move iron condor for Micron, like maybe at 800,
That's literally what I'm
780.
looking at. Yep. I'm probably going to go 20 wide as well.
Yeah, I think 20 wide, and then
You can go up to 1,300 and change. Yeah.
yeah, 1,300, 1,320, 800, 780, collect $700, risking 1,200. So like I said, you're picking up, almost 40% of the width there. And then in the near term, just looking at these calendars, like the expected move is up to, let's call it 1,200, maybe something like an 1,150, short 2-day, long 6-day. Like what is it trading for right now pre-market? I think if it's under $1,000,
I don't think it is. I think I looked yesterday. It's stupid.
it's not. It's $1,800.
And so actually, so yesterday, while I was still thinking about up, move, big, whatever, I did do a butterfly. I did the 12. You mentioned 1,200. I did the 1,200, 1,250, 1,300 butterfly for I think like 3 and change or something like that. I don't remember. It's fairly cheap considering it's 50 point wide.
Yeah.
But I've fallen in love with this idea of going out to July now and selling that wide iron condor, man. I mean, you can get pretty wide on that thing.
Yeah.
Yeah, I did it for 335 for that butterfly yesterday.
Yeah, I think that's what I was trying to do is like set up a neutral iron condor in July, but then do something in the near term, kind of inside up. So I think I'm going to just follow you in that sense. So my assumption is on the open, I can probably get into this 1150, 1200, 1250 butterfly and do that for like $3. I think that makes a lot of sense. That you have a 100-point range between your longs here at the expected move if you do get a move to the upside. But if you get a move up to 1100, 1125, 1150, like this is still going to likely be a winning trade on the butterfly.
Yeah.
And then you still make money on that iron condor if you get that inside move. So that's probably where I'll lean. A neutral iron condor. Jermal and I will likely both do that. And then kind of playing that inside up bias here with a 2-day cycle butterfly just because it's $1,000 stock. If this was a cheaper stock, I would have gone Iron Condor in July and then like 1 or 2 calendar spreads to the upside.
Yep.
But it's just too expensive with the expensive name here.
Yep. Yeah, not expensive.
Cool. After the close today, Micron will report these earnings. So let us know what you think in the chat, in the YouTube channel. We'll see if we have any other Micron earnings trades. I'm sure we will. But we're going to take a quick 90-second break. We're going to be back with Signal versus Noise. Chris Vecchio on the other side of it. You're watching Tasty Live.
Do 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 do.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
All right, so I've got some good news and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Jermal. We just talked about Micron, did a little analysis of the options, implied volatility. We're likely leaning into maybe an iron condor there with a smattering of a butterfly. But Micron isn't the only product here that has moved over the last couple months. AMD has gone from 200 up to 520-ish. And we've got some interesting options activity here. And on this edition of Signal versus Noise, we're going to take a look with our very own Chris Vecchio. Chris, how you doing?
I'm doing better than gold is this morning, that's for sure. That's about all I can say. It's pretty bad out there. But we're focused on Micron today. It's the semiconductors and the spotlight because, of course, yesterday was a pretty big sell-off after the news out of Korea following SK Hynix's plans to change their production in the future towards commodity DRAM. And I see this SK Hynix desire to go for U.S. IPO as well here overnight, which brings up, as I put in the morning note, the George Soros theory of reflexivity. High prices attract more capital increases supply, more supply brings down prices. So perhaps we're going to see that play out in real time. But we're talking about AMD today. We spent a lot of time talking about Micron recently. There's been some interesting activity on the options tape. And so, Jermal, as we usually ask here on Signal versus Noise, what's real and what's just speculation? Yesterday afternoon, AMD was making fresh all-time highs, touching a little bit over 560 here. In a 9-minute window, right as the stock was touching those all-time highs, two put buyers stepped in a fairly reasonable size. Same strike, $540. One expires in 2 days, $13.6 million in put premium. The other expires in September, $4.3 million. The usual disclaimer, we don't know the rest of their book. They could be long AMD here and they're hedging off the rest of their position, but these are fairly sizable prints to go across the tape. So when we take a look at what's going on here, across the tape, by Tuesday morning, we're talking about another 1.3 million in puts hitting the July 497.5. So you have about $19 million in put premium spent at the Monday highs into Tuesday's session. I'm not sure that's really a guess. That doesn't seem like speculation to me. It definitely feels like a signal of some sorts. And I put that in the constellation, Jermal, of the news of WDC, Western Digital, the parent company of SanDisk, having spun them out last February, abandoning their entirety of their position in a private sale earlier this week. Not bad gains for the work that they put in over the past 60 months. I think like 5,700% during that window. I digress, though. We've seen a stock in AMD go from about $133 to over $500 in 12 months. So it's no longer is the story good, right? Are we going to see another double, triple, 5x from here? The odds of that are probably low. It's how much of this story is already priced into the current share prices. So we know it's very good right now. There's a lot of fundamental data out there. There's a lot of news flow and a lot of money moving around. OpenAI has recently committed to an additional 6 gigawatts of AMD GPUs. Meta has committed another 6. Lisa Su, the CEO, says that each gigawatt is worth double-digit billions. So AMD, as the number 2 chip company in the world, clearly has a fantastic narrative going on around it right now. But the valuations here are perhaps one of the reasons why, when we see this cost of capital going up, 2-year rates increasing, traders are starting to get a little warm under the collar. AMD is not looking like a Micron, where it has something like a 50 trailing PE and a 10 forward PE. AMD's looking at a 181 right now, 181 trailing PE, and its forward PE is checking in at 39.06. That's pretty steep, and in fact, actually, its PE right now is 170.62 with a forward PE of 39. So this isn't your this isn't your Micron. It's a lot more stretched than some of its competitors. Right now, the problem for the stock is it has everything priced in. It's got 100 IVR. Its volatility is through the absolute roof. So if we get a weak Micron print today, you have to imagine that there's going to be a big knock-on effect. And I think that's the signal within this print. You're not buying puts that expire in 2 days at this kind of size unless you're trying to protect an existing position, Jermal. And if Micron fails tonight to impress, and they can't tell us that scarcity exists and they retain their pricing power, the entire sector is going to get whacked again, given the recent news flow. So I'm looking at the tape here, and I see legitimate noise here. There's signal within the recent options flow around AMD.
Yeah, I think it's signal in that, you're seeing some put buys in a very expensive name, but I think it's somewhat noise in a way as far as the size, right? Like, it's not like, for me, the level set now has been the huge Intel print that you saw a couple of weeks ago, 240 million.
Crazy.
If those are the ones that are the signals, dude, I think those are big signals. So I think there's somewhat signal to this in that they're making these trades further in their near term, but in the grand scheme of things, a little bit noise.
I love it. Well, thanks, Chris. We will we'll ponder this. We'll see if we can get a little. Actually, I like the hedge, like throwing on a downside hedge in AMD to play for Micron without the IV. I think that makes a lot of sense. But yeah, appreciate you, Chris. We will see you later on today. And I can't get the hand of OG out of my head. But
hand of OG.
We'll have to think about that too. Yeah. But yeah, E-mini's kind of selling off here, down only up 13. NASDAQ up 86. Down the Russell, kind of chopping around. Bitcoin flat, ETH flat. Yeah, I guess the story here is crude oil selling off 3.5%. Gold and silver, gold down 3.5%, silver down 5%. Hate to see that because I have a year-long position in silver, apparently, with 100 shares in a covered call now.
Oh, you got your 100 shares.
I got 100 shares, yeah.
87, right?
Brand shiny new 100 shares.
Yeah.
So I'm going to have to make some adjustments there. But yeah, we got a jam-packed day for you. If you want to join us on the YouTube channel, we're streaming live there. Just throwing your trade ideas and questions along the right-hand side chat. Let us know what you think of Micron earnings. We've got plenty of time for some trade ideas there. But yeah, I think we're focused on precious metals. We're focused on energy, and we'll be taking a look at some tech stocks, namely Micron and AMD, the rest of the day. But yeah, what else you got your eye on today?
Two things actually. One, I mentioned it a little while ago while we were waiting around in the green room here, but everybody's talked about DRAM, right? More recently, the ticker DRAM, which is it's like a memory ETF. Well, apparently they're introducing a 2 times DRAM, as if you didn't have enough exposure to tech names. There's going to be a 2 times DRAM coming, I think, RAM. I think it might start trading today, either today or tomorrow. I'm not exactly sure. I just saw it a little while ago. And then this is a ways off, but I retweeted this this morning when I saw it. SK Hynix is going to have a U.S. listing soon. So, that's the Korean. That's a stock that trades on the Korean stock market. We don't have access to it here, but now they're going to make an ADR for it. So there's just more and more exposure coming to the semiconductor market. SK Hynix is one that you've probably heard a lot about, especially when you're talking about overnight trading in Korea and all that. It's been one of those names. You probably heard about what happened in the Korean stock market like a day or 2 ago. I think it was 2 days ago, which led to us kind of selling off. So it's a really big name, and now they're going to get a U.S. thing, but it's going to be July 10th, so it's a ways off. But that's something that people are going to be talking about a lot really soon.
Yeah, I think with all these new listings, I mean, the fear initially with SpaceX was like there could be this liquidity drain on a lot of other products. And we talked about this yesterday. It just seems like you have these new listings without any kind of substantial foundation. Really, it's just like these products are coming out for speculation more than anything else. So, yeah. Speaking of SpaceX, we've got down 4 points pre-market, still chopping around that 150 level. Tim Knight was talking about this yesterday, how he doesn't want to see it go down below 150. I think you could see some panic selling if that's the case, but this thing's going to be super volatile. Don't get us wrong. I mean, the implied volatility being near 100%, over 100% in some cycles tells you everything you need to know, especially when you look further out in time, like the end of this year. You've got a 65-point implied move based on current implied volatility, which is about half of the stock price, just under half of the stock price. So I wouldn't be surprised to see this thing fly around. We actually did get some new positions on in there. I bought an upside butterfly in July, the 160, 180, 200 yesterday. That was $3 and change, which felt just too cheap for an upside play, considering it's 20 points wide, risking 300 to make 1,700 if you pin it perfectly. We're not looking to do that, but even if you do get a move from 150 to 170, 180, that's going to be a $300-400 winner easy. And then got into a long-term Super Bowl after chatting with Gus about getting into some of these longer-term leaps. And, we don't typically do this. We don't always do stuff like this, but if you're trying to buy premium and if you're trying to buy a call specifically with low implied volatility, naturally you're going to be able to do that with leap options. You can see 70% IV, even the high 60s if you go further out in time relative to the near term IV, which is 50% higher. And you can see there's plenty of implied volatility premium. And if you're trying to buy premium, it's really tough to do if you're doing it in near-term cycles. You get what you pay for, is what I like to say when it comes down to call option premium. But I expect this to have the same kind of behavior as like Bitcoin or the volatility products, where if you do get a big up move, you're going to see an increase in implied volatility. You're going to see an increase in the stock price, of course, and that just helps the call option explode. So I sold a put to finance it. So I sold the 125 and bought the 300 for like a $300 credit.
Nice.
And that's in a 560-day cycle. So long term, if we get up to 200, 250, this trade will be golden.
I like that.
Thank you.
Might have to consider that myself.
Yeah. We do have a special guest with us coming on the line. We got Liz. Liz, good morning.
Good morning, guys. How you doing today?
Great. How are you?
Very good.
Today seems like a more calm day than I saw yesterday. All is right with the world. I mean, we are giving up a little bit of the gains from this morning, but we're about to open unchanged, is my guess. But it's a little bit calmer than it felt yesterday, isn't it?
It feels like it. Yeah.
Well, yeah, seemingly on the surface, but there are some interesting things happening. We've been talking about this gold move, the silver move, and the oil move to the downside. I know you like metals. I literally, as Mike was talking, I was like, you know what? I'm going to buy some gold. I just did an MGC contract. And I don't necessarily buy outright futures too often, but I did.
This is an old reference, but that's gold, Jerry, because that is that's a Seinfeld reference for all of you old folks out there. But I did the same thing this morning. I sold a put spread in GC.
Wait, what's Seinfeld?
Well played, Mikey. Well played.
So I was talking to someone about music, and I was like, yeah, Blink-182 is playing. They're like, who's Blink-182? And I was like, I can't talk to you anymore. I can't do this. But no, yeah, it's been a crazy move in gold. What a reversal after everyone was clamoring to get their hands on gold, and now everyone's like, ooh, can't touch that thing with a 10-foot pole.
No, I like this, though. I really do like this. So looking at gold right now, trading options gives you the opportunity to do things. I this morning I did the 3,800, 3,780 put spread in GC because you're still, I mean, if you're looking at this, I did it in the 34-day cycle, just before it turns to the next future. I went to the 3,800 because I love round numbers, and I did it 20 points wide. So 3,800, 3,780.
I like it.
Yeah. No. Yeah. There you go.
$500.
So I mean, it's a good return on capital when you look at this. You're getting $4 for almost $5 and putting up. Now it's a little confusing because in the futures you're only putting up $837 to do it due to the span margining. But the risk in this trade, the real risk, is the distance between. So you have $1,500 in risk. But the span margining gives you a lot of, and it gives you a little bit of room to be wrong.
Yeah. I like this. I'm going to follow you in this.
I'm going to do upside only just because I just bought this future. So I'm going to go.
Oh, you bought a GC? Oh, did you buy a baby?
I bought an MGC contract. So I'm just going to sell a call spread.
Yeah.
There you go.
Yeah, we've done that before with like micro crude, where you buy a micro crude and you sell a call spread in the main crude contract. So yeah, I like that too. Little covered call feel.
Mm-hmm.
And you know what? I think I'm becoming worse and worse as I get older, but I really do like being able to trade before the bell rings. So I love futures options contracts, and I love the SPX.
Spoken like a true person who's in bed at 6:00 p.m.
I get up so early to work out, and I've only had futures options contracts up until this point, and now they gave me SPX. I cannot stop myself in the morning.
I didn't know this. Wait, what's the workout? What'd you do this morning? Or is it the same thing every morning? Do you got certain body groups you hit? What's up?
Oh, I've been working out every morning at 5 a.m. since I went to college. Every other day I do something different. So it'll be like cardio one day and then lifting the next. But I have a tonal. This segment is sponsored by Tonal. Do you guys have one of these?
No.
Is that the thing that's just on the wall?
It's on the wall, but it's weights, so it adjusts to my body. But now you got to keep in mind, I also have a 6'7" son who can lift, and he went under my profile one time, and I was like pinned underneath the bar because he can lift more than me.
I love it.
Yes.
Yeah, those are. I actually like those. Those are super efficient. They kind of remind me of like a Bowflex on steroids.
It is. And they're great for apartments. Mike, I'm not trying to make you get one, but they're good for small spaces because you get a full gym lift, all the weights. Like I think it's up to like 500 pounds, something crazy.
Damn. Yeah. Love it.
That's not the one with the mirror, right? That's different, right?
Is it?
No. It's not the mirror.
Got it.
The mirror was freaky.
That's the one with LeBron James.
Was it?
Commercial with LeBron James.
Yes, total is
that's
LeBron
right.
James.
That's
Total's
right,
LeBron
that's
James.
right,
Okay.
That's right.
Got it.
Okay, and I did kind of glance at the chat. I do want to address this if that's okay.
Yeah.
What did I do in SPX this morning? And I will give you the exact strikes that I did.
Cool.
So I scalped in and out of a couple put spreads already, but the one that I'm left with right now, and this is just, it's kind of to feel the market out sometimes. It's the 0 day.
Yep.
I'm in the 73 put spreads, 73.15. 73.05, so pretty far down. 73.15, not 50. Yeah, so 73.15, 73.05, so just $10 wide, and that is unchanged right now. But I did scalp in and out of a couple more aggressive ones that were more at the monies this morning. But then I'll close them. Like, it's fun. I'm an absolute junkie.
Yeah, I mean, these markets are flying around. We have global trading hours with SPX now, so you can do this pre-market, post-market stuff. And I think this is just the beginning. I think the pattern day trading rule going away kind of opened the door for a lot of this extended trading hours to be brought to us. So I think SPX, equities, a lot of the big name tech stocks, you'll have pre-market trading, post-market trading very soon.
I mean, I really hope so, because it was funny because I'm so, I got the GC features on and I have SPX on. I wanted to sell aggressive puts in SpaceX this morning because I know you guys were talking about it. I want to start with the 2-day puts, but you can't do those. I can't do those until 8:30. I actually tried to press the button this morning, but I want to sell very aggressive. I'm going to sell 2-day puts in SpaceX until I get put the stock. So this is my go-to move if I do want the stock. I don't think it's going up, but go to the 2-day. I'm going to sell the 55s. The 155s. And I'm going to keep doing this, lather, rinse, repeat until I get put the stock. Then I'm going to sell aggressive calls against it in the Wheel of Fortune. That I don't know that SpaceX is going up, but I want to be in it. And I do like the premium associated with, $5 in 2 days.
Mm-hmm. So the Wheel of Fortune, is this like a more tight wheel where you're like selling at the money and then you're selling like at or within the expected move? So you're really just focusing on premium?
I'm going to get super aggressive with my premium in there. So I'm going to sell that aggressive put until I get put the stock. Hopefully I never do, but until I get put that stock. And once I get put that stock, I'm going to sell aggressive calls until they take it away from me. And I'm going to lather, rinse, repeat. Because if you look at that premium in SpaceX, now it is a lot. The buying power effect is 7,500. I get that. But in 2 days, you get 500. And then in 2 days, if I keep continuing selling the call and doing things like that, if you look at that return on capital, it's pretty good.
Oh yeah. It's wild. I mean, even $5 on a $150 stock for 2 days is what, 3%?
Yeah,
it's crazy.
So that's why I'm just trying to take advantage of where it is right now, because I don't know that premium's always going to be there. Maybe it is, maybe it isn't. Maybe he's going to fold Tesla into it. Maybe he won't. We'll see.
Yeah, I like it.
Yeah, I mean, I was thinking about this morning, and just like how. If you can remember back like 10 plus years ago and how people were talking about Tesla at the time, and it's like this company's a joke, and just all the negative sort of feelings about it. And I feel like this one is kind of dealing with the same thing. But I mean, he's got a proven track record of being efficient with companies. I think this has been more about, do you really want to buy it right now before there's a low that comes at 75 or something in the next couple of months before it eventually bounces and has some crazy move? I think that's really what we all have been kind of asking here underneath the surface, right? Like, what's the stock going to be doing? And nobody knows that answer. Really, nobody knows.
No, but Jermal, that's why I'm going to do it. That's why my strategy in this is going to be nimble and aggressive with the option premium, because when that's the case, I mean, if this is the case, I'm going to have about $10 to play with every 4 days, right? So because if I'm selling the puts and then selling the calls and bouncing back and forth, it gives me a good window, because I think you're right. I think it could go down to about 75. And if that's the case, I'll follow that wheel all the way down with the premium.
Yeah.
Well, I'm going to be poised to bounce when it is ready to pop.
Yeah.
Yeah. And even if it doesn't, you're still, like you said, you have 10 points just from the short put and then a short call if you assume you're getting like $5 and $5 on either side.
Yeah.
But that's just for 2 days. And then you look at like the 8-day, just looking at the difference between the 155 here and the 155 in the 8-day, you're going to pick up at least $200-$300 every time you roll as they open up these expirations. So yeah, I like it a lot. I like it.
It's and that's my go-to move. I get pretty aggressive if I don't mind. If something happens and I have to take the stock, I kind of like that. And it's very easy for me that it's non-thinking. I can open it up, sell the put. If I open it up one day and I put the stock, I immediately sell that aggressive call. So that's pretty non-thinking for me.
I like it.
What I'm seeing about you is you like doing near term because it makes you stay active versus like going out further out and kind of forgetting about a position. You'd like to be a lot more active.
I like to stay active. That's correct.
Yeah.
Well, yeah, I mean, and the nice thing about that is you get all that implied volatility value. Like you look at the 2-day reflecting an 11-point implied move. You look at the 23-day, 10 times more time, not 10 times more of an expected move, only 2.5 times more of an expected move. So you will always see this heightened IV in the near term, and that obviously benefits the premium seller. So I like it.
Absolutely. Absolutely.
Well, Liz and Jermal, we're going to take a quick 90-second break. We'll be back on the other side of it. We got, 10 minutes until the opening bell. So we'll see you then. You're watching Tasty Live.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal. E-minis up 8, NASDAQ up 60, the Dow down 100 points, the Russell up 2, Bitcoin kind of unchanged, down 450, ETH down 8 points. But the story of the day so far has been gold and silver and crude oil, for that matter. All of them are down around 3, 4, 5%. So it could be a wild day here with energy products tanking and the equities kind of chopping around. But I want to hear what Liz has to say. We have her on the line again. Liz, good morning yet again.
Like I said, you guys can't get rid of me. I do like the intro every time I come in. This is getting fun. I like it a lot.
Yeah, absolutely.
This morning, all eyes are going to be on Micron, but I was going to say you guys should order Wendy's for lunch today, considering that's spicy. The OG spicy chicken sandwiches for everybody.
Yeah.
What about that salad bar, Liz? What about it?
Oh, that was back in the day.
Right?
That's in the business.
Oh, jeez, so good. Yeah, apparently this thing is on the move. We had Gus on earlier talking about it, and I was just noticing it's up to $8.30 pre-market. Experiencing.
I'm kind of laughing about this because I am not trading Wendy's, but it is on the top movers list.
Oh, 100%. Well, it's crazy. He said that it was the second most talked about stock on Reddit, which is nuts.
Okay, so let me ask you this from that perspective on Reddit, right? So I do think that Reddit is a lot of people chatting about things that, and I'm paraphrasing here, but they want to maybe get rich quick. So a lot of times on Reddit, you're looking at lower priced products, right? Yeah. I'm sure SpaceX was a big topic on there, but everybody, when GME was there, or these low priced products or AMC or all those, when they became the meme stocks, it's almost Reddit gravitates towards low price, get rich quick stocks.
100%.
No, you're right. 100%. Yeah. I've never really been a fan of that. Really.
I get why people are looking at it, and I get why people are talking about it, because that price point allows a lot more people to play, for lack of a better term.
Yeah. I know, but then you got people who are going to call you up and ask you, hey, should I get into Wendy's right now? What do you think about it? And I'm like, oh my God.
If you think it's
standard answer, I say nothing. Whenever anybody asks me what they should do, I was like, hey, trading is like a snowflake. Everybody's got a personal opinion, whether you should get in it or not.
I like it. Yeah, I mean, we'll see.
Well, hold on. Trading is like a snowflake? No, we're not
Trading
just
is
going
like
to let
snowflake.
that.
It really is. It's almost
You
like
mean like
it's almost
like they're individuals, you're saying? Like
they're individual. It's almost like
Okay.
asking a very personal question. Don't you think? It's like asking a personal question because you don't know how much capital I have, what else I have, what I want to do, or what my attempt is when you ask, what should I get into? That's why I like it when you can just bring up a symbol. Like I watched you guys today. Amazing job, by the way. But I watched you all do something different if somebody talked about something. It's almost just like they're bringing the symbol to your attention and then Jermal's going to trade a call. Mike might be bearish. Like everybody can do their own thing with it. It's just you bring a trade to somebody and then they can make it their own.
Yeah, exactly. And it's funny because we were talking about things the other day and this idea of whether or not to like bounce the idea off of somebody else. But I think that's one of those things that like necessarily seasoned traders don't always really do that, especially when you've been around for a while. You have a way of a bias in the way of trading, and Mike has a way of bias in trading, and I have a different way, and we may all approach. That's the great thing about options and futures or whatever. Yep. You can combine them all together. I mean, I think we just all did something different in gold, right? Like even though there was similar ideas, similar long deltas, but we did it in different ways. And so, like you're right. Like it's interesting how that works.
Yes. And
That
when the
being
Gen
said,
Pop
I'm not
asked me
trading
if I should get into something, all they know how to do is buy the stock or sell the stock. So I was always like, nope, I don't. You can do your own thing.
Yeah.
What are you guys doing in Micron today? This is the hot topic.
Good question. We were discussing that earlier.
Yeah, I think it's setting up for obviously a huge implied move, 140 points on a $1,100 stock, up 40 points pre-market. But yeah, I think we're both leaning towards just a straight up iron condor in July. You still have heightened implied volatility, about 20 percentage points higher than August and September here. And as you go down the line, you see it drop off. So I think iron condor in July, and then something with a slightly upside bias in the 2-day. So we were looking at like an iron condor paired with a 50-point wide butterfly. And we would give up a little bit of credit with the iron condor, but 20-point wide iron condor right at the expected move. I think we were looking at 800 and 1,300 to the upside. You'd pick up, $800 for that iron condor, and then you can give up some for a little bit of a shot to the upside.
Yeah, you're financing the butterfly with the iron condor. It's not bad. I was actually hoping, I Googled this morning, and shame on me, I should have known this, what the percentage of Micron was in the S&Ps, just because, you'll get a little bit of movement there. And much to my chagrin, it was only like 1%, which, those bigger ones have been higher and higher and higher. I thought there could be some kind of, not arbitrage situation, but since the S&Ps are open later, now they're trading till 4, there's something you can do, but you got to wait until more of the heavyweights come in. Micron's only 1%, 1.83 of the S&P.
Yeah, I feel like the S&P is more flat relative to something like the NASDAQ. But I think Chris brought out a really good point. If you're trying to trade Micron with a proxy product, AMD could be that product. You still have heightened implied volatility in the near term in Micron, but not nearly AMD, but not nearly as much as Micron, of course, because Micron is the direct earnings report. But still, if you wanted to trade AMD to the upside or downside, if you think Micron's going to move, AMD is going to move with Micron. I'd be shocked if it didn't.
I'd be shocked if it didn't. Do you think Micron's going to save us? Is Micron going to save us all, this market?
I don't know.
History says probably not. It's been inside the move 5 of the last 8 quarters. So, and I don't know. I have a hard time believing it's just going to rocket ship to the upside. Especially this market feels a little weak.
Yeah.
And I feel like that, although we can't say it directly, it always feels like when you have a weak market, you have a harder time for these products to just break out to the upside.
And hey, we watched 2 this morning. What was it? CBRE and FedEx that had earnings, beat estimates, and they're down.
Yeah.
So it really doesn't necessarily matter what the numbers say. It matters what the market wants to do with
FedEx
it.
is bouncing back up though. It was below 300 pre-market. Yeah, now it's 307. Oh, this is good.
Where you have call calendars at?
Yeah, 340, 345. Okay. I did see it. That's part of the reason why I did it. Last earnings, I think, or the earnings before, it actually was down just like that after earnings, and then it rallied throughout the day.
Yeah.
I think if, the market rallies, we could get some help. But to your point, Liz, yes, they are down. FedEx is down. CBRS is down. The other thing I was just looking at, because I saw on Twitter, somebody said that Brent crude went into contango. And if you look at oil, and if you look at oil, it's actually not that far from doing that.
Wow.
Yeah. Yeah.
Wow.
Yeah. So I got a couple things for you guys. So that is interesting to me. Something to keep an eye on. The other thing, I'm going to make fun of the Kardashians right now, like I always do with my daughter. You guys, it's Amazon Prime Day. Amazon
Prime Day.
You guys. She hates when I do that.
It is Amazon Prime Day. Oh God, Jermal, they hate when we do a lot of stuff.
I know. This used to be a big trade, Amazon Prime Day, but now I don't know, not so much. They have 2 of them now, right? Like, isn't there one in the fall as well?
Yes, there is. There's 2 Amazon Prime Days, and you know what? I am going to take advantage of Amazon Prime Day, so I should be in this stock as well. But I think I am long Amazon already.
Well, I think we might have messed it up on a personal note because, like, realistically, sorry, opening bell.
There's the bell.
Opening bell, and we're spinning out of the turns.
Ooh, chopping around here. Nasdaq just ticked red. Popping around, big moves here. Nasdaq down 5, 10. Maybe selling off a little bit too. Maybe we see the equity market follow suit with the rest of the energy sector, at least just a little bit. But yeah, Nasdaq down 20 points. E-minis chopping up 4 points. So we'll see what happens. But kind of a weird, interesting open here.
I'm gonna sell the 50.
What do you guys think about Google joining the Dow Jones Industrial Average? Figured I'd give you the full name of it.
I think we're officially all getting older if Google is joining the Dow Jones Industrial Average. That's what I think.
Does that mean, and I really don't know this, and I'm going to ask Chris Vecchio later because I feel like he's the prime example for this. Does that mean it has to leave the other ones, or can it be in everything?
Leave what other one? No, there's multiple stuff that are in like.
It can just be. It
there's
can
things
just
in
be
the Dow.
in everything. So we are all proud. We are going to be all proud owners of Google, no matter what. Because
you can belong to multiple golf clubs. You know what I mean? Like,
damn.
True.
That's a good comparison.
Selling to put in SLV.
Yeah, I mean, I like this. I like the setup here for Google. If we're going to see the market feel a little weak here, and Google's up 1.4% and also off all-time highs, I kind of like the idea of a diagonal spread where the long option is in the earnings cycle or past the earnings cycle. That way you can buy the August cycle a little bit more rich in premium, but you hold on to that premium because it's in the earnings cycle. You can sell the July against it, get all of that extrinsic value, and then roll into the earnings cycle and pick up a lot more premium. If you look at the value of the 370 in July, it's trading for $4. The 370 in cycle 1 week later is trading for almost double that, $7, we'll call it. So I like this setup. $1,700 for a 20-point wide. You have no upside risk. You can make $400 or $500 on this thing if you get a rally up to 370. And then if not, you can always roll into the earnings cycle and pick up a lot more premium, reduce basis closer to $1,200, $1,300. So I think I'm going to throw this on.
I like that setup a lot. I actually like that you have recourse in the fact that if it comes off before earnings, great. But if it doesn't, you got that earnings premium that you can sell.
100%.
I'm pulling the mic here. I'm selling the in the money put and MCL and the July. Selling the 70 strike put. I also sold a 55 put in SLV. So a little put selling day going on.
You're okay. Now we just talked about Brent crude in the curve, and so you guys are still permables and oil.
I'm just playing it for a bounce, honestly. I don't even know if I'm a permable. I just feel like this has been a
cycle
swift
you're selling
fall.
your put in?
I'm selling it in the July, 22 days, July 16th.
Okay.
Yeah, I think it's really interesting that we are getting this completely flat curve now. I think this hurts USO the most because USO was a product that just ripped higher because we were in such a steep backwardation, went from 70 up to 150, and now you're seeing it crumble because a lack of backwardation is not good for something like USO because USO is a fund that is made up of futures products where they have to continuously roll. So if they don't have the benefit of rolling into a backwardated curve where it kind of keeps that price propped up, now you could see this thing retreat back to the 70s.
That's what they call the good old-fashioned drag. Because if you're rolling into the other features, it's going to drag that price down. That's what we used to see in like UNG, which I haven't looked at in years.
Yeah, I hate that. Oh my God, I hate that name.
I know. We had a viewer a long time ago who put UNG in his. He's like, I've got so much UNG in my IRA. I was like, oh my God, no, that's got to drag. This is not a long-term product.
I hate getting those damn I used to hate getting those damn K1s from UNG. It's like, oh, these things are so annoying. I hate those.
Hey, look at this. Something happened. Something just broke with the damn open because booze are up 25.
Right. Yeah.
Look at that.
Really? It's Wendy's. It's what it is.
It's Wendy's, yeah.
It's Wendy's.
My favorite part about the platform is we have the logos, so you can see Wendy's little face here. on the left side.
That's his daughter.
Dave's daughter, yeah.
Yeah.
Dave's daughter.
Love it. But yeah, huge move here. And I mean, as much as we can't say, we got to buy this stock here, but I think, if everyone's talking about it, everyone's trying to squeeze this thing, maybe it's a little shot trade.
Maybe it's a self-fulfilling prophecy. I agree with you. If it's a short squeeze, it's a self-fulfilling prophecy, at least in the short term, right?
Yeah.
Ooh, gold's bouncing.
Yeah, we'll see where these options open up. It doesn't look like they're open yet, but seeing a lot of zero bids here. So we got to be careful with these options if we're trading them. But yeah, we will see.
So what I was going to say earlier, you messed up for Prime Day. What you're supposed to do for Prime Day, what I was told a long time ago, is that you're supposed to put the items that you want the day before it starts. You're supposed to put any items you're interested in the cart and then see on Prime Day if there's a discount. That's what you're supposed to do.
Or if they increase the price and then discount it to the price that was already at.
Exactly. See, that's what you're saying. It's exactly what you're doing. Yes.
Jermal, I'm pretty sure my daughter thinks every day is Prime Day because if you open up my account, there's always things in the cart. So
yeah, no, I know how that goes. I know.
Or like the subtle wish list. You're like, oh,
yes,
maybe we could have this.
Subtle wish list. Yeah.
I love it. But yeah, Amazon, interestingly enough, still sitting at like 240, which is crazy because a year ago, 240 would have been a home run if you're trading it down here, but it's well off the highs of almost 280 here. So yeah, maybe you get some room to run to the upside there.
Wendy's is halted.
Wendy's is halted. I was just thinking. I was just looking at that as Mike was talking.
So I heard
we can't have this happen again.
Yeah, it's frozen. Yeah, 859,
I did not.
859 halted.
Yeah, these options are not tradable, at least right now.
By the way, I got that from the chat. Speaking of anybody in the chat, please like and subscribe, please, to Tasty Live videos and everything that you see.
Yeah. You know what? Let's look at this Micron trade. So the Iron Condor up 20 points. This 1300, 1320, 800, 780. Huge bid-ask spread here with these markets. I wonder if it's the put side chopping around. Yeah, we'll see. I'm gonna throw this in at $7 and see if we get filled here. I think that's a fair price. Just given
that is a wide bid ask spread, but the common sense has to kick in. It's $1,000 product, right? So you're not looking at.
What'd you do on the upside? What's your call spread?
1300, 1320.
All right, I'm with you.
Pretty good.
Yeah.
Oh, you guys are doing it together.
Oh yeah.
Which could be.
It sounds weird when you say it like that, But
that's so cute. I love when that happens.
Yeah, it could either be great or it could be terrible.
It's gonna be hard to get filled.
But yeah, I think the 1150, 1200, 1250 is the butterfly I'm going to go with, just because the short options are right at the expected move. So in case there's an inside up move at the expected move, the Iron Condor will still be 100 points out of the money. The butterfly will fill up pretty quickly here with only 1 day to go, starting tomorrow. And this thing is trading for what? $4 for a 50-point wide. So yeah, we'll do 420. Instantly filled. Hate it. 403.
I was so hoping Jermal was going to pay up a little bit more to carve the market.
No.
Yeah, 17-cent price improvement.
That's crazy.
That's not good. That means they handed it to me on a golden platter.
Yeah.
True that.
But yeah, we'll see if we get filled on the Iron Condor. I think that's going to be an important component of this trade. So 800, 780 put spread, 1300, 1320 call spread to finance a portion of that butterfly. But yeah, if we get an inside up move, that's going to be a nice trade with the Iron Condor likely compressing and that butterfly appreciating. But yeah, E-minis catching a bit here, up 30. NASDAQ up 135. Jermal and Liz, thank you for a fun morning. We're going to take a quick 90-second break. We've got a special guest on the other side. You're watching Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
do that.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this Cowboys horse, so I guess you got to hear his tale. In 87, I took it off. There was the market crash. In 92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Hello, everyone. Welcome back to the show. You're watching Tasty Live. Join us on the YouTube channel if you haven't already. We're streaming live there. You can throw in your trade ideas, questions, all on the right-hand side. Chat. We've got Micron earnings after the close today. Actually just ticked red. Down 6. Sitting at 1050. Huge implied move for earnings after the close today. North of 10%, which is always creation of maybe some fireworks. But E-minis and NASDAQ had a little bit of a rally here, but they are chopping around, seem to be selling off here. It feels like a day where we might turn red, but who knows? We do have a guest on the line, though. Mr. Justin Sacco, how you doing?
Doing great. Thank you all for having me.
Absolutely. Absolutely. So we were chatting just briefly pre-market. We were talking about some strategies. We hear that you love the wheel strategy. Why is that?
Yeah, I have a number of positions that typically I'm holding long-term, but I like to be generating income while I'm also in the market instead of just kind of seeing, green numbers on the screen that actually isn't cash hitting my account. So I'm a big fan of the whale strategy. I talk about that a lot on the channel. And I think a lot of the viewers, once they kind of understand how it works, are also interested in kind of running that strategy themselves.
Yeah.
Nice. Are there any specific names that you like to do? Is it consumer staples? Is there any certain area that you like to do it in? Or is there any things that you'll stay away from? What's kind of your typical, when you're looking for these when you're looking to employ these strategies, what kind of names are you looking to do them in?
Yeah, so usually I'm looking for names that are typically, trending upwards, but have some kind of volatility with them because I think it gives you good entries and then also kind of good profitability. So right now, mainly the 4 primary quantum names are usually like my top picks. So we've got Rigetti, IonQ, D-Wave, and then Quantum Computing Inc. I've kind of stepped away from that one. But yeah, IonQ has been a really, my bread and butter, probably since middle of last year. And then I also look at names like Rocket Lab. That stock has also treated me pretty well, running this strategy on. And yeah, so I've got a number of positions open on all 4 of those names.
Justin likes names with high volatility. That's what I'm noticing.
Yeah. It seems like under $100, high implied volatility. You're collecting a lot of premium, 2-sided action. That's the important part with that strategy is like if you see a chart that's up and down and up and down, that's a great chart for something like a wheel strategy because you're likely going to get put the stock at some point. You're going to pick up a lot of premium along the way. And then if and when you do get that up move, you're going to realize that profitability not only on the shares, but also the premium you're collecting. So we were just talking to Liz, one of our co-hosts here, and she was looking at some really tight wheels on Micron, or not Micron, sorry, SpaceX, because you can get so much premium relative to the price of the stock here, just like even the near-term stuff. Are you looking at monthlies? Are you looking at weeklies? What's your general feel?
Yeah, so typically 30 days out is usually my expiration. And I like to be in like a 0.35 delta and at least 4% return on the premium.
Cool.
But obviously, the better the premium, the more attractive it looks to me. And SpaceX is a name. I haven't started digging through their options chain yet, but it's also on my radar.
Yeah, and like even here, if you did this for 23 days, close enough to the 30-day, 35 delta, picking up $750, which is 7% of the stock price. So huge premium there. And she was looking at like selling even the at the money and then getting a higher probability of taking the stock just so that you can get into this call skew premium. Is that something you look at too, call skew versus put skew? Or is it really just products that have high IV, products you like being in? It seems like you're more quantum leaning.
Yeah, I think I kind of lean towards names that companies I wouldn't mind owning at the end of the day because I know that there is going to be assignments that happen. So I kind of pick a cost basis that I'm comfortable with. So maybe IonQ is $45, maybe Rocket Lab $75 to $80, and if I get assigned on those, then that's totally fine with me. So I'm usually looking for names that I'm just comfortable owning if the assignments do happen.
Yeah, that leads to the question I had. A great friend of mine once said the idea, and I love the way he described this idea. Basically, when you're selling that put, right? Essentially, it's there's a couple of things that could happen. He's explaining it to newer investors, and he was saying, basically, the best, if you get assigned at a strike where you want to get long stock, right? And if you don't, the worst thing that happens is like you made money because it moves away from your strike. So leads me to my question: which kind of person are you? Do you really want to take stock? It sounds like, I don't want to put words in your mouth, but you love the idea of getting stock. So I feel like some people are scared of that idea of actually taking stock at that price, and some people are like, oh man, I wanted to get assigned. Like, which kind of person are you?
Yeah, it depends. For like IonQ and Rocket Lab, I try to not get assigned. I'd rather just collect the premiums, move on, and just continue running the strategy. If the assignment happens, for IonQ, for example, that stock I own, sold it for a nice profit, and now I'm looking for assignments again because I truly want to own the stock. So it's a little bit of both, I would say.
It makes sense. And, sometimes the premium or the buying power requirement relative to owning the stock is pretty similar. Sometimes it's dramatically different. Where you have the short put on, you have a lot more leverage by way of lack of buying power. So I think in those cases, I would probably be leaning towards keeping the put on just for capital efficiency. But yeah, sometimes you take the stock and then if you have a super aggressive call skew, I'd rather have the stock in that case because then I can sell that call much higher than the current market price and get that static delta profitability all the way up if it does end up moving that way. But yeah, a super conservative strategy, especially for people just dipping their toes in the options world. You just have the key is the sizing. Like to your point, you have to be willing to take that stock. You have to do it in a way where you can accept those 100 shares. Because that's the only way it works. The way it works is if you can withstand all the variance and you're always going to give yourself a better entry point. You're going to continue to reduce cost basis with that sale of the short call with no upside risk once you have the shares. Super conservative strategy.
So along those lines, Justin, you like Rocket Lab, and we have SpaceX up here. Is this one that's going to eventually be in your wheelhouse or what?
Yeah, I think so. I owned it before, like I said, a cost basis of around $73.50. Ended up selling it on this initial run-up. Was expecting some kind of pullback after the SpaceX IPO, which is typically what we're seeing. So I'm actually looking for an entry in that name probably within the next couple of days or a week.
In SpaceX,
just kind of watching how the stock trades.
You're saying in SpaceX, that is, in the next couple of weeks?
For Rocket Lab would be in the next couple weeks, and SpaceX, I'm going to start looking into that one also.
Gotcha. Okay.
Sweet. Yeah. Love it. Yeah, a lot of these products can and will move together as they're related for sure. But yeah, good stuff. The wheel strategy, selling a put to take the shares, and then once you get the shares, selling a call against it to continue that premium collection. It's a high probability trade, and it's kind of obviously an intelligent way to acquire shares of stock instead of just buying it outright. You can make money in a neutral market or even a down market for that case. So anytime you can allow yourself to do that, you're in a good spot. Cool. Well, thank you very much. Appreciate your time, and we'll see you later. Hopefully you get into that SpaceX premium. It seems pretty juicy.
Yeah.
Yeah. Thank you both.
Absolutely. E-minis, NASDAQ, chopping around. E-minis up 4, NASDAQ down 50, Bitcoin selling off a little bit, down 1,100. Gold and silver continuing their trudge to the downside. Gold down 3%, silver down 5%. I'm going to see what I can do here with those positions. I wasn't filled on the gold short put spread just yet. We'll see if we get filled there. But yeah, lots of movement in this market here.
I got filled on the Micron, by the way.
Okay.
I stepped down to 660, I think.
Okay. Yeah, I've got it still at $7. I'll probably have to do the same thing since I'm in that butterfly already. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
Tasty Trade has crypto, and you can trade with Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while, take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In 87, I took it off. There was the market crash. In 92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal, and it's been an active morning so far. We've been placing some trades to the Tasty Trade follow page. Plenty of them, to be exact. A couple of Micron earnings trades. Got a butterfly on in there. Just got filled on the Iron Condor as kind of a combo trade here, and bought the dip. I guess you can call it a dip in Google, being included into the Dow Jones. I think that's a potentially bullish sentiment, but I like the diagonal spread pre-earnings and post-earnings for the long option.
Yeah, I did a super bull in there the other day. I'm kind of glad. I mean, this was, when it was down, so.
Yeah. We do have E live from the CBOE floor. Love to bring him in, see what's going on over there. E, how you doing?
What's going on, guys? How are we doing today? I know it's been a pretty volatile first 20 minutes of market open, I gotta say.
Yeah.
But morning, Jamal. Morning, Mike. How we doing today?
Great.
Thriving.
What's going on?
Yeah.
Yeah, it's been
What's going
pretty.
on, guys? Yeah,
it's been
no.
pretty wild. E-mini's up 30 now. Nasdaq up 100, catching a bid here. Definitely a bigger chop than implied volatility in SPX.
Yeah, no, it's been pretty wide. And I think the star of the show for my portfolio right now, I actually have to manage my risk on this one, but man, oil keeps slipping lower and lower. So I'm curious to see where the volatility is going to land on that end of things as well. So that's been a little top of mind as well.
Yeah, oil going into contango at one point today, which is not something I had on my bingo card. But yeah, all of these expirations are flat now in terms of the contracts. And I think this is a lesson that should be learned going forward. When you have global tension directly related to crude oil, you're going to see a steep backwardation. You're going to see the near-term contracts just spike, and you're going to see the back months kind of lightly ignore it. I mean, the back months got as high as 75, 76 back here, while these near-term cycles got as high as 115. So I think when you consider this and how it relates to volatility futures, it's a telltale sign of like market's being calm in this specific market and not. Like the fact that we're flat now in crude oil futures in terms of the contango versus backwardation tells me that there's not much priced in right now, basically nothing priced in right now in terms of global tensions related to crude going forward.
0.
100%. That's a really good point that you make there, Mike, especially with the backwardation. I'm definitely going to be keeping an eye on a little bit more moving forward, especially when it comes to some of these oil products. SpaceX as well has been really volatile too. I know I took my first position in SpaceX yesterday. I had bought just a call, sold them out of the money put spread as well. So I know we've seen a little bit more volatility on that end. So I've been patient with that one as well. But I gotta ask you guys, what have your guys' thoughts been on this? I guess it's been what, 7-8 days since options have been available on SpaceX. You guys got any comments on that one?
I think it's moved as we might have expected. I mean, Gus nailed it perfectly. He said you'd have a 3-day rally followed by a liquidation event. I always thought we'd see this euphoric rally. I didn't think we'd drop back down to IPO levels, honestly. I thought we would maybe stay at 180, 190. But I think that's just the name of the game with these IPOs. And the implied volatility here is nothing to scoff at. 100% IV across the board, basically. I actually bought a butterfly here, 20 points wide. It was only trading for $300 for a 20-point wide butterfly in July. So I felt that was too cheap for an upside move. You could double your money easily on an upside move from 150 to 170 even. But I also got into a longer term Super Bowl where I sold a put at 125 to finance the entire cost of a 300 strike leap. So this is a really long term trade, but I think SpaceX is going to be one of those products where you kind of chop around with high IV and then you've got 30-40 point rip to the upside and you see implied volatility expand. So I want to have the naked long call in that situation, and that short put just helps me finance the whole thing and creates a neutral trade where I'll happily accept stock at 125, especially with this kind of premium where I can reduce basis in a big way.
I just did it, but I did it in September.
Cool.
I sold the 125 put, the finance buying the 250 call, $5 credit, 580 credit.
I like it.
Yeah. Sounds active down there.
I know, yeah.
Yeah, no, it's been pretty active since the market opened so far. I definitely got a lot of bids going out here. I know the volatility,
do me a favor.
It seems a little bit quieter.
Don't put your hands up.
Now.
Don't put your hands up.
And apparently don't drop
No, don't
anything
do that.
over here
No, I'm just kidding.
Yeah, don't drop anything over here. Everybody starts calling you out and pointing their finger at you.
Heck
so
yeah. For
definitely careful on that end.
For sure.
It is funny when that happens and everyone in the room's like, oh.
And then there's one where there's a lot of like balking going on, like a chicken like balk. I don't know. I'm still getting the memo for a lot of these things.
That's new for us. I don't think I've heard that.
Yeah, I just don't want to be I think if you sneeze or something like that, a bunch of chicken noises starts happening. But no, I'm keeping a pulse on it all. I'm being careful. I don't want to be the guy. So
yeah. Don't inadvertently buy 100 contracts of SPX with hand movements.
No, definitely not.
Yeah.
Definitely try not to do that. I do have on QQQ. I bought a put on QQQ. It expires by the end of next week. So I'm hoping we get at least a little bit of downside here. I know we put in some lows yesterday at around 29,578 on NASDAQ. So if we can just peek below that just briefly, momentarily, we'll go ahead and take off some of the short delta that we have on the portfolio. But a lot of volatility, a lot of uncertainty, and I'll just continue to manage as the day goes on.
Nice.
I like it. Well, E, appreciate your time. Hopefully the chicken gawking is not directed at you ever. That's a new one. I feel like I haven't heard that.
I actually feel like I haven't heard that neither. Or maybe I didn't pay attention.
Yeah, I felt like I was in a fever dream. I didn't know what was going on.
Yeah. Well, appreciate your time. Enjoy the rest of your day at CBOE, and we'll see you later. Adios. E-minis up 18. NASDAQ up 18 as well. Kind of flat. Bitcoin chopping around, down 2%. What do we got in the YouTube chat?
A good quick one real quick. Somebody was like, can we get an example of the wheel trade?
Sure thing. We could start a new one. Let's see. What do we got? Rocket Labs, RKLB, down $5 here. I actually like entering into wheel trades like this on a down day if you're trying to get in, because obviously you have a lower price point that you can accept. 23 day. If we just go with like the 80 strike, selling the 350. So you sell a put. This actually is pretty nice. You've got $800 in buying power, max loss of 7,600, but you're picking up almost $4 on a $90 product. But the intention here is you saw this put, you let it go. It's not something that you would typically manage, but if you want to continue to manage it, you can. Eventually, if you get hit on the 80 strike put, you take the stock. Once you have the shares, you would sell a call at or above the 80 strike because that's where your basis is. Assuming you don't pick up a ton of premium where you could sell, below where your basis. But ultimately, this is how you do it. So let's just get in. Rocket Lab.
I did not expect that guy to say like Rocket Labs.
Yeah.
Something like that. Like he totally looked like I sell Merck puts or like Procter and Gamble.
Yeah.
He likes the volatile ones.
Yeah. I mean, the volatile ones, you get that premium as long as you're willing to take that risk. So
yeah.
I'm in at 365. So I'll post that to the Tasty follow page and we'll just play the game. We'll roll the premium. We'll take the stock if we need to. But this is one of those examples where you have so much premium relative to buying power. I might just continue to roll that put because I would put up more money to own the shares. So you have to keep that into consideration as well. We do have our very own Tim Knight on the line. I'm very intrigued to see what he has to say about Micron and the rest of the products. Tim, how you doing this morning?
I'm doing pretty good. Kind of watching the wiggles and woggles. There's a lot of uncertainty right now. It's looks like a seismograph. Nothing really. There's a lot going on, and there's nothing going on at the same time. So I guess the proverbial all smoke, no fire happening, at least from what I can tell. I did pull together a few charts I found a little interesting on this very early morning. You mind if I thumb through those?
Let's do it.
Okay. In no particular order, although I've grouped these a little bit. Gold is still weak, down almost $100 on this. And I don't think it's going to be rallying anytime soon. I had sort of thought it would get down to 4,000, which we're just about there. But looking at a little longer term, I think maybe it could just keep slipping away to like 3,500 or so. So this is looking still real weak. That's a nice clean pattern. It really put the kibosh on what had been it's just a splendid bull market, and here just a steady series of higher lows, higher highs, chuggity. It reached sort of its climax here, and then just got this kind of violent breakdown. So that's churning away, and obviously GLD, kind of the same setup. We've got that lovely little right triangle. And we had our kind of last gasp at a recovery the week prior, and we've been tumbling away since then. And in turn, the miners, they're off their lows this morning, but these are breaking down as well. I don't, the only positions I've got metals related are I'm still short EQX, which is Equinox gold miner, and also XME, which is not just precious, but metals and mining in general. And as I've shown our viewers in the past, the ratio chart of XME versus GDX is really this cool cycle over the years. And it suggests that XME is going to vastly underperform XME will underperform GDX for a long time to come. So if you're dying to be short miners, I think XME is the better way to go. And naturally, Dust, the ultra short on this, has had a really good 6 or 7 days. Turning our attention to things more digital, this was kind of relief for me because I am short Bitcoin, and we were rallying last night, and for reasons that don't really matter, but I am kind of curious. About half an hour ago, it gave up any wisp of strength, and we're down on Bitcoin quadruple digits. And the key here would be very beneficial to the one or two bears out there is a failure of that psychologically crucial $60,000 level sometime in the days ahead, because as we talked about yesterday, this is a long-term, really bearish looking pattern. In fact, let's just look a little more long-term. We could drag that horizontal down like so, and you can see the massive overhead supply, and we're sort of teetering at that approximately, let's just bet on the button, $60,000 level. Failing that would be a big deal. So I'm short this by way of being long BITI. And as far as MSTR goes, Michael Saylor's strategy, clearly also doing quite poorly. And this is a funny one because It's basically just a Bitcoin holding company. That's all it is. But it seems to have exaggerated. It almost performs like a leverage instrument because Bitcoin's not down 5.25%, but MSTR is. So this is really getting walloped. I haven't looked at STRC lately, which is Sailor's kind of high yield instrument to get cash to buy this stuff. Well, what the heck? I'll take a peek. I honestly don't know what it's doing. This is like the 11.5% dividend issue. Okay, we got some old data there. Nice. All right, there we go. Down about 2.4%.
I remember hearing about this before.
So yeah.
Explain what this is again.
This, I don't know the exact mechanics of this, but it ostensibly, it was offered as a Sailor in an interview actually said he had ChatGPT design it for him. He had this conversation with ChatGPT about designing a financial instrument that's never been done before, and maybe this is why. But the thumbnail, I understand, you can hear the huge asterisk I'm making next to my sentence, is that this would throw off a dividend of 11.5%, which is a very handsome return, of course, in a risk-free environment, risk-free instrument, which this clearly is not. And those proceeds would be used to fund the acquisition of Bitcoin for its treasury holdings for MSTR. And for a while, as you can see, this was about as exciting as a passbook savings account. It was basically like a $100 instrument that threw off 11.5%. Yay. As you can see, there have been some doubts lately about is this going to survive or not. So it's nice that you had 11.5%, but it doesn't help if your capital crashes 16%. You sort of, I think that wipes it out. So yeah, that's STRC. I think stretch is sort of vernacular for that. So anyway, let's see what else is cooking. Why do I have you? Oh yeah, a couple of shorts I still like. Well, I got 30 positions. I like a lot of shorts. A couple that are just wanted to mention is a Vishay VSH. Another nice day here, 4% drop on this, and this is one of those bottle rockets that is really seems to have reached its apex and starting to yield to gravity. And then Western Digital, another storage firm here, WDC, down a little more than 3%. And our old favorite, the North Star, our perpetual standby, SMH, down, which is interesting because yesterday was a real wallop for South Korea, for SMH, down 10, 11% for South Korea. So you would figure today would be recovery day, kind of maybe climb your way back to the gap or something. It's doing no such thing. It's not like yesterday, but I'll happily take any red number. This is down another 0.5%. So this is a positive for the bears out there. You mentioned Micron earlier. There's all these crazy high flyers, some of which still seem to have their mojo, but more and more they're starting to really show their age. You can't always sustain 500, 600, 700% gains in a few months and not suffer. Another item which leaped out is CBRS. Before SpaceX was coming out, I would bring this up as an example of the old saw, but IPO stands for it's probably overpriced. And CBRS kind of proved that as an example. It's at a new lifetime low now. They came out at a very propitious time since they're, semiconductor / memory related, but it's been a dreadful stock. And I just think that since we have like 8 days of data for SpaceX to look at, it's eye-opening to see, this is how these kinds of things can go. It should kind of grind lower. Meta was like this. Meta was a dreadful stock for months and months until it kind of steadied itself. But as far as SPCX goes, steadying, kind of stable around 150-ish. So the terror that had gone on for these 3 days is abated for now. And just a couple last ones. InQ is basically unchanged at the moment. It's hanging around yesterday's lows. I guess everybody's waiting to see what's next. Tomorrow is kind of the one and only data point that we've got this week. I think it's the PCE. So that's the only economic data point of note. Maybe that'll shape things up one way or the other. And finally, a real favorite in my short positions right now, another former high flyer, AXT, which is the symbol AXTI. This is down today almost 11%, and more importantly, a nice failure of that topping pattern that you see right there. So that's sadly my tiniest position, but I'll probably add to that. That's a real honey of a chart right there. That's
kind of like a Head and Shoulders, right?
You know what? I don't know if this is a pattern, but I'd call it kind of an inverted cup with handle. I'm a bit of a purist about patterns, and that's kind of what I see.
Okay.
So we'll just say that exists as an inverted cup with handle. There you go.
Yeah, true. I can see that. I've actually never looked at anything like an inverted cup with handle, but yeah.
With no more bull in it left.
None at all.
Cup is
No,
upside
I
down.
mean it might retrace. it might clamber
not
its way
run
back
it
to
over.
its range, but no, I think that's a dead duck.
The cup has runneth empty.
Yeah. What do you think
That's
about what do you think about Micron ahead of earnings today?
Well, that's cool that they're having earnings. That'll help inform semiconductors in general. I haven't peeked at the chart, but let's take a look. Well, all I can say is that from a charting perspective, this is what we call, let me find the right tool here, a island reversal gap. And, provided it stays below that price line, it's that's a pretty serious setup for reversal. So I don't think I have Micron anymore, but I will put forth the dumb guess that this is going to go down tomorrow. I think it's going to tumble away after earnings.
That's fair. Yeah, I think we all agree it'll be inside the implied move of 140 points. I think it's going to have a tough time ripping higher, all things considered, considering it's already up 300% this year. So we'll see. But thank you very much, Tim. Appreciate you, and we'll see you later.
See you tomorrow. Bye-bye.
Adios. E-minis up 18, NASDAQ up 30, down the Russell up as well. The market's trying to decide which direction it wants to go. Bitcoin chopping around, as we noted. But yeah, gold, silver, oil, crude oil specifically, all down 2.5% in gold, almost 5% in crude and silver. So crazy moves. We do have a fun little research piece, though, hosted by our one and only, Julia. Julia, how you doing?
Hi, guys. How's it going?
Good. Your hair is shiny and
right?
wavy today. What's going on?
I washed it yesterday, and now I'm wearing it. Yeah, it's a little wet still from last night, so the curls are coming out. We usually wear it in a bun. So,
hell yeah, love to see it.
I've never seen you in a bun.
You never seen me in a bun, really, dude?
No. Have I? Maybe I have. I don't know. I can't remember.
If I wear my hair down in the office when it's like full fro, it's going to get like caught and stuff. People are going to be running into it. It's going to be causing problems. So yeah, I'm more of a braid person. Actually, I've been more of a braid person these days.
Cool. It's for safety. It's for office safety.
It's for safety.
For the
Workplace hazards. We're trying to reduce the OSHA inquiries.
Yeah. What do you got for us today?
Speaking of up and down and not sure where it's going, talking about SpaceX today, we're just kind of checking in on where it's at. With options coming out kind of recently and a lot of volume since it got options. A lot of people talking about it. We just wanted to check in on where it's at. Is the price any more or less stable? And where are the options in terms of liquidity? Because shocker, the options on SpaceX became liquid very, very, very quickly. I want to do a study on this at some point, but I feel like with a lot of these major IPOs, the options are becoming liquid faster and faster. I want to measure that at some point. So we're just doing a quick little check-in now that we're a little over a couple weeks in.
Yeah. It's been super volatile. We've got a couple of positions on butterfly to the upside. I feel like it's too cheap. The 180, 160, 200. That was for like $3, 20 points wide. And then a Super Bowl sold the 125 put all the way out in Jan of 2028 to finance the entire cost and more of a upside call. Really, I just think this is going to behave like Bitcoin and volatility products, where if and when you get that big rip to the upside, you're going to see implied volatility expand. And I want to have that naked long call in that situation. So we'll see what happens.
Long term, wow.
Yeah, you like that? Long term.
Really long term. Whoa, that's crazy.
Yeah.
Man, you're in this for the long haul. I can't imagine being that committed to anything.
Really?
Well, let me ask you this, Julia.
Really?
If you had the opportunity to go to space, would you go to space?
Absolutely not.
Ooh, so you're in the...
Absolutely not. I hate space.
Okay, so I want you, E, and Jermal in my spaceship when we go. You three are going to be screaming. I'm going to be like, hell yeah, let's do this.
Like, we got a perfectly lovely planet. We got air. We got food. We got grass. We don't need to go. I'm cool with it. Interstellar. I should like that movie as a physicist.
And she did science. She knows.
I know. I studied actually a good amount of stars, cosmology, all that stuff. But space is just like Interstellar. I've never been so miserable during a movie in my entire life.
That's a good one. That's a good movie.
It's a shame too. They published 2 general relativity papers just from the simulations of the black hole that they used in that movie. So it is like I call it the most sci that phi can get while still being interesting. And I still cannot watch that movie again. I'm okay.
Yeah, movie.
So y'all can go to space. Let me know how it goes.
I ain't going to space.
Maybe you'll get Titan submersible. I don't know.
I'm gonna sell these puts in SpaceX, and that'll be my way of going to space. I want this thing to go to space. I am not going to space. But yeah, along the same lines of Mikey, I did. She does. Sorry, let me stop yapping.
Yeah, to talk about. No, we could just yap about SpaceX too if you want, but I do have slides.
I didn't know you had slides. Let's look at your slides.
Let's do some slides. Yeah. Okay. Mission Control. This current state of SpaceX trading. This piece is by Sahil. You want to follow him over on X. We've been writing a lot more articles just between the couple of us on the research team. So give Sahil a follow if you'd like to read more about some of these pieces. But yeah, we're talking about the current state of SpaceX trading, if we can even really quantify the state with how crazy it's been. But we're going to try to. So let's go to the first slide. So options, very volatile. And we're seeing how quickly this momentum is fading. We're seeing it's up a little bit today. We actually saw it flip from the pre-market levels where it was at, but still down 25% in the last five days. So that came and went very fast and still a lot more to go. And what an interesting statistic, looking at the July 17th expiration options on SpaceX. We had 20,000 contracts-ish in open interest during the market close on June 17th, and now it's down to 6830. So just being careful with some of those options. We're seeing a lot of people closing their positions out just with the volatility. So Mikey, maybe with taking your very long-term approach could make sense with getting some exposure to this, but being less exposed to obviously some of these short-term movements as the market is trying to undergo price discovery and as we're seeing a lot of movement, although a little bit less today, which is actually quite interesting for me. Yeah,
I like it.
Next one.
Yeah, next one.
Cool. So this is I call this the Peloton curve, but usually it takes place over a longer period of time. Just the sheer run up and run down, and then a little bit of a continuation of that, although it's up a bit today, just over the past couple of trading days that we've had with this underlying. So really volatile IPO, and we're seeing also trading volumes dropping off consistently from where we were at. We haven't had a lot of major IPOs in the last 10 years. So there's not a ton of data to kind of point to say whether this is exaggerated or maybe less, exaggerated than it would typically be. But certainly just from pure volume levels, especially relative to the Mag 7 and some other highly liquid underlines, just really, a lot of interest in this in the option space and in the equity space, and then some of that tapering off. So we're seeing a little bit of cooling as the price is starting to come back down to earth a little bit. Although Jermal, I know you wanted to take right back off.
Yeah, of course.
Yeah, maybe that's the spirit.
I think we'll see some chop. I mean, it's just this is how it works. Like Meta had the same thing. Meta was a dog after an IPO, and now it's multiples higher. So we'll see. But yeah, expect implied volatility and realized volatility for sure.
Yep. And again, we're seeing where these liquidity levels, kind of consistent with what we see just across underlyings in general. But when we're looking at average volumes, we see, still a lot of activity really early in the morning and then towards the close, with liquidity levels being a little bit drier towards the middle. This is generally what we see across the market. More broadly, where we get towards midday, that's when liquidity becomes a little bit thinner. So just in general, when it comes to trading these with something that still has so much volatility associated with it, even though it's becoming more liquid, just bearing in mind trading times throughout the day, especially for short-term trading, this is just something that's good to just note whenever putting positions on in underlyings like this. So just little that. And then this one found very interesting, little comparison on the next slide of just how liquid is this compared to some other underlyings right now within the option space. So we basically looked at the 59-day options, the at-the-money puts across a couple different underlyings. And we can actually see even though this has only had options for like a couple of days now at this point, it's actually showing, when we look at spread as a percentage of close, like similar tightness in the bid-ask spread as other names like Oracle, Coinbase, CRM, much more established options markets and other underlyings. So this thing got very liquid, pretty liquid very quickly, comparable to like some other major names that are very actively traded, and potentially more to go. Again, as the price becomes more I should say the market becomes more confident of the price moving forward.
Yeah. This is similar to like IBIT too. IBIT was released, bid-ask spreads were somewhat wide, but we were like, this is going to be super liquid going forward. I think implied volatility is going to have a role too. The higher the implied volatility is, the slightly wider the bid-ask spreads will be, but I have no doubt that SpaceX will be one of the most liquid products going forward with the options market too.
It's too big not to be, for sure.
Yeah.
It's huge. Yeah. And just bearing in mind with liquidity, for anybody like considering getting into this, is that liquidity with options is a much more nuanced concept, because like further out of the money you get, for example, the less liquid time, like the time to expiration can change the liquidity level. So just really looking at like bid-ask spreads, looking at open interest, looking at volume for specific contracts can be really helpful, just to make sure that you can easily get in and out of the position. So obviously a lot of SpaceX options are liquid. That's what we're seeing right now, but option liquidity is a little bit more nuanced. So just checking those different, doing a little sanity check can sometimes help when considering getting into a position, especially further out of the money and especially like further out in time.
Indeed.
Yeah.
Indeed. And now we got, next slide, we got a VWAP. So showing like basically if the current price is above or below prior prices, and or at least that's how I understand it. And we're seeing that like we're really not seeing the bulls or the bears take over in any consistent way. We're seeing just a lot of chop when it comes to looking at like relative price increases or decreases relative to prior prices. So we're not really seeing clear, I would say, like trends yet in terms of like where does the market think that this is going. We're still seeing a lot of like speculative like price discovery, I guess is what you could call it, or speculative trading. So just being very careful about getting into something like this, especially with regards to the options for the liquidity reasons primarily that we talked about before.
This looks like Christmas to me.
It's Christmas.
I love it. It looks like a zebra striped gum to me. Almost perfectly. Do you know what those are?
No.
No?
Zebra striped gum. No. What's a zebra striped gum?
Yeah.
Is
I
that
gotta get out of here. I'm too old for this.
Nope, I'm looking it up. Zebra striped gum.
Yeah, they were all the rage back then.
They were, yeah.
But yeah, I think with
This this looks like, this is like the era of like Zoop Pals. Is that what it was called? Zoo Pals and purple ketchup.
I don't know.
Now maybe that was my era. Zoo Pals were like the little, they were the plates
ketchup.
where they were like
ketchup.
the plates. Yeah, we had purple ketchup. We had green ketchup. This was the early 2000s. We had plates that were animal shaped. Those were, I think they were called Zoo Pals. They were the best.
I missed all this.
These. Well, I mean, you were enjoying some striped gum.
I had kids by then.
I can't believe you've never had purple ketchup.
I know, it's crazy. But no,
well, whatever. We'll make the next segment about this.
We'll table it for
We'll table it. For now, we can talk about some takeaways. But the takeaway is kind of what we've been talking about. We're seeing SpaceX really move all over the place. Big sell-off, big run-up, big sell-off. And now kind of like a little bit less movement today, but still like the very brief history that is very volatile. And we're seeing that kind of continue to move on. So what we're seeing as well is options are becoming more and more liquid on this now, just using one contract as a reference point. We're seeing SpaceX options be as liquid as some other major names, such as Coinbase. So we're seeing option liquidity make this more tradable, but that price volatility is certainly still there, especially when we're seeing large contract or large positions, large open interest positions getting closed out very quickly. It's just about being careful and being mindful of the price volatility and the positioning, especially in the short term, as this thing is becoming more, as the market is becoming more confident in the pricing and the true value, I guess you could say, of this.
As it matures.
Yeah.
As it matures.
Yeah, I think you'll see chop going forward. You'll have your up days, down days, up weeks, down weeks, but you've got like the inclusion into the NASDAQ. You've got lockup periods ending. So it's going to be some push and pull. So just keep your size in check, but still plenty of premium on either side of the market if you are selling it or creating calendar spreads, diagonal spreads, and whatnot.
Mm-hmm.
But appreciate it, Julia. go get a pack of zebra stripe gum. I'm sure you can find it somewhere.
I can't wait.
It only lasts like a minute, and then it's flavorless. So that's why they give you 100 in the pack.
Of course. And you guys can go get some purple ketchup, which I'm sure the purple ketchup from like the early 2000s is still not expired.
That's just like they're breaking my brain to think of purple ketchup.
It's like the McDonald's fries that like they were found in like a 50-year bin and they were just ready to go. They just don't age. Yeah, like a fine wine, those McDonald's fries.
Yeah.
Appreciate you, Julia.
Nicely. Thank you, guys.
Absolutely. See you later. E-minis, NASDAQ, chopping around. Both of them are green right now, but that will probably change by the end of the day. Join us on the YouTube channel. We're still streaming there. Head over to Tasty Live. Throw in your trade ideas questions, specifically AMD, maybe some MU positions. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
Hello, everyone. Welcome back to the show. My name is Mike. I'm here with Jermal. And just like that, E-minis are up 30. NASDAQ's up 50. Just after a 90-second break, we've got the market flying around like crazy.
All over the place.
We've been corrected in the YouTube chat. It is not zebra stripe gum. It is fruit stripe gum, which sounds much more familiar. TP, have you ever heard of this fruit stripe gum?
Let me check my
hearing. It's broken.
Fruit stripe gum?
Yeah.
Yes.
It was a thing. I do remember this.
It's like a zebra striped gum with different flavors. The logo.
Maybe I saw it on TV. So, Mike, what you got to understand is, I grew up in Massachusetts. We didn't have those advanced things like you guys have.
Dude, fruit stripe has been around since 1960. You never heard of it? You never saw that? This is not like a kid's thing.
We didn't get gum until 1990.
Oh my God.
So having the idea of I don't know, we just didn't have, I don't remember it certainly. It was probably one of those things. That's why when I was a kid growing up and watching the Brady Bunch in a black and white TV, I thought that was like, oh my God, California, they have everything.
Well,
they probably had, Brady Bunch probably had fruit, what'd you call it? Fruit stripe gum?
Fruit stripe gum.
Yeah, so anyway,
TP,
guys, I know you guys were talking about Wendy.
Man. You haven't heard of fruit stripe gum? See, there it is right there. You never seen this?
Oh, here we go. Yeah. Even tattoos inside.
If you don't recognize the zebra, then you definitely didn't see it. I'm starting to question your whole childhood. Seriously.
Sorry. Sorry to deflate your memories, Jermal. I'm
this
sorry.
Thing has been around. It's from 1960. It was Beech Nut. I do remember Beech Nut, and it was just discontinued 2 years ago. By the way, I didn't even realize that.
Yeah, it's probably toxic. It was probably toxic.
It definitely was toxic.
Kids.
Everything from the 1960s was toxic.
Yeah, because Jermal, you went bald because you ate fruit striped gum.
That's exactly what happened, for sure.
All the food was toxic, but the drugs.
And before we go too off the rails with that, I just want to go one more thing. You don't know the salad bar from Wendy's neither. I can't believe you don't know the salad bar from Wendy's because it was more than just salad. They had pretty much everything. Even kids would go there. I mean, I was a kid when it had it. They had like chili there. They had like meat there. Like they had everything. It was more than just a salad bar.
They had meat at a salad bar.
Oh, they had everything.
What little salami strips or something like that?
Yep, they sure did.
First of all, again, we didn't have Wendy's where I was when I was growing up. Even when I was a young person in Massachusetts, we didn't have Wendy's anywhere near me. So like when I moved to Chicago back in the early 90s, like, oh my God, Wendy's. And the other point is too, Jermal, I'm not a salad bar kind of guy. Even if I knew of Wendy's salad bar, aren't they the ones with the square hamburgers?
Yeah.
Yeah. So I would just go straight for the hamburgers. I haven't had Wendy's probably in 20, 30 years. I just don't go.
Yeah, it's been a long
I just
time.
never go there. But in any case, Wendy's, so it's the new meme stock.
It would seem.
And I don't know if you guys put a trade on in there, but I was thinking about selling the 7 puts in there with 2 days to go. Just to play along, is Wendy's the new GameStop? And the argument, the story is they have a new chief financial officer, whatever. Does that matter? I don't know. But it's getting the is it Wall Street Bets or somebody? It's getting all the Reddit traders excited about this stuff. And with 278% IV rank, the stock is up 30%. The bottom line is, in 2 days, I'm collecting 20 cents on there, Mike?
Yeah.
And for about $400, $450 of buying power. It just, I don't know anything about Wendy's aside from, the salad bar that Jermal raves about. And why not? Making $20, that's like a 5% return, not quite 5% in 2 days. And you wonder why, option trading can generate such high potential returns. It's doing this. You want to be more aggressive, sell the 750s. Get about 50 cents for those. I would do that too. Just to bet that the Reddit world isn't going to quit on Wendy's. That's it. It's just a bet. But I don't go out to 905 days, Mike.
Yeah.
Don't do it.
Well, I was going to exemplify the skew here, and like everybody is buying these calls. You can see the at the money put is trading for 50 cents. The out of the money call is trading for 5 times that amount.
That's insane. That's insane. It's everybody's betting that it's the next GameStop. That's all it is.
Yep.
That's all it is.
You know what's funny? I mean, if I were the company, I would definitely lean into this, by the way.
Well, I mean, is in what way? I mean, that to say, come buy our hamburgers.
Offer some specials.
We're the next meme stock.
No, I mean, just offer some specials. I mean, you don't have to mention anything about being a meme stock per se. Just offer some specials. You know what I mean? Get the people going.
What they should do is they should say, we've got some special tendies for those that have made some tendies on our.
You know what I'm saying?
It's the extra spicy tendies.
I would keep an eye on their social media.
All right. Pull up Micron. What's Micron doing? Sure, we could talk about that. Micron, and granted, I don't know anything more about Micron than I do Wendy's, but Micron is now unchanged. It's up on the day. It was down as much as I thought I saw it down about $15 or so.
Yeah.
Earlier this morning, it was down a lot. And now they're coming. Obviously, that's the name of today. Earnings are coming after the close. I do not have a trade on in Micron. I would look to put one on tomorrow, depending what earnings come out as. I'd lean bullish on this stuff just because I'm just bullish on the AI space in general, and Micron, why not? Again, very high implied volatility. Even if it comes down after earnings this afternoon, even if volatility is lower tomorrow morning, there's still going to be premium in there to sell. Another trade I'm looking at is bullish in ExxonMobil. I talked about this with Chris Vecchio yesterday at the last call, and I did a cherry bomb today, selling an out-of-the-money put spread in XOM. Earnings are coming up in August, so this is a pre-earnings trade. I'm not betting on earnings, but the volatility is relatively high in there. Yeah, going to 23 days. The argument here is that yes, oil's down, and that stinks. And I'm short put spreads in oil. So those are killing me today. But the idea is that ExxonMobil is as much a stock as it is an oil. It's an oil company, but it is as sensitive to the price of the overall market, the movement in the overall market versus the price of oil. So oil's pulling it down. If the market continues to rally, I see this thing bouncing off its lows. I would sell something like, I don't know, the 32, 34 put spread, something like that. Do a defined risk trade in there. But again, it's just a simple contrarian bet on ExxonMobil.
No, that's a great point. I always talk about that with names like Exxon. I mean, it's people try to use it for oil proxies, and of course it does follow that, but it's also a stock sometimes too. So that's a great point, TP.
Yeah, lots moving around. TP, I promise next time you're in town, no salad bar. We're gonna get ourselves some old school Chicken Hut. I know you remember that place.
Chicken Hut.
Chicken Hut was
Mike.
I heard about his love for Chicken Hut.
It was me and him, nobody else. Everyone else hated it, and me and TP.
I actually hate it. Yeah, I don't like it. It's too plain.
It is an extremely controversial lunch choice.
It's a lightning rod. It's a lightning rod.
But I like to think, Mike, that you and I have a certain amount of influence that we could get Chicken Hut the next time in Chicago. I would love that.
Let's do it. We'll make it happen. Appreciate your thoughts, TP. We'll see you later. But yeah, E-mini's rallying here. Up 30. NASDAQ up 110. We'll see what happens with Micron and AMD and what have you. But we're going to take a quick 90-second break. We've got some more content for you on the other side. Yeah, Q. We'll see you then.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside. So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
What's up, everyone? We're back to the show. We got E-minis up 20, NASDAQ up 60. Craziness across the board. We got Wendy's, we got salad bars, we got food stripe gum. Like we've talked about everything this morning, but we got more to talk about. We've got Jermal in the house, we got Q in the house, but he can't say a word until I do the.
I love Mike's better than anybody's.
There we go. I love it. Fellas, how's it going?
What's up?
Well. So we've got 3 days left until your competition? 4 days left?
Yeah, Saturday. Saturday's the big day. So right now I'm like drinking a bunch of water, like water loading, and then gonna cut water on Friday. Not like fully cut water. I'm not crazy.
Yeah.
But just like
this
drink
is a UFC
less.
fight.
Yeah, exactly. Yeah. Just drink less. And then so like today I've been going to the bathroom like friggin' every 5 minutes.
When
And
you
it's so
say
funny.
drink a lot of water, what's the quantity you're trying to consume each day?
Well, normally like on a regular day I consume probably a gallon, but now it's closer because I measure it in like water bottles. I'm doing 5 water bottles today.
That's
1.25
1.25 gallons.
Yeah, however much that may be.
Because four of those water gallons is a gallon. 32 ounces, 128.
But then I also drink like just like whatever like soda and protein shakes throughout the day, which also adds to that. So it's probably closer to 1.5, 1.75 gallons, something like that. I just know it's a lot of water.
Yeah.
And I'm going to the bath. It's so funny because like with the way the market's moving today, I'm going to the bathroom every 10 minutes, and then when I come back, we're either 10 points up or 10 points down from
all
where I
over
was.
the place. It's crazy.
And it's like, yeah, a lot of scalping we're seeing on the trade desk today. Like with the futures, I'm sure TQQQ will be up there on the list with the intraday moves as well. And so, yeah.
So wait, have you looked at the list?
I haven't looked at the list.
Oh, okay, well let's do the game. What?
Yeah.
Well, how do we want to do this?
I think it's got to be Micron, SpaceX,
no doubt,
and FedEx will be up there probably top 10.
I'd be surprised.
I think it's Micron, SpaceX, maybe AMD. We'll see.
AMD.
TQQQ obviously is going to be up there too. But I would say my guess for number 1 is.
Yeah, because it rotates now, because it's not Tesla every day anymore.
No, Tesla's done. Tesla's
GLD and SLV are
old
going to be on the
news.
list.
Yeah, old news.
Bet money.
Oh yeah, GLD and SLV
going to be on the list.
Those probably won't be number 1 though.
They won't be number 1.
A lot of customers trade futures.
What are we guessing? Top 5? Is that what we're guessing?
Yeah.
Is that what we're guessing here?
You think GLD is going to be in the top 5?
No. I was just saying on the list.
It'll be on the list.
Yeah, GLD and SLV probably on the list. Yeah.
I think top 3 would be SpaceX, Micron, and Wendy's, baby. Ha!
All right, well, we can get into the list and then talk about it a little bit after, if you'd like. All right, top 20 symbols going through the system, and they're IVR and for Laura. No broad-based indices or ETFs. Wow,
damn, I
GLD
should have said it is in the top 5.
Wow. All right, so at number 1, Micron with a 92, TQQQ 85, Tesla 38, GLD 49, SpaceX negative 18, SLV 37, NVIDIA 24, Google 50, Amazon 28, MSTR 61, Wendy's 283. So volatility expanding extremely throughout the day. Microsoft 62, Palantir 24, Apple 37, iBit 34, Robinhood 60, SNDK 84, Meta 44, Intel 96, and Rocket Labs 35. Wow. See, now that's a nice, diverse
It is actually. Yeah, I was thinking the same thing.
Yeah, that everything's moving across all parts of the market, not just NASDAQ today, which is, much welcomed for a lot of our traders trying to diversify their strategies.
Yeah. Wendy's being up there. Shout out to Wendy. But yeah, Micron, not surprising to see up on that list with earnings after the close today. Chopping around, pretty big intraday range here. Got as high as 1083, as low as 1030. So you've got a 50-point range here. What kind of questions are you getting on the desk for Micron?
Yeah, I would say, well, because we're just getting like, a lot of the range, things like that. And so like when people talk about the candles, right, because it was up earlier today, but sometimes the candle will be red. And so that's just based on like the intraday move. So if you pull up the chart again, you can see like intraday, if it's down from where it opened, the candle will be red, but theoretically it could still be up. Like earlier it looked like that. So right now, it's pretty much unchanged, but the candle is not going to be white, like the unchanged candle, because it's going to show from like where it opened to where it's trading now. So that's sometimes something that we see with customers that are a bit newer to trading as well, just understanding like how the candles will work.
It's weird though that this thing opened up higher and it's not flashing down 30. That part is a little weird. You know what I'm saying? Like it's opened 1080, right?
Yeah, it was,
I think it opened 1082.
It was pre-market. It was up to like 1090, 1080. I don't know where it opened exactly, but 1082 clearly.
It says to open 1082.
Yeah. So I think it is interesting though, seeing such a wide range here with Micron. I think you've got implied volatility coming in a little bit now. Only 116 point move for the next 2 days. It was at like 140 pre-market and yesterday. So seeing implied volatility come in a little bit is kind of weird for an earnings announcement that feels like has been, the talk of the town. And we will see some movement after the close today with an implied move north of 10%, especially with the differential here between the 2-day and the 23-day. You've only got 100 more points in the 23-day, which is 10 times more time than the 2-day cycle, but still boasting half of that implied move. So lots of craziness probably after the close today in Micron.
Lots of craziness right now. Market is all over the place.
Yeah, when I came on, we were up 22, and now we're up 36.
And there's like no news.
You didn't even go to the bathroom.
I didn't. Yeah.
This is no news.
It's crazy.
Yeah, no, I was looking at the expected move this morning. It was, I forget what it was, but I was looking at the Iron Condor at like the 20 Delta, and I was like, this is trading for way too much premium than what I'm expecting. I'm like, is something like coming out today, like some sort of number? But I guess it's just, the market being the market, sometimes premium is higher than what you expect, right?
Yeah, I don't think there's any major.
There's 30 points of an implied move in SPX. So yeah, I would say this is standard chop given the VIX level. I think if there was a number coming out intraday, you'd probably see closer to 50, 60 points of an implied move. But
you got core PCE and GDP tomorrow. I don't really think that those are going to be surprises, honestly.
And with the GTH hours and SPX, you can now trade those as well pre-market, which is really nice. A lot of people have been loving that, actually, because the liquidity has gotten so much better than where it was a few years ago. And so you're able to trade those like earlier hours if you want to trade, first thing in the morning when you get up, you want to trade those, core PCE numbers coming out at 7:30. You're able to do so via SPX.
Yeah, Liz is all over that. She's doing them every morning.
Yeah, she's waking up at 5, just like boom, place and trade.
Yeah.
Wake up,
part of her routine.
Straight to the trading platform. Yeah.
Like, why would you wait till 8:30 when you could do it at 5 in the morning?
Exactly. Couldn't have said it better myself.
You can ask that question for a lot of things. It's true. It's real.
E-mini's ripping higher now, up 40. NASDAQ up almost 200 points. We got over a half a percentage point to the upside in both of them. What's your prediction in Micron in terms of tomorrow's list? Do you think it'll stay on the list, or do you think it'll
be number 1 on the list tomorrow?
Probably.
We could do a prediction market on that if you'd like. 50-50.
Yeah.
We'll do it. Micron's number 1 on the list for sure tomorrow.
Yeah. I would agree. I mean, it has to be, right? If it's number 1 today, why not tomorrow? Why not the rest of the week?
Yeah.
Appreciate your time, Q. I know you've got your competition coming up, so go chug some water.
Will do.
Beautiful. Yeah, we'll be back in just a little break here. E-mini's up 50, NASDAQ up 200. Crazy day. Micron, of course, after the close today. We've got plenty more trade ideas and questions coming to the YouTube chat, so join us there. But we'll be back in just about 90 seconds. You're watching Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal, and we've had a jam-packed morning. We've talked about Wendy's. We've talked about the Wendy's salad bar. We've talked about fruit stripe gum. We've talked about Micron. We've talked about AMD.
We did an options math on AMD, and it's obviously we talked about it's one of those names where I think we're going to see probably some offshoots as a result of Micron's earnings, which we also talked about at a great amount today. What else did we talk about? Jeez, so many things.
Well, we have a full page of trades on the follow page.
We really do.
So I've got that pulled up here. If you want to check out our trades, you can always find them on the Taste Trade follow page. Just click this little follow feed right here. This can be found on the mobile app, the desktop app, web app. We're looking at the web app right now. But yeah, let's recap some of these trades. Jermal, why don't we kick it off with you?
Oh, geez, we could be here a while. What have I done? I decided, and it's interesting because this all kind of dovetails on what we went through different times today. MicroStrategies, Tim came in and talked about that name. And I decided to clean up some stuff in MicroStrategies. I do have a Super Bowl in there. That's in September. It's obviously getting smoked with the stock down here. But I rearranged my call spread on that, as you can see, and you'll look and see that. And then I think, I don't know if I posted it yet, but I did sell a put as well in here at the 90 strike. Just looking at where stock is, I think I sold a put in September. I haven't posted that yet amongst trades. But Rocket Lab also sold a put in there. It's a trade that you did as well. SpaceX, I cleaned up a bunch of things. Long story short, I got out of the... You'll see a lot of trades in there. I cleaned up the put calendars that I had, and I actually ended up putting on the Super Bowl trade like we talked about. I did it in September. So just to kind of quickly go through, but that's basically what I ended up doing when you see all the different trades. Closed out some put calendars, did a Super Bowl trade in September. Lulu closed out a short put for a gain. Micron did that that Iron Condor out in July, hoping to see an inside up move like Mike said. And I did sell a put in MCL, sold a put in SLV. So yeah, a lot more trades. You guys can see it. But yeah, go to the follow page and take a look at all of these.
Yeah, for sure. Lots of activity this morning. Shout out to the YouTube chat as well for joining us and chiming in. But yeah, we've got tons of stuff today. And yeah, just a quick recap of the stuff that I got filled on. Same story. We've got Micron trades. So the 800, 780 put spread with a 1300, 1320 call spread. So just a July 20-point wide Iron Condor, $6.50. And then I got rid of some of that credit to buy this butterfly 2 days out, 50 points wide, 1150, 1200, 1250. 1200 is right at the expected move or near it. So I like placing the short options near that strike just in case we get that inside up move. And if we do, this $400 will turn into $800, $1,000, something like that. And the Iron Condor will likely also be a small winner if we get that inside up move. So playing for that. But even if we get a downside move, as long as it's not too crazy, this butterfly will likely still hold on to some value. Even on a down move, maybe $1, $1.50, and the Iron Condor should come in too. So kind of a combo trade there. And then Google got into a long call diagonal spread, the 350, 370 here. Bought August, which is past the earnings announcement. Sold July, which is before the earnings announcement, 20 points wide. Bought that for $16.90. And worst case scenario is Google chops around or sells off from here. And I can roll that 370 call from the July 17th cycle into the 30-day cycle, which is where the earnings announcements are, or the earnings announcement will be. So I'll be able to pick up another $2, $3 a premium at least, and just go on about my day. But hopefully we get a rally prior to that. I can close that for a nice winner if that is the case.
We had Justin Sacco on from Sacco Financial. He came and talked about wheel trades, which kind of inspired us to put on those Rocket Labs today. And we talked to Errol from the CBOE floor. He came on talking about different things that he's noticing today. We had Gus, obviously, earlier this morning, who was the first person to mention Wendy's to us, which, again, is interesting meme stock. We also discovered that TP knows nothing about the salad bar in Wendy's, and clearly he's never had any Wendy's, but he loves Chicken Planet, so that's all good stuff to know. But yeah, it's been busy, man. We've had, obviously we can't forget, I think I briefly mentioned it, but Chris came on with a signal versus noise, and he will do another one of those for the YouTube page for one of the videos, so check that out. Those have been hitting well. People seem to like those. So it's been a very busy morning already, and it seemed like it was going to be quiet, right? Like pre-market, it seemed like the market was just fairly quiet, wasn't much going to happen. And as soon as we opened, as people have been saying, we've gotten a lot of movement in a lot of different directions. And I'm still not sure if this 45-point up move is the final say. I guess we'll see. Yeah.
If you like written content, we also have a earnings preview for Micron. We like to do these earnings previews for all the big name tech stocks and all the big name earnings stocks. So check out tastylive.com. You can go to the News and Insights tab along the top there, and you'll see a bunch of written content from Chris, Ilya, myself, related to the market movements each day. But yeah, kind of wild to see the E-mini is ripping higher here, especially when you consider gold down 3%, silver down 5%, crude oil getting out of backwardation, which is really wild, all things considered. Looking at the regular expirations, we've talked about this before and how when you have these global tensions, you see this backwardation heighten and steepen. But now we've got a flat curve all the way across, only 3 points between the 22-day and the 327-day cycle. So this thing is flattened out. The fear and the story has kind of been zapped out of this thing. But still, 50% IV, we're kind of back down to those regular levels of implied volatility in crude oil. So we'll still be participating. I've got a short put in MCL, taking some heat on it now with another 3-point down move, but I don't mind this. There's not much extrinsic value left in this put. I'm interested to see if we look at the roll expirations. If we go to the furthest dated cycle in the same contract, that would be the 22-day. What kind of premium could I collect if I rolled right now? So yeah, I can still pick up $1 even into this move where I'm 7 points in the money. So I'll keep this on. I'll keep rolling week to week. I think that's the move here. I won't be able to pick up as much. I can still pick up a few shekels here, up 30 cents in terms of the net credit received on that roll. But I want to stay in the near term, keep picking up that premium relative to time. And that's kind of the same story of like SpaceX. Liz brought that up too, like doing near-term wheel strategies and just really capturing the near-term implied volatility as much as possible. But we'll see. SpaceX also chopping around here. We've got it up to 157 now. This has had another nice intraday range already. High of 159, low of 150. So this is to be expected with an IPO that everyone's paying attention to. And although it's fallen off the number one list on the top 25 stocks, it's still up there, and it will continue to be up there every single day.
It's off the pop charts. Yeah. I just sold a strangle in CBRS post earnings. Did it in July. Yeah. Yeah, there's a lot of good trades out there, man, and lots to do. So
what's the strangle you got in?
I probably should have did a better one, but I did the 150. Let's see, what did I do? I did the 150. Sorry, I did the 160 230.
Cool.
Yeah.
Any final thoughts from the YouTube chat? Any final questions before we kick it over to Liz and Chris for the?
Let's see. Yeah, will Micron stay on the top 20 list? That's the poll. We got 83% said yes, 17% said no, fade all the way. So. Lots, yeah, that the people have spoken for sure.
Yeah. I think this week it's got to be in the top 5 every single day just because of earnings.
Yeah.
I mean, it's naturally going to keep it propped up. But if I would say the only way this removes itself from the top 25 list is if Micron has a 20% move to the downside, everyone gets out of it, and it's just another tech stock. But I'm not sure that's going to happen.
Well, that's the thing. I think it'll, you know what? I feel like the big down move would create it being in top list. I feel like a big up move. I wonder what happens if it's only up like 2%.
Yeah.
Is it in the number one spot?
You never know. Wow. E-mini's up 55 now. NASDAQ up 225. Seeing a bid here. But thanks for joining us this morning. Hopefully you enjoyed the content. Again, check out the Tasty Trade follow page. We got all of our trades posted there. Also, check us out on Twitter if you want to reach out to us. I'm at Trader Mikey B there. Jermal is at Jermal Chandler. But we're going to kick it over to Liz and Chris for the next hour or so. You're watching Tasty Live. We'll see you in about 90 seconds.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No.
I
This
will
is mine.
take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and I am allowed to buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Liz, we're back. We're watching Tasty Live.
What a difference a day makes, though, right, Chris? What a difference a day makes. Yesterday we come in, we're down 100. Today we come in, we're up 53. Same
I
old
feel
deal.
so much less bad, feeling less worse about that water heater now that my semi positions are back up a little bit here.
There you go. Way to put it into perspective. I do have a personal question for you, and I apologize asking it on air. So yesterday you came in clean shaven, and I was impressed, very impressed how clean shaven you were. You are one of those people who can grow a beard overnight.
Unfortunately, it's
This is amazing. And you know what? You could totally have some separate identities then. You could have, if you grow the full beard, you could totally have a separate identity.
I had my hair long down to my shoulders during COVID. I've shared the pictures here on air before when I did a mustache. I did a whole bunch of different facial hair with the long hair. It wasn't great.
Hey,
my wife prefers me not to have a mustache.
That was the time to experiment, right? That's all you can do.
Yeah. She's like, you look like a real creep with that mustache. I'm like, well, I'm not the one who was kissing the creep. That was you.
That's true. There you go. That's very fair. Now, I do always agree with the women in your life. I agree with anything. This is what I said on the trading floor there was way too many guys down there. And if they would start to bitch about their wives, I'd be like, hey, listen, here's the deal. I'm going to always be on her side. I don't care what you're going to say. I'm going to be on her side. And that's how I shut it down pretty quickly.
That's how it works. Happy wife, happy life.
Yeah.
Liz, I'm thinking about happy semiconductors, happy stock market in a similar vein here today. Semis are bouncing back. The Nasdaq's up almost 0.7% right now. You mentioned what a difference 24 hours makes. Instead of having that volatility curve backwardation in the front, a little portion of the curve there, the VIX 3-month minus the VIX, it's back to 2 points wide again today. So what was yesterday about? Did you get bothered by yesterday's sell-off? Were there things under the covers that, reminded you that today a bounce was possible?
So in my heart of hearts, Chris, and we kind of touched on this a little bit, I think that this is kind of lather, rinse, repeat. We're getting near, and I'm going to sound like I'm a broken record. June, end of month, is end of quarter, end of month. And there is a lot of jittery markets and a lot of jittery rebalancing and a lot of jittery selling. And I've seen it time and time again. Now, it can skyrocket, it can plummet, it can go all over the place. But this quarter, particularly in my opinion, is insane when you get up there. So it's almost you get the narrative. It's frothy about earnings. There's always a reason for the jitters. They can always rewrite it after the fact, the reason why the market's acting like this, but it does before June, end of quarter, end of month. So I didn't take too much away from it in there. No, the volatility is telling. I think the volatility is telling, and it was just a blip. Now we're back. All's right with the world, Chris. We're fine.
How often have we seen in recent weeks where you get this day where you get, minus 2%, minus 3% in stocks, but the VIX doesn't go above 20. And then the next day you immediately have a snapback in equity markets.
That was pretty interesting, right? I mean, we both talked about the fact that the VIX only was 20 with that much of a down move and that violent of a down move. And now we're back 18. 1823 in the VIX, all's well that ends well. Now, my question to you, because all eyes are going to be on it, actually I have two, and I will let you answer them in any order you want, because you're the macro guy. We have PCE tomorrow. What do you think? Is this a big number? Is this Christmas for you? Are you gonna? Did you get up early just to go look and get ready for it? Talk to me.
Not for PCE, unfortunately. There are some things I'll get out of bed for, although if I'm getting out of bed for non-farm payrolls at 8:30 in the morning, I might be having a talk with the people that keep me gainfully employed here while I'm showing up to work so late. But no, I mean, it looks, the inflation report, of course it matters tomorrow. It matters because the Fed is now considering whether or not it needs to raise rates. At least the market thinks the Fed's going to raise rates. So if you get any inkling of higher price pressures coming through there, yeah, I mean, it could be problematic. But here's the good news. Oil is trading at like $71 a barrel right now, $69 a barrel right now.
It hit 69? We're in the six. That's crazy.
6 handles. Diesel prices are back below $5, which has so many important knock-on effects for transportation, freight, airlines, agriculture. Everything uses diesel. The food that we get at our grocery stores is shipped there on a truck, which uses diesel.
And Chris, I got to interrupt you there because we talked about this yesterday off air, but my brother owns a large plumbing contracting business. He's very happy about diesel prices coming back down because he has lots of big diesel trucks.
I'm sure,
Yeah.
but that's good, and that's going to help with smaller companies' profit margins. So there are a lot of positive knock-on effects from that happening. So we're back into the 7s, now 6s in the CLQ6 contract. That means month over month sequentially, there's going to be a big negative energy impulse in the inflation data, and moving forward, there's going to be sequentially a negative impulse in the inflation data. So it's not the end of the world right now. The inflation's in the system, but we could see some signs of deceleration or disinflation perhaps as early as tomorrow, which I think the market would absolutely love. Absolutely love.
Okay, so and that number comes out at 7:30 my time, so 8:30 your time, right?
Yes, ma'am.
Okay. And nothing else, is there anything else on deck this week as far as numbers go?
No, not in terms of the macro calendar. We had FedEx earnings yesterday. Micron's coming out today. I don't really see anything in the back half of the week that draws too much interest. Beyond that, from the macro side of stuff, you can't really. Personal income and spending, it's tomorrow. Durable goods as well. Durable goods are kind of important, right? Those are items with lifespans of 3 years or longer. So airlines or airplane parts, automobiles, washers and dryers. People usually don't make those kinds of expenses unless they're confident in their financial future. That could even be a business, right? You're not going to make the big
water
expense.
heaters. Or water heaters, is it?
Yeah, right. So like those types of purchases, they're a good indication for the long-term health of the consumer. So like that's really it this week. There's some treasury auctions going through, but I don't know. It's really just about the Fed pricing here. And that's why I have the SR3C6 contract here on the screen. It's quickly moved off the lows. We were looking at like potentially 4.25 Fed funds rate earlier this week. We're now getting back close to 4 by the end of the year. So a hike is being taken off the table given recent data. And if the PCE can get us back to 4%, a lot of that angst in stocks that cropped up over the past week or two can disappear, at least from my view.
I like it. I mean, this is, it's all good stuff. So you're saying that the possibility of a hike has come down?
Yes. It's come down about 15 basis points have been shaved off from their peak over the course.
What are the chances they talk about lowering?
I don't think so. One of the reasons why Kevin Warshall put together these task force, Ilya has a great perspective on this, which is to say that he just gave himself a 6 months buffer before he needs to do anything on rates. He can go to President Trump and say, listen, Mr. President, we want to get this right. These task force are doing their work. If we cut rates, we're going to do so because we have the best data in hand and all the proof that we need that it's time to do so. Let us do our job. All right. So cuts next year could very well be possible, especially if we don't have any hikes this year.
Yeah, that was all the chatter that I was reading about this morning. Is that there's a possibility, because given where he came from and whose guy he is, that he could do something like that. But I think Ilya's perspective is interesting, that he did give himself a little bit of a buffer because he's got to appease everyone.
He has a lot of people to appease here. In terms of the auction calendar for treasuries, this week there really hasn't been much of anything. But I want to point to bonds here before we hop over into confirm and send, Liz. I point that out because 10 years are bumping into their 50-day average. Again, this 1 month 50-day envelope, technically speaking, has really been firm resistance over the past few months during the Iran war. And we may be getting ready to turn a corner here of sorts. So some pressure coming off the side of the rates. Volatilities are low, so obviously this wouldn't be a sell premium, sell volatility type of environment to collect the premium. It would just be looking like buy some out of the money calls and see if you can get a little bit of positive price drift over the next few weeks. So this is one of my favorite charts to watch right now. Bonds could be turning a corner.
But this isn't an imminent. This isn't you're looking at the PCE or any of that stuff as a binary event, right? This is more of a turn the corner kind of oil tinker turn the corner, for lack of a better perspective. That it's going to slowly be. Okay.
Yes, and you can see ZB here further removed from any of the impact of Fed hikes.
Yeah, there you go.
It's already turned a corner of sorts. It's already pushed through its 50-day. So like the curve is churning. Maybe there are opportunity in bonds. No one's looking there because 5.7 IVR, we can go to the raw vol. 8, who cares when you have SpaceX at 150 or Micron at like 170?
Right. When you're selling premium, but if you're buying premium, this is an amazing opportunity, right? So you kind of, anytime you can take the volatility and flip the cards over. If you were directional anyway, you don't care what the implied volatility is.
Absolutely. Hey, Liz, it's a great time to go to confirm and send. We love when we get these questions in from the audience over the course of the morning show. Let's pull it up. We can go to the first question, Laura. Why not? It's Wednesday, June 24th. Liz, I'm going to bring this one to you first here. Okay. Mike put on a butterfly earlier this week. I trade strangles and verticals all the time, but I've never actually used a butterfly in a real trade. Could you walk me through a specific example of when and why a butterfly is the right choice?
Okay, so this is a great question, and it's actually kind of there's a couple ways you can take a look at this. So Mike and Jermal both really lean into butterflies, and I know he put one on today in Micron as well. So if you want to see that on the follow feed, they wound up selling. I was on with them when they sold an iron condor in the farther out term, and they bought an upside 50-point wide butterfly in Micron to the upside to capture some of that premium to the upside. So I believe they went into the 2-day, and I want to say he did the 1050, 1100, 1150, maybe even $30 wide. But when you're doing a butterfly this wide, it's a cheap way to make an upside play. So if a butterfly is buying one, selling two, buying one, or for the old trader, you're buying the wings and selling the guts. I know that sounds bad, but it is a butterfly. You're buying the wings and you're selling the guts, and it's symmetrical. So all you can lose is what you pay for it. And so this is a way to say that I think that it's going to go up without actually outlaying that much capital. Now, forever give me there's a gotcha, right? So if this goes up, you can make a couple $100 on it. If it goes down, you will probably lose what you paid for it. But you're paying $577 here for the potential of making $4,000. Now that it might have been a little bit narrower, but you can. This is fine either way. But so it's the risk reward scenario is amazing. But you got to remember that in options that flips the cards over, so it's a lower probability trade. And what that maximum profit is when you pin that center strike, when you hit that peak at expiration. So even if it goes, this is what I was going to say about butterflies. Even if Micron goes directly to your middle strike tomorrow of $1,100, it will not be worth $4,000. It might be a little bit of a winner. It might even be a little bit of a loser. You gotta nail that butterfly at expiration.
Right. And so go ahead.
No, go ahead.
I was saying, so the profit's going to be capped at the distance between the center strike and either wing minus the initial net debit paid, and your max risk to the position is going to be the net debit paid to enter the trade. So it goes against you if you're outside of the wings or you're not close to that center point of the trade.
So, and I do like the way that they set them up. Mike and Jermal are very good at it. My opinion is that when I trade butterflies, I trade them in the nearer term. So I really like the setup in a 2-day butterfly. I will have a hard time going out and trying to pin a strike in a 28-day, 38-day, 45-day, because it's hard to pin a strike so much farther out in time. But these are instant gratification because these butterflies don't open up, and I know that sounds crazy, that open up profit potential doesn't happen until the bitter end. Just like a butterfly coming out of cocoon, it comes out at the end.
At the very end. And I like that too. When I think about those selling premium trades, like let's go directionally neutral, a short iron condor, I don't want to do that on like 1 or 2 days. I'm going to do that with a little bit of a longer time scale. And if I'm going to do something like this, I need the market to react right away. Yes. Otherwise, I'm just sitting on, So that's shorter term, right? There's a reason why Mike and Jermal were executing this morning, specifically around Micron with their earnings tonight and the expiry to DTE. Laura,
I want to say one more thing about a butterfly, if that's okay. Just if we don't mind. So about the butterfly, the other thing about Micron is Micron's got a 92 rank. Butterflies trade cheaper when implied volatility is higher. And why is that? Because it is harder to pin a strike. So you'll see if you have something that's got a low implied volatility, you're going to be paying more or debiting more for that butterfly because that volatility is saying it's not going to move. So it's easier to pick your strike level. So that's why those are good for earnings plays and things of that nature, because that implied volatility makes it a cheaper play.
Brilliant. No, it's perfect. It's a great addendum. Laura, let's go to the next question here.
Okay, I always default to 45 DTE because that is what I learned. But when I look at the option chain, there's clearly more premium at the 60 or 90 days. Is the extra credit worth the extra time in the trade, or does something about the math break down the further out you go?
I feel like that's so conditional. It depends on the market situation you're in. For me, it's totally contextual. I don't really have, 45 days in, 21 out is what we show in terms of optimal trade entry when you're looking to, before you get to the peak of the decay curve and start rolling down the other side.
Yeah.
But sometimes, depending upon earnings, market events, you could have Fed meetings between strikes because you get 8 Fed meetings a year. You could get these little wrinkles and volatility for binary event risk. So I think you need to go a little bit deeper than just saying, well, vol's a little bit more expensive out at 60 days than 45. Should I just go and sell the 60-day premium? There's a reason for that, and also the position is going to move a lot slower. So you're going to have your capital tied up for a longer period of time before you start to realize the potential profits that you're seeking.
Very well said. I think that in at 45, out at 21 is what the people smarter than me, our research team, has vetted over the years, and that's where the yield curve, or not the yield curve, the theta decay curve is is the most beneficial, but I'm guilty as charged. I have actually gone in some things when you're looking at Tesla with huge volatility. I've gone down I've been selling puts in the yearlies, right? So I've gone 225 days and been like, oh, because once you go so far down with the premium, you can get a lot more for the buying power. So I'm guilty as charged. I think if you have to say a rule, it's in at 45, out at 21. But once you understand the rules, you can kind of break them a little bit, yes. So if you understand why you're doing what you're doing at the 45-day, then you can kind of look to other things, and you can break them occasionally.
Yeah, like my parents had this rule, like don't go into our bedroom when we're not there in the house, because my parents kept various things in there. But it's like, no, I need something from your. Okay, they closed the door. I realized I could just go in and then shut the door again, and they wouldn't be any wiser if I was in their room to grab something. So once you know the rules, then you know the other guidelines more than hard and fast. But there's a reason why we do these things.
Yes, once you learn the rules, you can learn how to break them. So yes, absolutely.
Let's go to the next question.
Number 3. Okay, go ahead.
I never traded a calendar because having one leg and one expiration, another and another or a different month makes me feel like I'm managing 2 separate trades at once. Can you walk me through a real example so I can see how the 2 legs actually work together? This really is a question for Jermal. He's like, he reminds me of Abe Froman, the sausage king of Chicago. He calls himself the calendar king of Chicago.
He truly does. No, he doesn't. He has made calendars fun because calendars to me were like watching paint dry. But those are the durational calendars where you're at you're 30 days, 60 days. So honestly, I'm gonna use a different example with here. When you put a trade on that's crossing 2 months, it's on as a package, off as a package. And it kind of reminds me a little bit of when my father-in-law started trading. Because when my father-in-law started trading, he understood buying stock. Like he sold his company, he had a little bit of money. So he would buy the stock and I taught him how to sell a call against it. And then I would get phone calls saying, I'm making so much money on my stock, but I'm losing on this call. And it was hard to explain, but I was like, these are now, once you enter them, they are a package. You have capped your upside, you have defined your risk, you've done all of the things. And so a calendar, you want it to go to it, not through it, right? So it's very similar to a butterfly. We just talked about a butterfly. They have a very similar nature. You want to pin a certain strike. That's a calendar home run, is pinning a strike. So he's been doing these bullish upside calendars where what he's looking for is a little bit of move towards it and you can take it off for a small profit. It's kind of counterintuitive, Chris, to the premium selling. If you're premium selling, we know you want to take it off at 50%. 20% is calendar home run. Say you pay $5 on a calendar and you can take it off you can sell it for $6. That's a home run.
How would you structure this around something like, let's say SMH? We don't want to go into Micron directly because of the earnings. Maybe it's AMD, but we're going to go to SMH. Would you look at something like the 2358 here? Thinking about the chart right now, you get the volatility decay. So I would want to be short the near-term call. Could this thing bounce back to 670 over the next few days? Sure, but I don't think it's going to get up there around Micron earnings. So why not go short the 670 at 23 and long the 670 at 58?
So absolutely. Now, calendars are structured that way. You're short the near term, long the further out term. And the other thing that we would kind of look at, so this is old school. I'm talking about calendars here. So you've got the same strike, right? So you've got 2 different cycles. You're selling the near term, you're buying the other one with the same strike. It's defined risk. You can only lose what you paid for it. But what we would like to do is if we remain in a bubble and SMH stays right here, okay, doesn't move at all, and implied volatility doesn't move at all. If you look at this calendar, can I see the front month 670? You're paying you want to pay less for the calendar than what the extrinsic value of that 670 is in the front month.
Sorry about that.
No, you're good. Yeah, there you go. Okay, so good. So you're paying, I'm just going to talk through a very bizarre example here. So you're paying $18 for this calendar, right? So if we remain in a bubble and all things remain equal and SMA and time just marches on, this one will roll off and you will be left with one that has about over 23 days left. And so you've only paid $18 for something that could possibly be worth 20. Because if your days are symmetrical, so meaning if you've got 25 days and 50 days, here you've got a little bit more in the long, you want to make sure that you're not paying more for the calendar than the value of the front month if time marches on. Then it becomes a higher probability trade. And I know that's kind of in the weeds, and I know I do kind of get in the weeds sometimes, but that just shows like you're putting on a high probability trade. Even if SMH does not move towards your calendar, you can still make money.
Right, and that's a really important distinction here again. Hey, we only have 3 minutes left. We need to get over to our next.
Sorry, I talk too much, Chris. I know I do.
We need to get to our next trade here. Laura, can we go to the last one? I think we have one more here from this morning. I've been selling puts for months and it works. I've never sold a call because the idea of unlimited risk scares me. Is that fear rational, or am I leaving half the strategy on the table by only playing one side? Well, first off, if you're selling puts naked, that is also a high degree of risk. It's not technically unlimited, right? But it's still a very high degree of risk. And in these markets, perhaps trading in a little bit more of a defined risk manner is appropriate. But I think that you should have every tool in the toolkit available. I know that there are some people who come into the market as equity bulls, and so the idea of like selling a call spread is, I'll say nauseating. I certainly get into the headspace where it's like, are you sell calls? Are you kidding? Are you out of your mind, Ilya? What are you bringing that here to me for? Get out of here. But depending upon the context, you should absolutely consider it. I think that's actually one of the benefits that coming from the spot FX world, Liz. It's not just long short. If I'm long the euro, it means I'm guaranteed to be short the dollar. So you kind of get that, I can't short things, I can't short calls out of your head. It's a psychological thing. You should absolutely figure out ways to incorporate that other half of the strategy deck into your portfolio or your toolbox.
And dip a toe in the water if you want to. If you want to sell a naked put and sell a call spread with it just to see how that actually works, you're getting at least some premium, but it's not unlimited risk to the upside. Dip a toe in the water.
Do it small. Small. Keep it in a small product. It could be a single stock with just a single contract on both ends. Try it out. And you bring up this great point. It's a very Stanley Druckenmiller point. Invest and investigate. You can paper trade, talk about theory all you want, but sometimes you actually got to feel the heat to understand what you're cooking with.
I think everyone's got to feel the heat to understand what they're cooking with. And like I said, I'm watching it right now with my 2 kids. They're not grasping anything until there's actually real money on the table.
Yeah, consequences. They need to be there. Hey, we only have about a minute left here, and I'm looking at these markets, seeing that stocks are coming back in over the course of our little 30 minutes here. I'm looking to see a run up in a few things right now. I have a trade queued up in gold down here, and we're getting pretty close to my level. Right below 40.20, that's the swing low that we have in November of 2025, before gold made its big jaunt up towards $5,600 an ounce. And so sitting right near this $4,000 psychological level, I'm trying to scalp further into a gold position. I started with one last week around the Fed meeting when it became clear that their rates may be going up soon. At least it's a conversation they're discussing in 10Z. $1 in gold is equal to 1 point here. So if gold moves $100, then 10Z, it's a $100 swing, whereas it's 10 times that when you go to MGC, and then 10 times that when you go to the GC product. So I'm going to look to get short here. 4-hour close below 40.20. I'm going to add another leg in to a 10Z short position here because the metals keep selling off. They look really, really ugly, Liz.
And you and Tim Knight both, I was watching him today too, and he was saying that he's going to become a metal bear. Well, he's been a bear for a while. No, I'm on the other side. I actually sold a put spread, but pretty far down, because I think it's not going to go beneath 38. I'm talking GC contract, but I don't think it's going to go beneath 3,800. I was going to say 38,000, and I almost stopped myself there. I don't think I sold the 3,800, 37.80, just a $20 wide, just catching some premium, because you are getting the pendulum in gold volatility swings to both directions. Meaning, if you get whips to the upside, you get high implied volatility, and if you get whips to the downside, you get high implied volatility. So the put spreads could work too. We could both win.
We both could win. Dow's up 1%, Russell's up 1%, S&P 6/10, NASDAQ about 2/10 here. Semis are off the lows, but Micron earnings are later today, and that's what this market's waiting on, Liz. We're taking a brief break here. We'll be back later on today, of course. I'll be back with Glenn, actually. Dr. J's out, so I'll be sitting with Glenn for a Futures Power half hour, 2:30 Eastern, 1:30 Central Time. But there's lots of great Tasty Live programming coming at you before then. We'll take a brief break, and we'll see everyone on the other side.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar.
What is going on, guys? Welcome back to Risk and Reward. Today, we're joining you live from the CBOE. Gus and I have some trade ideas for you guys. We're going to do a little bit of a tour to market. But before we get into everything today, Brother Gus, how are we doing today?
Doing good. It's a high action day. Lots going on behind us on the floor right now. I'm looking a little disheveled. I can't quite figure out this side of my collar, so y'all have to pardon me. I'm still getting used to this jacket thing.
It's a nice color. I like the polos.
Thank you. Yeah. Just a golf shirt, but something good. But maybe I should button the top one. Is that what needs to happen? No, that's not going to look good.
Too tight.
We'll figure it
Hey,
out.
look, Gus is a beast of a guy, right? So you can't have his clothes too tight. It's going to rip. It's going to pop off a little bit here. But I mean, with that being said, you want to jump right into the platform? See what's been going on over here?
Yeah, let's go platform. We can take a look around at some things. MicroStrategy, I think, is what I would like to talk about first here. MicroStrategy below $100 for the first time in a couple of years now. MSTR.
MSTR. Yeah. I was like, Micron and you?
No, understandable. But yeah, MicroStrategy sinking. Bitcoin obviously cratering, testing that 60 level right now. MicroStrategy obviously holds the most Bitcoin of any public company in the world. So that's going to bring them down along with it. But as I talk about all the time, MicroStrategy, kind of a leveraged vehicle to get Bitcoin exposure. I unfortunately am quite long MicroStrategy right now on account of that, expecting a recovery in Bitcoin. But as Bitcoin continues to crater here, MicroStrategy coming down along with it, currently trading around 97.
Yeah, no, 100%. I mean, as we look at MicroStrategy here, it almost warrants a little bit of long delta I'm kind of looking at. But I know we have earnings on MicroStrategy coming around the corner. What is that? Earnings July 30th.
Yeah. When all you do is hold Bitcoin, do earnings really matter? I feel like we kind of know what their earnings are right now.
That's a good
their cost basis on Bitcoin, I think, is something like 78. So they're
underwater right now.
But I'm sure that they are loading immense amounts. And perhaps that's what earnings will reveal is that they've been doing a bunch of buying down here at 60. That'll make people feel.
It's an interesting strategy. Just double down. When you're underwater, just double. You have the bankroll for it, like MSTR does. Just double down.
I believe Michael Saylor can be quoted as saying, "Sell your kidneys and buy Bitcoin." is the deal. That's how dedicated he is to this. So
I got you. A lot of volatility there.
Interesting development there. Wendy's also deserves some attention. WEN.
WEN.
Yeah, we've talked a lot on this show recently about McDonald's, about Shake Shack, and Wendy's always kind of goes unnoticed, down 50% in the last year here. But we have a interesting situation going on here as they switched out their CFO today, and simultaneously Reddit began to take notice of how compressed Wendy's was, how much short pressure there was, and began doing some buying. So retail propping this up right now. 23% of Wendy's shares are currently sold short, so there is immense short pressure going on. And should those shorts need to buy some shares to cover, all of a sudden we're looking at a short squeeze here on Wendy's. I wouldn't throw around that word just yet. We're up 25% right now, but it is certainly beginning to enter the equation that we could see a squeeze here.
I wonder who's getting squeezed. McDonald's CEO, Burger King CEO, who's shorting Wendy's right now? Maybe one of them establishments.
Great point.
But yeah, we got MicroStrategy, we got Wendy's. What else is top of mind for you today?
Meta. I alluded to it early this morning, but Meta has announced that they are going to roll out the next gen of AI glasses, the Meta glasses at $299 a pair. Okay. They're really trying to make a push to. They believe the future does not lie in smartphones; it lies in smart glasses. They're trying to prepare themselves for that future, that we evolve into a world where no one wants the phone in their pocket anymore, and everybody's just doing things with their hands.
I thought it would have been the watch at first. I thought maybe it was going to be the watch piece of technology that could kind of transition us from the cell phones to, I don't know, just looking at our wrists, our notifications, sending messages from our wrists too. But I don't know, maybe it'll be the glasses to kind of eat up the phone side of the industry.
The watch seems to serve as more of an accessory to the phones than they do a replacement. But I do think it's possible that we could see the glasses replace this. I mean, it's what I was getting at. When I initially was starting to buy into Meta and build my long thesis after I got my Meta Quest for the first time, is I was like, this is really insane. It's engaging. It completely envelops you into this virtual world. And I think it's a real possibility that people could start to want that practically in their day-to-day life and just being able to do whatever you want throughout your entire field of vision. And I think the glasses are the way to do that. Obviously, you can't realistically expect everybody to throw on a big bulky headset all day, every day. Not to mention that the battery life on that thing is like 90 minutes, Mark. Fixing.
I counted. You timed it. But yeah, no, I'm looking forward to that. I know they're going to be competing a little bit with the spectacles with Snapchat. That's been getting a little bit more popular. And I know the spectacles with Snapchat, it's a little bit of that, not the virtual reality, but it's a little bit more of that augmented reality. If you're not familiar with augmented reality, it's whenever you can kind of see those holograms within your field of view, but you can still see the real world. So I think one of the best examples that I've seen from Snapchat and some of those glasses is by looking in your living room and by being able to see if you want to have this couch. Number one, if it'll fit, and then number two, to see if it will look good. That seems pretty practical.
Yeah, the Meta Quest offers the augmented reality stuff as well. I have a little bit of experience. Yeah, it's kind of cool. I think my personal favorite feature is being able to put as many TVs as you want in your field of vision at any time. It's pretty great. If
As a sports guy, especially.
Oh
that's
yeah,
probably
exactly. Yeah. If you're trying to watch, multiple games at once or whatever, I will, because I'm a maniac. I already have 2 TVs in my living room, so I will have both of those on, and then I will put on Meta Quest so that I can have a third and fourth TV in my living room, but obviously not where they could logistically fit in real life. So
overstimulation fears this guy.
yes, it's true. It's a lot to track, and everything's got so many commercials. If you have 4 American professional sports games on at one time, there's only going to be action happening in 1 or 2 of them at once ever. Like
So
there's so many commercials.
And you really notice that because you're watching these things simultaneously, and you kind of pick up on those patterns.
I actually, it's just as a sidebar, but I do carry that thesis. The more that you can watch multiple sports at once, however many monitors or TVs you have or whatever, the more you will notice that it is constantly commercials. The number of times I will have 3+ games on simultaneously and they are all on commercial at the same time is preposterous. It feels impossible, but it happens so often.
Hey, well, if you can watch 4 games at once, you can definitely manage a portfolio of multiple trade positions at one time.
You can. But yeah, as you said, with Snap and the spectacles, I just don't know what they're doing. Those things look ridiculous. You don't have any headway in this market. Like, if you were going to jump into this market and try to make a splash, you needed to do something innovative, and they just remade Google Glass, but even worse. I mean, it's not even like, when Google Glass originally rolled out in 2013 or whatever that was, there was at least a cool, spy kid tech bro sort of vibe to them. They looked ridiculous, but there was almost an allure to that. These Snapchat glasses just look ridiculous.
It looks like I'm about to throw up. They look like I'm about to rip a DJ set.
Literally,
that's what.
They just look ridiculous. Full stop. There is no allure. It's just a giant bulky pair of glasses. And meanwhile, you have Meta rolling out these sleek, good-looking Ray-Bans. They partner with Kylie Jenner. That's going to help them make a lot of headway with women, I think, who probably would. I don't want to generalize, but tech things often adapted by males first. And I think that, that partnership with Kylie Jenner is brilliant. Those glasses look really good. I mean, they just look like something that could be from Cartier to me. So, I'm really bullish on the Meta glasses moving forward. I think that the thesis is correct, really, that we might be ready to move away from smartphones soon. And how often have we talked about how Apple has done nothing innovative in years now? It feels like, it used to be like every year they're rolling out a whole new product, or the phones change considerably. That's this cool new thing everybody has to have. And it feels like that's really stagnated. I don't want to say that I think we're at our limit with smartphones, but it feels like we could be getting close. And should there be an evolution, I think AR is probably what it is.
Definitely riding the wave of Steve Jobs and seeing how long that could go for Apple admins. We'll see if we get any innovation down the road. But I feel like this is a great opportunity for a new player to kind of come into the space, maybe shake up the market a little bit.
Yeah,
it's not going to be me. That's a pretty hefty task there. But
yeah, I think Google is partnered with Wayfair now as well, or unless Meta is both Wayfair and Ray-Ban, but Google does have their own AR glasses coming as well that I think can hang with Meta. But this stuff that Snap is trying to do, I mean, genuinely, it makes me think Snap is going to zero. I'm just this is the big shot, the first big shot that Snap is going to take in years. Are glasses the size of your head? It's preposterous. So I don't know that I'm necessarily buying into that thesis. I don't really think it'll go to zero just because Snapchat still has such a stronghold and they do so good with advertising there. Oh my gosh, they do so good with advertising there. Open Snapchat and just see how long it takes you to see an ad. They will send you an ad like a message. It's preposterous. I just they'll be fine, but I don't see this as a growth strategy for Snap. Whereas I do think it's a growth strategy for Meta.
Yeah, no, 100%. I'll definitely need to try to see if I could watch some of the World Cup games. Maybe have England playing over here, US, Mexico, watch all of them at the same time.
And the connectivity that Meta is promising with these is very interesting to me as well, because one of the most interesting features of the Meta Quest to me is that when you go to these Horizon worlds and you sit in these virtual environments, or just any virtual environment, if you interact with another person who's wearing their Meta Quest, if you just high-five each other, you can follow each other on Instagram, which is cool to me. And I think that all of a sudden, with these glasses emerging, we're moving into a world where that could all be connected. And perhaps some people think that that's creepy. Perhaps that's a valid argument to make. But I think that it will just, up the connectivity and of everything, and bridge. I don't know, anything that makes us more connected more easily has proven to be successful over the past 20 years.
And that's pretty much been their motto, huh? Yeah. Connecting people. And then also it's almost like some virtual networking. You know what I mean? High five and connect with each other online.
Yeah, and also if Meta does manage to, if Meta is right in this prediction, in a world where AR glasses become the new thing and begin to replace smartphones, Then all of a sudden, that also feeds into WhatsApp becoming the world's primary messaging app because that is Meta's iMessage. And then all of a sudden, that's a huge inflow of people to that messaging app as well. So, rising tide raises all boats.
Yeah, 100%. With that being said, I got a few things just going on in the portfolio. I actually had to do a lot of trade management today. So yesterday we were talking about how we got some long delta on in the oil products.
5 positions. You never got off 5.
I know this is a record right now. Not only that, we have a little bit of a variety, right? We got SpaceX in there, and then that's it for the variety that we have because the other 2 products is oil. In the overall market, which is NASDAQ. So I had to manage a position today on oil. Oil started to slide a little bit lower here, catching a lot of momentum to the downside. So because this is a futures product, it's a little bit larger as well. It's not something I really want to sit in and absorb that drawdown for just to pop into profit a little bit there. I'd rather cut the position, cut the trade, manage the risk, and then reposition whenever we find an area that would be a little bit more favorable for us in terms of risk to reward. So we're going to be patient there, but we did leave on the USO put spread. And this one we sold an out of the money put spread $5 wide. We collected we collected a little bit over, we collected $2. So we got about $300 worth of risk on this one. And this one we can sit a little bit more comfortable, right? Since it's not that futures product, I don't have to sit in all that drawdown. The risk is defined, the profit is defined, a little bit of an easier position to manage there. And speaking of USO, speaking of oil, a little bit of SpaceX, right? As NASDAQ tries to rally towards its highs, tries to rally back towards its lows, it's really affecting, what SpaceX is doing over here. And I know we bought that call yesterday. We're down a little bit on that, but if you want to keep up with how we're managing some of these positions, you can definitely come to the follow page. And I'm starting to put a little bit more of my 2 cents in what we're going to be doing and how we're going to be managing these trades a little bit. So, for example, we bought the QQQ contract yesterday, and we're going to try and hold that to today's lows or the previous day's lows. I know we briefly got to that price point today, and then just rocketed back up to the upside. So we're going to be patient there, see what we can do with these contracts, and just manage these positions as volatility starts to expand and contract fairly quickly.
Yeah, this USO position that I have, my long puts is just like such a lesson in why you shouldn't, when it's time to sell volatility, sell the volatility. I've harped on this for a long time, but just so brain dead of me to get long puts instead of selling the vol when oil was off the highs. The vol isn't even really the right vernacular. The call skew, the call side premium, I should have gone at it that way. Buying these puts has just killed me. This is day, I don't even know how many in a row of oil continuing to move down, and I'm just still red because theta is just eating me faster than oil can possibly come down. I do have 180 days left on the shortest one of them at a 65 strike. So it is certainly redeemable should oil, come down and test like the 80 level or something like that. USO that is. But I'm not entirely sure that we see that in the next 180 days, even as we continue to sink. So I don't know, just a really tough situation for me to be in, and a great lesson in how you need to evaluate what strategy you're using before you get involved.
Yeah, no, the volatility and the velocity of this move in oil has definitely picked up fairly quickly. So again, if you have a little bit of time on those contracts, I don't doubt that we could even get into a little bit more of a favorable range there. But just taking a quick look at USO here, we have the Fibonacci tool. We just took it from the base, the start of this run, and then we took it all the way to the high. And then we tweaked the settings just so we can kind of see the quadrants in quarters, just to see, in that range where we're kind of sitting right now. And just within a few weeks, we went to the top of that range, almost sitting at the third quartile of that range on USO there. So it's really a testament to how the velocity of oil has picked up to the downside. Not only that, we're getting gaps in oil and we're following through to the downside. So a little bit of a change in behavior that we've seen in oil that we haven't seen actually over the last few months on that continuous rally.
Yeah, I think this is a great use case for fib retracement as well, to just show how pronounced that this has been.
Mm-hmm.
I don't usually use fib retracement when I'm looking to get into a position at first. I feel that there are more valid things, but when you just want to understand the severity of a move like this is a great time to break it out.
Yeah, absolutely. We'll continue to keep an eye on it. Again, that one's an out of the money put spread, so we got a little bit of time on that. Outside of that, SpaceX has been a little bit disappointing, but at the same time, I will say volatility is a trader's best friend, and we've seen volatility in both directions. Yesterday, we purchased a call, and then we also sold an out-of-the-money put spread. We're getting a little bit of a rally today, but we're trading just below yesterday's high, so it'll be interesting to see if we can continue to rally off that IPO low at around 150. And if we do, these trades should pan out pretty well, but we're not going to push it too much. This line down here is, again, where the SpaceX IPO'd at, and we'll be patient from there. But we took a little bit of a dip down there a couple times and continue to get bought up. It seems to be an attractive price point, 150, the IPO price.
Well, yeah, I mean, it's like I was saying yesterday. It's just when you're still this fresh off IPO, it's like how many people could possibly be in below 150 that it's selling at 148 is still a profitable exit. Like I think that IPO price has to stay as a pretty firm resistance for a company with this much hype. Obviously, we see companies sink back below their IPO price all the time. But that's usually a valuation equation. And when you're talking about a company that, is valued this high and is projected to increase in value by orders of magnitude in the coming years and has this much hype, I don't really see it as realistic that we drop below IPO price, at least for the next 2 weeks or so, until the initial, hype pop has died out a little more.
Man, if we poke back to another high, that'll be awesome. We'll be able to hedge some of these oil positions as well at the same time if we can get something like that. But right now, volatility is sitting at about 1826 right now. We're pulling back a little bit as we've gotten the rally and all the indices towards the beginning part of this day. But again, in 18 VIX, it's really not too bad. We're pulling back. We're not the highest levels that we've seen before, but if you're a premium seller, it's definitely giving you an opportunity to manage some of those positions there. And with that being said, as we kind of dive into this watch list, we'll go ahead and check out what's up the most on the day, see what's down the most on the day. Before we do that, actually, let's check out some Micron and SanDisk.
Sure.
I don't know if you've done it yet.
Yeah, obligatory Micron SanDisk check. I did get long some SanDisk yesterday while we were on air. It has sunk a little further down to 1930, but I'm not concerned. 30 DTE left on these, needed over 2,000 by that time. And actually, there's been a little bit of expansion such that I am up. It's moved down $50 now since my spot where I put this on, and yet I am up something like 10% on this position. So got things moving in the right direction while the underlying is moving in the wrong one, and that just makes me all the more confident that I'm going to wind up with a profitable exit here.
Yeah, no, $50, nothing but a drop in the bucket on a name like this. But kind of a similar story over here on Micron as well. We kind of get that gap down, finally a little bit of a change of character and price. And then we kind of poked through yesterday's lows, but we're kind of holding. We're not really continuing to sell off from here. So, I mean, if we look at it from a larger time frame perspective, I mean, structure hasn't even really broke to the downside at all yet. If anything, this could be another dip just in the uptrend that we're sitting in right now. So we'll see how that one plays out. But they're definitely holding. They still got a lot of momentum in it. They're not giving it up that easy.
Yeah. I ain't scared. They ain't
giving it up that easy.
You know how hilarious it would be if I try to short SanDisk 3 times on the run up. I shorted at 800, 1,000, and 1,200, and I get it wrong all 3 times. And then the one time I finally decide to get long is when it actually decides to come down. That would be the most textbook Gus price action that I have ever seen in my life.
Caught timing.
It is caught timing. Yes, that's a
you know.
Yes, that's very well put. But yeah, it's such an interesting phenomenon with these memory stocks, and I don't think that the run is over. I'm not so convicted in my belief that the run isn't over that I'm like getting long here or thinking about leaps or anything like that. But it's like I've been the analogy I've been using with SpaceX. If I come to you and I say I'm a genie and I'm from a year in the future and SanDisk is 3,000, are we surprised at all? I don't think I'm surprised at all. So I certainly think there's more room to be had to the upside. But I've also said 101 times that valuation aside, these things have to breathe sometime just to continue to stay healthy. It's the natural order of things. So. Perhaps this 1 month that I'm long SanDisk will be the 1 month that it decides to breathe a little bit before we return to higher highs.
No, I mean, the momentum's still there. I'm rocking with you there. I'm not comfortable getting short yet either. So hopefully momentum sustains a little bit longer there. But again, with that being said, not too much going on in the portfolio. We did a little bit of scalping and the micro NASDAQ today. We were taking a brief short position to the downside. We ended up cutting that into the profit because of that large reversal that we had seen earlier in the day. We were really looking to get back down to today's lows and a little bit further. We didn't get that, how to manage the risk, but we'll let that $36, finance that that $275 on the oil contracts that we got over there, and then we'll continue to be patient.
That's math.
That's math. Math.
36 finance is 275.
It's a number.
It's trader math.
It's a number. It's less than 275.
Easier. I mean, it's like a 20% discount.
Exactly.
I'm running to the store.
Life is about perspective. Life is all about perspective and how you perceive things. So. Now, with that being said, as we start to wrap here, anything else going to be top of mind?
We actually got 12 minutes left here.
Oh, there we go.
We're going to get the bump.
There we go. Let me
late start. So
try to get this back.
We got all kinds of time. Yeah, but I would draw some attention to I've lost what I was just about to bring up here. Oh yes, BuzzFeed. We haven't talked about this position in a little while. I am short BuzzFeed. This is one where I genuinely do think that this company goes to zero. I make jokes about Affirm. I just made a joke about Snap, but BuzzFeed, this thing could go to zero. Bankruptcy for real. BZFD. Sorry, is the answer to your question. But yeah, that's just. I'm just not buying it. For those who weren't here, I got short off the highs on BuzzFeed. They took a big gap up when they hired a new CEO. I don't like what this new CEO's whole thesis. I don't like that they kept the former president on. I've harped time and time again about if you're doing a hostile takeover, it was a buyout, I should say, not a new CEO. If you're doing a hostile takeover, be hostile. Okay, please. When you're buying a failing company, which is what you usually are doing when you're buying a hostile takeover, is a company that is failing or at least lagging, and you think that you could make them better. Don't keep people around. And they decided they're going to keep founder and president of BuzzFeed on as president of BuzzFeed AI now, or the founder and CEO, former founder and CEO. They're going to keep him on as president of BuzzFeed AI as they try to do this AI push, and it just doesn't make any sense to me. The dude couldn't manage regular BuzzFeed to any sort of profitability, and now we think that he is some kind of expert on AI, and we're going to put him on that team. I just don't buy it. They're saying, oh well, with the power of AI, we can compete with YouTube. What? It's like that meme where it's like the guy standing in front of the whiteboard and it says, "Use AI ? Become bigger than YouTube." Like that's how this business plan sounds to me. Like I don't understand how those two things translate. Where does AI help you begin to compete with YouTube? I don't buy it. So anyway, I have 25, count them, puts, long puts, 205 days to expiration at the 50-cent strike. So with those in the tank, just looking for this to continue to sink, ideally back below $1, which I think is a foregone conclusion. There might be in the next 200 days some kind of headline that they're doing something exciting that props this up briefly, but I think the air comes out of this thing to get the gap filled on the downside. We're talking about a 75-cent stock as I near expiration.
Oh wow. It is a 75. Well, the volatility that's occurring in this would make you not believe this is a 75-cent stock. I didn't recognize that. So, I mean, those are some pretty big percentages.
Yeah, I mean, they were bankrupt. I mean, this buyout is like just dragging them off the floor and trying to do something with them. And I'm just not buying that.
There's no way they're not selling shares on the inside with a pop like this. There's no way some in the company actually believe this is going to be successful. They're probably going to take advantage and sell off some shares as we get this pop because they might not be back at these price levels again. I didn't even recognize once again that BuzzFeed was a literal penny stock.
Yeah, and I'm not calling this buyer. His name escapes me. I can see his face in my brain right now, but I'm not calling him a BS artist. I think he believes what he is saying. I just think what he is saying is implausible and not going to come to fruition. So that's why I'm short. I actually maybe should have left myself a little bit of a bigger time horizon on these, but I have no faith in this company. Gaps like to get filled. There's been no tangible change in valuation since the buyout. Just excitement that things could be different and people being excited to pick up a penny stock. And when these buyouts happen on penny stocks, I always just think you get a little bit of extra undeserved pop just because it's a penny stock. Somebody's sitting there, scrolling through CNBC or whatever, sees that BuzzFeed got bought out, and then they're like, oh, well, this is a $1 stock. Let me take a shot. I'll buy 50 shares of this. And I think that sort of sentiment permeates a little bit and can drive things higher than they deserve. So I think that the initial rally up to over 2 and then the sink back down to 150 where we're at now is sort of due to that. Just people, scalping that to the upside, cheap stock, grabbing a bunch of shares and then getting back out. And now we have stability at this level, and I'm just waiting for the collapse back below it.
No, I love it. Not a big BuzzFeed stand either. So we'll watch its demise.
I used it in their prime when you could you could say take a quiz on what movies you've watched, learn what kind of fruit you are or whatever. That was all good stuff. I liked BuzzFeed Unsolved back in the day. Shout out to Ryan and Shane. Watch Your Entertainment now. I still keep up with them. But yeah, I think everything good about this company is gone, and I don't. It's the we can compete with YouTube thing that really puts me off. What does that mean? Well, I don't think you can. This is my challenge to you, BuzzFeed. Show me you can compete with YouTube. I don't believe that you can. I'm happy to be short.
Yeah. Agreed. Maybe he's speaking to some investors. Got to keep them excited, looking forward to what's to come. I mean, they get very strategic in terms of what they say on some of these things. So I mean, AI when it doesn't add up, there's usually a different message being spoken.
It sounds like it's a joke that we make all the time, where he just buys it and says AI, and then it goes up 200%. It's like, why? Like, did he actually say anything just now?
If it ain't broke,
it's true. It's true. Unpatched. They have not patched it yet.
Not at all.
I keep getting jump scared by this corn position I have. I keep forgetting that I put this on. It was like an afterthought on air some time ago. I got long corn, but it's working. Corn has taken a slight move up since I put this on. Initially, in the 3 days immediately following this position, it got right back to over 17. I have a 16-17 short put spread here. Initially, it got right back to over 17, and I was like, I'm a commodities trader. Get me in the field. We're
a new tractor.
I'm going to flip this up. Kind of sank back to below 17 now, but I do think a recovery is imminent. This is more of a pure technical analysis play than I would usually like to get involved with, and particularly with a commodity where technical analysis matters less than anywhere else, in my opinion. But I think that any old schmuck like myself can just open up the charts here and see that we haven't been below 1650 in years and years and years, and assume that this is a fair spot to buy. So never great to fly as blind as I'm flying on this one, but I do think it's going to work out for me. I have 58 days left on that one.
There we go. And I've definitely seen a lot of volatility in these corn products right now too. I think these don't get a lot of love most of the time, so it's always nice to bring it back.
Yeah, it's my favorite ticker. You know, I got to do one trade on corn a year. They took cow from me, or maybe it was cows. They took my other favorite ag ETF. So I have to provide some liquidity to the one that still exists.
Keep it alive.
Yeah, we can't let these fun tickers die. Everyone's excited about the NASA ticker. Ooh, big fancy new whatever. Corn. I love it.
Corn. Got to stick to the basics sometimes. No, I mean, as this market continues, just looking at here, how we're kind of flat on the day right now. We're up just a little bit in some change. I mean, if we zoom into a smaller time frame, we can get a better idea on how we kind of just been chopping around mostly for the day. Really have no decisive direction in terms of what the market wants to do. This morning, we popped to the upside. We put in some new lows, a little bit of lower lows. We took out yesterday's previous low. We continue to rally to the highs. And then once again, we're sitting right smack in the middle of that range. So for a scalper, maybe some opportunities you can take advantage of, some smaller opportunities. But in terms of being a little bit more of a directional trader for the day, the market hasn't made any decisive decisions. So I know for me, at least, I'm going to be sitting on my hands.
Has it made any indecisive decisions?
Made a lot of indecisive decisions. And I mean, it took back a little bit of our profit for the day. Again, we got to scalp out, I guess, $36 out of the micro NASDAQ today. But after we reversed that entire position, I was like, I have no read on the market personally. I'm going to stay a little bit hands off until we can make a little bit more confident and convicted decisions. I'll put it that way. But no, whenever we do get another sell-off towards these lows, we're going to be looking to take off this put contract that we had put on yesterday. And then we're going to go ahead and leave on that out of the money call spread that we had sold, which we'll most likely be managing by the end of this week. And once again, if you want to check out these trades Gus and I have been putting on, go ahead and follow us on the Follow Trader page on the platform. You can keep up with some of the things that we have going on here, especially managing that SpaceX position. I know SpaceX is like beating a dead horse right now, but the volatility is definitely there.
Yeah. Remind me exactly what you did in SpaceX.
SpaceX, I bought a call that expires July 17th for the short term, for whenever we just get that directional movement, which you could argue could have took off yesterday. We were up a couple $100 and maybe just let the put spread ride a little bit longer, depending on what it wants to do. But we bought the call and then we sold an out of the money put spread. That one expires in about 58 days, just $5 wide. We collected, I think, just a little bit over a third of the width on that one.
I see. It's that time of year where the expiration cycles line up such that I have to remind everybody that July 17th is the calendar emoji in your phone. If you find yourself doing the July 17th expiration, they have an emoji for that specifically if you're posting about it. I recall now. I'm on the July 24th. I went just slightly longer than you, 162.5, 165 short put spread there, and then laddered in with a 190-200 at 358 DTE June 17th of next year. I got a short-term bull thesis and a long-term bull thesis. I don't have the bear thesis for you. If you want somebody to be bearish about SpaceX, look somewhere else. I don't know. Maybe one of these guys behind us can tell you about it. But yeah, beyond that, I don't know. Not a whole lot of action. Just management for me. I got those two new positions that I put on yesterday. That I posted both of those in the follow feed, as Errol said, for anybody interested. I'm kind of just tracking from there.
Yeah, no, absolutely. I'll pretty much be in the same boat. Again, we got oil, indices, and SpaceX thrown in a bone. Got a little bit of a mixed bag for the day, if you will.
Can I get somebody? Let me know. Is there a market on like Polymarket, Kalshi somewhere where I can bet on how long it takes SpaceX to be added to a major major index? I suppose is the singular form of that. Somebody let me know. I am curious. Yes, I have a broader market question for you here as we begin to wind things down. Do you think that this drawdown that we're in right now takes us down below like 28,500 on NASDAQ? Like, do you think we take out the local lows here? Is that what's happening? We run out of steam?
Let's go ahead and zoom out a little bit over here as we take a look at NASDAQ. So I know we have some lows over here on NASDAQ at about 28,630. You were saying 25,000?
No, I was saying 28.5.
Oh, 28.5, 28.5. Yeah. I do. I am bearish below there. And these positions are kind of reflecting that bias right now. But I mean, I think we're at a pretty pinnacle moment right now. I mean, we had a pretty big sell-off in the overall market yesterday, but 1,000 points to the downside. As you can see, if I zoom in a little bit more here, we almost have a doji candle, just letting us know that we're pretty much still trading at the open price. So I think today is going to really set the tone for the rest of the week. And I think Thursday and Friday will give a little bit of a more conclusive idea on what you might want to do with some of those positions. So with that being said, if we continue to sell off lower and if we get below today's price, I'll most likely hold those short deltas a little bit lower and then probably manage and get out and reposition if we continue to trade higher.
Yeah, I fear that we may be entering a similar holding pattern to what we saw from like October to March, where we start to test these levels at SPX levels. Always a little bit more intuitive to me. I don't really know why, but yeah, I think we get in this range here. I think it's going to be a range bound couple of months. It's sort of my prediction. That's how this feels to me. We've had firm rejection off 7,600 2 times now. Weren't even able to get back and test 7,600 the second time, to be more exact. This feels like channel action to me. It feels like we've gotten the move up over 7,500, and we're going to be content chilling at these levels for a little while. So we'll see how things pan out. I still have slight long bias in my portfolio, but that's the trajectory I think that we're on.
I would absolutely love a sideways market. I feel like we haven't seen that in a long time. It's usually just in one direction. So, I mean, if we started to chop around in a larger range, I mean, that would be, especially shorter term traders like dream. And the overall market usually doesn't provide that. If you've been a bull, you've definitely been paid very well lately. And if you haven't been, you've either lost a little bit or you've been having to manage for the most part on this way up. So with that being said, anything else going to be top of mind before you wrap for the day?
No, that's everything that I got.
Awesome. One of these days, we need to have a dope handshake where we don't even look at it.
You're right. We got to work on that. We'll workshop that. We'll get in the lab.
Absolutely. With that being said, guys, thanks for joining us today. Be sure to stay tuned for more amazing content coming up next, and we'll catch you guys next time. Peace.
Welcome to Trading Trends. I'm Ilya Spivak, head of Global Macro here at tastylive, joined by who I think is perhaps only our second repeat guest here on the show. Rick Rule is once again with us. He's the founder and CEO of Rule Investment Media. Rick, welcome back.
Pleasure to be back with you. Thank you.
Rick, I've saved all kinds of hard questions for you since our last conversation, and I want to go right to the dollar and gold, which we explained last time, how it has been that since the beginning of this war in Iran, we've had, of course, an inflation scare, and against that backdrop, interest rates have come up. And so, contrary to what people might have thought, episodically, the dollar is up because there's been a reach for liquidity and higher rates, and gold is down because things have sold it to gain that liquidity and gain exposure to those rates. I want to keep that conversation going. Obviously, this inflation scare is now impacting the broad range of markets. We're seeing it in stocks. We're seeing it in all manner of asset classes. And I wanted to see if in your mind this is an input into the larger gold conversation. Obviously, people have looked at gold as something of a value hedge against fiat currencies being hampered by tremendous levels of debt across most large governments, not just the US, certainly, and not just Europe, certainly. And so I wonder if this kind of inflation in your mind, in that it inflates the debt away to some extent, if that hurts the long-term case or changes the long-term case in any way for gold and precious metals and kind of physical value as a counter to fiat in general.
I think a study of history would suggest that fear of the decline, or in certain cases the decimation, of purchasing power held in fiat instruments has been responsible for most gold moves over the last 1,000 years. People attribute all kinds of attributes to gold. What one finds is that, as an example, other forms of fear, war, political unrest, things like that, have a near-term impact on gold, but they seem to have a negligible long-term impact on gold, except sometimes for participants like refugees, the Jewish community, the Vietnamese community. Those people had a different use for gold. It wasn't speculative. It wasn't investment. It was survival. But for most people, in less dire circumstance, the primary motivation for gold is to shield one's savings from the depreciation in the purchasing power of the currency. It's important to note, as a student of fairly recent history, that is to say my lifetime, that reaction to inflation takes place over longer periods of time. As a very young man, I began to notice and become interested in inflation literally in high school. In 1968, I began reading what are now regarded as Austrian economics or hard money books. And I would suggest to you that although inflation was a topic on people's minds, that the investing public didn't really begin to react to incipient inflation till 1972. In other words, there was a hiatus between the point in time when academics and politicians described inflation and the time that people began to react to it. During that 5-year period, as an example, a hamburger at McDonald's went from 20 cents to $1. By the next year, with the Arab oil embargo, the price of gasoline went from 25 cents to $1. In 1968, 1969, 1970, despite the fact that we were undergoing inflation, investors' expectations of the future were set by their experience in the immediate past. And the 1950s and 1960s have been very good times. People were extremely optimistic. You're probably too young, but your older listeners will remember things like the Nifty 50, which is to say high growth stocks that did extraordinarily well. When your anticipation of the future is set by your experience in the past, and your experience in the past 2 decades is rosy, you don't react to negative stimulus as well. So it took probably 5 years for the population to react to incipient inflation. And I think the same circumstance is happening today. Exactly the same circumstance. We have lived through what I believe is the most benign economic climate in human history in the period 1982 to 2022. People's expectation of the future is set by their experience in the past, by the dips. Believe government inflation numbers like the CPI. If you believe in the CPI and you believe that the destruction of your purchasing power is clipping along at 2.5 or 2.6%, then current interest rates seem very adequate. You know, the 10 years yielding 4.4, you're getting over 100 basis points in real yield if you happen to believe in the CPI. My problem is I don't. I believe that the CPI is better characterized by Mike Maloney as the CP lie. I believe that the deterioration in the purchasing power of the U.S. dollar, marked by the basket of goods and services that I consume, suggests that the destruction of my purchasing power is proceeding along at an 8 or 9 or 10% clip. That presents a very different picture. If you're making 4.4 in a currency that's losing value at, say, 9, you aren't making 4.4. You're losing 4.5. It is when that realization becomes more widespread that gold really performs. Gold is viewed by many people right now, after a 50-year hiatus, as an investment class or a speculative class. I would argue that 1,000 years of human history teaches us that gold is a liquidity class or an insurance class. And right now, people don't feel the need for insurance. My suspicion is, unfortunately, that feeling will change.
Well, I think you make a very clear distinction there, and it echoes what we talked about last time as well, that when we say that the dollar is set to underperform, we're not talking about underperforming against other fiat currencies. No. We're talking about underperformance against hard assets and fiat currencies as a grouping underperforming against hard assets. And typically that conversation is presented as, oh, well, governments will try to inflate away this debt, but we don't need them to try. We have the inflation here. And so I think the next kind of natural question is, well, gold is having a bit of a hangover here after an incredible rally last year. One thing you've talked about recently that hasn't been caught up in this macro narrative is uranium as another kind of vehicle for sort of expressing a view on physical assets and the kind of value storage that is. Break that down. What's the conversation with uranium?
Well, I need to start by saying in most commodities, the easy money has been made. The easy money occurs when a commodity goes from being hated. It doesn't need to go to being loved. It just needs to go to being unhated. When uranium was at $20 a pound, although it took the industry $40 a pound to make it, so the price had to go up, it was a hated commodity. The move from $20 a pound to $85 a pound means that the easy money in uranium has been made. It also means, however, I think looking forward, that the sure money is in front of us. Why do I say that? Well, for several reasons. The most obvious reasons is that the world needs more power of all kinds. All kinds. Global power demands, global energy demands, are set to double by 2050, and we don't have the capacity to produce that much energy. We just don't have that much. Energy will be rationed by price. Nuclear power is extraordinarily reliable baseload power, and importantly, in today's political discussion, it's baseload power that doesn't generate carbon. It isn't the same as burning coal and burning oil. Uranium has, in 5 short years, gone from being a pariah to being a politically correct commodity, which amuses me greatly, frankly. The thing that's really changed with uranium, though, Ilya, was and is the conflict in the Gulf. It has been 50 years since the world cared about energy security. If you dial all the way back to 1973 and the Arab oil embargo, that form of energy insecurity stimulated, as an example, the French to build what is now the 4th largest nuclear fleet in the world. It stimulated the Japanese to build the 3rd largest nuclear fleet in the world. The impetus for that was energy security. Energy security ceased to be a concern for 50 years, but is suddenly a very relevant concern. Uranium is the only fuel on Earth that has enough energy density that the Japanese, as an example, could, if they had sufficient reactor capacity, store enough uranium to power the entire country for 5 years in one uranium storage facility. You can't store that much oil or that much coal or that much natural gas. You can't build that big a battery. The only material that can give energy-short nations, Korea, Japan, China, for that matter, Taiwan, Singapore, energy security is nuclear. The only one. And the big thinkers of the world are beginning to come to understand that. And I think ordinary citizens are beginning to understand it too. That's very important. We are right now producing less uranium than we consume. And 2 things are impacting demand. One is that the Japanese are now speeding up in earnest the restart of the plants that were closed as a consequence of Fukushima. This isn't demand that's going to occur 10 years from now. This is demand that's going to occur 10 months from now. A very different circumstance with regards to pricing. It also is part of a broader trend to nuclear plant construction. Even nations that forswore nuclear, in particular Germany and the United States, are learning that if they are to fund their existing economies, never mind data centers, that they need reliable, inexpensive baseload power, and their voters would prefer that power to be non-carbon generating. I would suggest that the biggest unsung beneficiary, if there is ever beneficiaries of a war, would be uranium with regards to the Gulf conflict. People think of oil, they think of gas, they think of nitrogen, nitrogenous fertilizer, sulfur, helium, all things that move through the Straits of Hormuz. They don't think about the geopolitical attractiveness of a form of energy that gives a country energy security. And there is no other form of energy that gives a country energy security.
Well, I think that's a really important insight here. It's sort of the next step in the conversation where you say, okay, well, today it's a story about a bottleneck, but a year from now, 2 years from now, 3 years from now, there will be some kind of resolution of this bottleneck this way or that, but countries will have learned that they live in a different world now. I think you made the point last time we spoke that the 40 years that were there sort of through the Volcker disinflation almost right up to COVID is a very different period than what we're entering now. Certainly deglobalization and inflation and thinking about kind of the dissolution of U.S. enforced norms would suggest that countries need to start thinking about things like energy security in these kinds of terms. In expressing a view on uranium, because I think, obviously with gold it's easy. There's any number of ways you can gain exposure, from physical to ETFs to futures. Same thing for silver. What's the vehicle for exposure to uranium in your mind?
There are several. I think for most people, the lowest risk exposure to uranium is to buy something called the Sprott Physical Uranium Trust. Note here conflicts of interest. I'm the largest shareholder of the manager. I'm not an officer. I'm not a director. I'm not an employee. I'm just a beneficiary. The Sprott Physical Uranium Trust is a deposit receipt representing physical ownership of uranium at 4 facilities worldwide. Uranium is one of those commodities that one is well advised not to try to buy and store at home for fairly obvious reasons. So the best form of physical ownership is, in fact, certificated ownership, and by far the most liquid of those vehicles is the Sprott Physical Trust. If someone wants to take a bit of operational risk, I would suggest that the highest quality uranium producer in the world is the Canadian domiciled Cameco, the symbol CCJ on the New York Stock Exchange and the Toronto Stock Exchange for your Canadian listeners. Highly liquid, really a full cycle uranium shop, all the way from producing uranium to enriching uranium to, by now in its engineering group, building uranium mines and processing facilities for others and generating power. The third that people might want to look at is Kazatomprom, which is the largest uranium producer in the world, formerly a large position of mine. I've sold my stock because of middle management defections. Middle management defections that I didn't understand. And I have a hard and fast rule. If there's a risk I don't understand, I sell the stock. There are also a range of uranium speculations, but I'd prefer not to talk to your viewers about those. They require a lot of work to be a responsible holder. And I've found with 50 years of experience that many audiences love the name but aren't prepared to do the work to prepare themselves to own the name. So we're going to leave the speculative ones aside, I think.
And that is perfect. How do you feel about an ETF like URA and sort of ETF type exposure?
For a lot of people, it's probably appropriate. I'm old school. The idea that somebody, including my former employer, Sprott, constructs an index that has probably 50% of the stocks in it being stocks I wouldn't otherwise own. The idea that I have to pay somebody a fee to construct a portfolio that I normally wouldn't own for free is problematic to me. I realize that most of your listeners have lives. They have kids or grandkids. They like to garden. They like to read. They like to do things with their life other than study uranium juniors. And for them, the ETF is probably appropriate, if inelegant.
And there we have it, folks. Rick, I have, of course, 1,000 more questions for you, but we're just going to have you back to get to those. Tell the good folks where they can get more from you.
I'll give them incentive. Anybody who cares what I have to say about natural resources and wants to personalize it, including, by the way, uranium juniors, can go to my website, ruralinvestmentmedia.com. There, if you list the natural resource stocks that you own, I will personally review that portfolio and rank it 1 to 10, 1 being best, 10 being worst. And I'll comment on individual issues if I think my comments have any value. Please, as a sidebar, I know yours is a trading community, no crypto, no tech stocks, natural resource stocks only. The other thing I would suggest to your audience is if you care about natural resources, a conference which I personally believe is the finest natural resource conference on the planet takes place July 6 through 10. Not surprisingly, it's called the RULE, Natural Resources Investment Symposium. If you go to rulesymposium.com, you can learn more. The physical conference is sold out, but you can, if you wish, attend the conference from the comfort and convenience of your own home via live stream, rulesymposium.com. By the way, ours is the only conference I know of, live or otherwise, that has an unconditional money-back guarantee. If you attend the conference and think for any reason whatsoever, you being the sole judge, that we didn't deliver full value for your money, email me. I'll give you your money back. Nobody else I know in investor education maintains ironclad money-back guarantee. We've done it for 30 years now. I'm delighted to say we've had to refund about 0.1% of the tuitions that we've charged over 30 years, but that guarantee is your guarantee that we're confident our content at rulesymposium.com can make you money.
And there you have it, folks. If that doesn't explain why Rick is here explaining things to us, well, go check that stuff out and you'll find out too. Thank you, Rick.
Always a pleasure, Eli. Thank you.
Welcome back to Signal versus Noise, where we take a look at the options tape and ask the question, is there any unusual activity that's worth discussing and maybe even trading around? Today's names are two trades, both hitting close to the close yesterday, but with very different messages. The first one is Tesla, ticker TSLA, which is tied directly to the SpaceX IPO, set to open around 175 perhaps here. That has not yet started trading at the time of this recording. The second ticker is Meta, which may be the AI name that the market has not yet fully repriced. But let's start with Tesla here, currently trading around $394 a share. Someone bought the Tesla June 18th 432.5 call, 6 days to expiration. Tesla was trading around $399 when the trade hit. The strike was about 8% out of the money. Premium was $3.31 million, and the volume was 14,263 contracts. The open interest jumped by 5,389 contracts in a single session. That's a 202% increase. So this is not a quiet repositioning. It's not someone taking a little dip of a toe into the water. This is a big call sweep done into the close 1 day ahead of the SpaceX IPO. And that timing tells you a lot about the trader's intentions here. SpaceX is being listed today under the ticker SPCX. The IPO price is $135 a share. Reporting ahead of time says it may trade closer to 171, 175 around the open, which would be roughly 27 to 30% above that IPO price. And in doing so, the company would be raising, well, that $75 billion that it was seeking, making it the largest IPO ever. The demand behind the scenes is reportedly $350 billion. The book is about 4.5 times oversubscribed. No wonder we're looking at a potential pop at the IPO, at the open. So it's not just another trade here, right? Tesla is coming in the context of this Musk halo effect. Tesla owns SpaceX exposure through its AI conversion, the XAI conversion, with the FTC approved on March 11th. So if SpaceX rips on the debut, the Musk halo effect can spill directly over into these Tesla shares. That is your bull case here. SpaceX opens strong. The retail demand is enormous against a tiny float, roughly 3 to 4% of the shares, and traders start treating Tesla as part of the broader Elon Musk ecosystem once more. The call buyer is making a bet here that a successful SpaceX debut lifts Tesla quickly. It's going to happen within the 6-day expiration window. There's no time for a slow-moving story. This is a bet that things will work out well, and they're going to work out well very, very quickly. There's a little bit more of a piece here. The institutional side, JP Morgan just upgraded its Tesla coverage from underweight to neutral and raised its target from 445 to 475, excuse me. But that's a massive reset from a major bank right before the SpaceX IPO. And the target is now sitting above the call strike in this sweep here. So the tape is giving us the trade. We have a catalyst right now, and we have a sell side upgrade all at once. Now, the risk here is obvious, perhaps. For those that were following the SpaceX IPO roadshow, there were some detractors that popped up along the way. Morningstar, which is seen as a fairly neutral rating agency, said that the fair value for SpaceX is closer to $63 per share. So if it comes in at 71, 71, there's a massive gap between enthusiasm and perhaps fundamental value. But it's an Elon Musk company. Jim Cramer pointed out that SpaceX could soar to unsustainable levels after the debut, which may be a pretty honest description. The float being only 3 to 4% matters a lot here. The founder lockup being 366 days matters a lot here. The index rules, particularly for the NASDAQ, could start to force passive buying within the next 15 days. This structure might make for a massive first day move, and it can create a market where price gets distorted fairly quickly, especially through second order effects like Tesla as a proxy bet on SpaceX itself. So while the SpaceX play here through a Tesla call sweep is fairly clean, it is the halo effect trade. If the IPO opens up strong, if market goes full Musk again, then Tesla's going to catch a fast bid. If the SpaceX absorbs capital away from Tesla, the halo effect may just become competition. But right now, all signs are pointing in the right direction. So maybe there's some signal within this particular trade. There is another trade, though, and that goes through Meta. There were two Meta call trades that went across our screen here. The first, August 21st, 6:30 call, 70 days to expiration. The stock trading around 560 at the time. The strike is 11% out of the money. The premium is about 4.09 million spread across 2,066 contracts. And then you have the July 31st 640 calls that hit the tape here. The strike's about 13% out of the money. The premium 1.14 million spent across 854 contracts. The open interest on that line was 0 before this trade, and now everything that you see here is entirely new positioning. So the combined bet is about 5.23 million in bullish Meta calls. And unlike Tesla, there's no real IPO halo trade effect going on here. This is a simple, the market has misunderstood Meta's business model. It is undervalued. This is a re-rating trade, which may be a little bit less speculative, as it were. Meta trading around 568 is about 29% below its all-time highs established near 796. Meanwhile, the business is still printing the enormous numbers that you would think would be accretive to higher share prices. Q1 revenue is $55.5 billion, 20% higher year over year. That beat by roughly $900 million. Operating margin is 41%. Cash levels, $81 billion. The AI numbers are starting to perk up too. Meta has 1 billion monthly active users. Llama has 1.2 billion downloads right now. Even Threads, which I'm not a Threads user, it still has 450 million active users on a single monthly basis, which has actually surpassed X. That was surprising for me to learn. Ray-Ban Meta sold 7 million pairs in 2025, up from the 2 million total in 23 and 24 combined. WhatsApp business messaging is now up 74%. So right now we have an interesting setup here. It's the AI infrastructure companies, the ones that are selling the shovels that are being rewarded. Those that are buying the shovels, the service layer on top of it all, they've been punished because it's costing a lot of money to actually build the build out. But consider it right now. Meta has one of the largest AI distribution networks in the entire world, and the market does not talk about it as it does in the same way as an NVIDIA, Marvell, or even a Google, because it's not a hardware company just yet. Meta is an AI company that no one is actually calling an AI company here, and yeah, they deserve to be dunked on after the metaverse and all. But this is perhaps what the call buyer's seeing. They're seeing the future where we start moving away from the bottleneck and we start looking at the actual applications. This is a company with over $200 billion in revenue, 41% operating margins, more than 1 billion AI users, and the stock is still 29% below its highs. The trade that we're seeing here in Meta is a bet that we're not going to get back to those highs, but we can make a significant leap towards there over this next, say, 70-day window, 49 to 71-day window here. And that's where the signal versus noise trade today gets interesting. The Tesla side of this, prospect of trades here, these are event-driven trades. These are binary event risk trades. They are hoping for SpaceX to come in with a bang, that the largest IPO in history lights up the board and the Musk halo effect continues to work its magic. But the meta signal is that there's going to be a shift in the theme around AI, that the market is going to get past this recent bottleneck phase around memory chips, and we'll call it hardware with Dell and Hewlett-Packard performing fairly strong in recent sessions. We see there's a little bit of a divergence right now in the expression here, but both may be true. I'm curious how the chat is handling the SpaceX IPO. Our very own Tim Knight tried getting in for 1,000 shares, was only allocated, I believe, 24. Were you successful in getting on in SpaceX? Let us know below. This has been another episode of Signal versus Noise. You've been watching Tasty Live. Like and subscribe for more videos. Welcome back to Signal versus Noise, where we take a look at unusual activity on the options tape and ask the question, is there something real going on here, or are people just speculating? You know, Jermal, today's episode, we're going to go with a little bit of a twist on that framing. Sometimes when someone says you should sell your kidneys before you sell your Bitcoin, and then they go and sell the Bitcoin before they sell their kidneys, it makes you wonder about the kind of conviction that's remaining in the market. And that's bringing us to MicroStrategy and Michael Saylor today, because Michael Saylor, the man who said, sell your kidneys, he's still walking around with two of them, as it were. At least that's as far as I know here on this Thursday, June 4th. Before people start throwing tomatoes at the screen for my tacky jokes, let's consider how much they've sold here. 32. Oh, no, that's right. 32, not 32,000. They only sold 32 Bitcoin, roughly $2.5 million worth between May 26th and May 31st. So, okay. The size doesn't matter here. This is a bit of a narrative break, if you will. Bitcoin's been getting hammered this week. What's going on here?
Look, this is really kind of more about what's going on with Bitcoin and what it's turning into. I mean, it used to be this never say die product that you just held on to for life, right? And now it's become more like a treasury asset, it would seem. And the real big story here, Chris, is what did they sell for, right? And in this case, they sold to satisfy some obligations. So I think that's the real thing about it. It's not the size, it's what did they sell for? And this is something we're going to continue to see in the future. And so as a result, obviously the stock is taking a huge hit. I mean, it's taken a huge hit over the last year and change anyway, but it's even taken more of a hit more recently as a result of this news. And we've seen some options activity. We've seen, I think of all of them, the most interesting is further out, but there's some options activity that went down in the June 18th expiration. They bought the 131 puts. And again, honestly, open interest didn't change a whole lot on many of these trades, but nevertheless, they bought some options in the June 18th expiration. They bought some nearer term options in the June 12th expiration, bought the 128 puts. So both of those are around strike. But then, Chris, the big trade that happened was further out in October expiration on the 50 strike. The 50 strike. I mean, you can see the stock is trading $131 right now. They bought on the 50 strike, and that I think is the one that stands out the most. But nevertheless, I mean, this is just more of a story of once upon a time, there was no chance you would expect Michael Saylor and MicroStrategy to be selling Bitcoin, and now they're selling to satisfy some obligations. And that, I think, makes people just a little bit nervous.
Strategy discloses that it sells its 32 Bitcoin at a price of roughly $77,000. And Jermal, I just want to put this in perspective here. That's absolutely microscopic. MicroStrategy owns roughly 843,000 Bitcoin. So selling a handful of them, 32 is about 38%, 0.0038% of their whole total holdings. That's, again, not anything. But there's a change in behavior. Saylor's been the flag bearer for Bitcoin accumulation over how many years now? He changed his verbiage recently where he called MicroStrategy a net accumulator moving forward. For every one Bitcoin that they sell, they're going to try to purchase 9 or 10. But that's a very different type of mindset and level of conviction than never sell or sell kidneys before you sell. And the market's starting to take notice of that right now. It's just a more bad news than what's been a pretty long crypto window here. But I think perhaps the change that we most care about as tasty traders, volatility has finally come back into the space. There's been a rapid expansion of volatility, which is pushing around these option prices in recent sessions.
Well, there was sort of this romantic idea in a way, right? It's almost like what we experienced for the last, what seemingly 100 years with Warren Buffett. I mean, this idea that you're buying something and you're holding on to it forever. And I think as much as people have loved to make fun of Michael Saylor, they appreciated that idea that you're going to buy something and hold on forever, no matter what. And now I think it almost seems more like that MicroStrategy is becoming more like a managed Bitcoin fund, if anything. And maybe this is going to be something, albeit not all the time, that we see every so often that they sell for various different reasons, because that's kind of how funds work from time to time.
And you're right. MicroStrategy is effectively a leveraged Bitcoin company. They've spent about $64 billion accumulating Bitcoin. That's worth roughly $53 billion mark to market. So that's an $11 billion deficit right now. And when you think about the preferred dividends, the financial obligations, and the capital market dependence to keep the whole game going, you're really starting to stand on stilts here. So the liabilities, once they're factored into this equation, the never sell mantra that Michael Saylor has held, it runs into the gravity of the cash flow obligations that they have to the outside world. So Jermal, I'm curious what the audience thinks here. Is this signal? Is this noise? Is MicroStrategy a sign of the times? Is this the end of it all for Bitcoin as we dip below 65K? Let us know in the comments below. Thanks for watching Tasty Live. Like and subscribe for more videos.
What's up, everyone? Mike here from Tasty Live, and we're coming at you with another episode of Options in Action. If you've missed this series, it's basically a new series where I take an old whiteboard concept or maybe a strategy that I talked about previously and bring it into an advanced light. We take a look at the platform and we talk through the practical application of some of these concepts. We're going to go through the entire YouTube playlist, the old whiteboard series. So we have talked about call options, put options. We've talked about premium. We've talked about strike prices and expirations, you name it. And today we're talking about the age-old question: can you make more money trading short premium, or can you make more money trading long premium? And what are the gimmies and gotchas, as Dr. Jim says? What are the trade-offs with selling premium versus buying premium? We're going to take a look today, and we'll break it down on this edition of Options in Action. So we got this SPX chart pulled up here, and this is not the SPX stock or index chart. It is actually a chart of a long call out in December, the 8,300 strike to be specific. You can see here SPX at the top is trading at 7,300. So we're looking at this call option 1,000 points out of the money to the upside. And this is the December cycle. So before we dive into this and before I start spewing nonsense, I just wanted to say, when you're selling premium, there's a difference between selling premium in the S&P 500 products like SPX or MES or XSP or SPY. There's a big difference between selling premium in those sorts of products versus selling premium in the equity space, right? S&P 500 or other indices, even products like SMH that have moved quite aggressively with the tech sector popping off and selling off at the same time, there's things to consider, right? Short premium in the S&P 500, I've said this before, I think if you can trade successfully short premium on both sides of a market in an equity, you can definitely do that in the S&P 500 simply because the S&P 500 moves less. It doesn't have the same binary events. It doesn't have the same binary nature of equities. You could have a CEO step down and the stock price be down 20% pre-market or after the market closes, or the opposite can happen. They can announce something that the market likes, and that stock is up or down 20% when the options market is closed. It's not necessarily going to happen in the S&P 500. There's also market stops. Even if there is a big crash in the S&P, there's certain levels where the market stops trading. That doesn't necessarily help you in the case of not taking on risk when it comes to short premium. If we're talking like short puts, for example, into a market move like this, or even strangles. But what I will say is over the years, I've learned that there's a time and place for all strategies, right? I have long premium strategies where I'm buying options. It's a lower probability trade if you're holding trades to expiration, but I like to say if you're buying options, you get what you pay for. I don't really buy options that are near term. I don't buy 0-day options. I don't buy 7-day options. In my mind, you're buying a lot of implied volatility in those cases, and it becomes just that much harder to be profitable on those strategies because you have this super decaying asset that is, if it moves against you directionally, it's basically going to become worthless, and it becomes that much harder for it to reverse and work in your favor. If you're buying a leap option, though, totally different story. Leap options cost a lot of money. You get what you pay for when it comes to long premium. But I think when you're buying premium, it doesn't necessarily have to be a naked option. It can be. I actually have a position on in Nike right now. I bought a leap option out at the 60 strike all the way out almost 600 days away, January of 2028. So this was a situation where, Nike drops to multi-year lows. We're talking decade lows. This Nike hasn't been 45, at least around this price point, since 2015, if I'm not mistaken. So the further a price falls, especially in a product like Nike, where I think we'll still see some upside potential there, yes, I could sell a put to collect that premium. But at the same time, Nike's already fallen, and it's still down at 40. If I sell a put 16 days away for $100, sure, I could sell that. It's a higher probability trade. You can see my probability of profit is nice and high at 66%. But I take on the undefined risk nature of Nike, where maybe they announce something, the stock's not down another 10 points, and now all of a sudden I have a $900 loss on my hands and not much management in terms of what I can do. It also takes a decent amount of buying power, $800 relative to a $40 stock. So for me, instead of selling a put, especially when a product like Nike or any other equity gets to multi-year lows or decade lows, I'd rather just inventory some long-term premium. And you can see here, the further out in time you go, because you're avoiding the implied volatility increase of something like an earnings announcement, something I mentioned earlier, you've got plenty of implied volatility here in the near-term cycles that isn't necessarily reflective of these long-term cycles, right? Look at this expected move for June 30th. You have a plus minus $4.60 implied move with a 60% IV almost, but you look at January of 2028 and it's only a 17-point implied move, and that's because the implied volatility is significantly lower when you get all the way out here on the curve. So will I be trading Nike? Will I be selling premium in Nike around the earnings announcement in a defined risk way? Absolutely. Like I said, there's a time and place for everything. I think for Nike with the upcoming earnings, I'll probably sell something in this 22-day cycle, but I'm going to buy something in July or August. I likely will go to something like a diagonal spread or calendar spread in that sense, because I still want to trade intelligently. I still want to reduce cost basis, which has always been something that we've said here on Tasty Live. I want to make sure that I am reducing my cost basis and improving my probability of success anywhere I can. So in this case, if Nike's offering super high premium to sell something against even a long option I'm buying, whether it be a calendar spread or diagonal spread, we can look at this here, like the 45 strike in July, trading for $2.50, we'll call it. The 45 strike in July 2nd, look at that. You have 2 weeks of a difference in time, but only a 40-cent difference in the option prices. I'm absolutely going to be selling something against that long option that I buy if I'm bullish, and same thing if I'm bearish. But longer term, Nike's down to 10-year lows. So what does that mean? It means I'm going to get really far out on the curve here and risk $500. This option hasn't really moved all that much, which is interesting. Nike's still chopped around, and this 2-year leap basically is trading for $500. My whole thesis is, would I be surprised to see Nike go from 45 back up to 50 or 55 or 60? It was just there a couple months ago. So my answer is no, I would not be surprised. And if I'm buying a leap option that has much lower implied volatility, I know, yes, it's a little bit more costly, but I'm out of the IV spike in the near term. I'm inventorying long-term delta, inventorying premium that isn't going to decay against me all that much. And if we get a move in Nike from 45 to 50 or 55 or 60, that option is going to be worth $1,000, $1,500. And we can see this here. If I right click on the option in the chart, the 60 strike, if you right click on the bid or ask, you can have this menu pop up here. View the option in the chart. And here we go. It's been trading for $500 basically ever since I bought it. But back here when Nike was at 55 and 60, this option was trading for $1,500. So from a risk reward standpoint, as a product like Nike or any other equity gets to decade lows or multi-year lows, I'm going to be inclined to lean into the long-term positioning. I did the same thing in Microsoft, right? Microsoft went from 550 down to sub 400 levels. What did I do? I was buying into some near-term stuff. We set up some short premium trades, of course, but I also did a really long-term calendar spread at the 500 strike. I bought January of 2027 and sold September of this year, and that was like a $500 trade. I was just like, well, I don't know what's going to happen in the near term, but I do feel like over the course of the year, Microsoft's going to be higher than where it is now. And that ended up being the case. We saw a nice bid, got all the way up to 460. And just looking at the order chains here, you can see I've had some decent trades up until that point. And the only trade I have left is that calendar spread in Microsoft. And it's up a couple $100 right now. If we look at the 500 strike, I bought it for $500. It's up $400 right now. So I still want to have it on. I think there's a bullish case for it. But to answer the question, selling premium versus long premium, I think when you're selling premium, you have to be able to withstand all variance within that product you're selling, right? Because from my perspective, the most success that I've had in products where I've sold premium, it's been in products where I've traded small enough or the product size was small enough to where I could manipulate the strikes, manipulate my time and expiration, or a combination of both, right? That's the beauty of undefined risk. You have the flexibility to be like, you know what? I'm done with this strike. I'm done with this expiration. I'm going to buy this back and I'm going to move it out a month. I'm going to move it out 2 months and move my strike and collect a credit still. So that is how I approach undefined risk these days. It's going to be a much higher probability of success naturally, because when you're selling premium versus buying premium, if you sell an option, you just need the stock price to stay out of the money, or in this case, above your 37.5 put. If you're buying premium, you need a directional move in the stock price, and that's as simple as that. So when you think about that, if I'm selling premium and I just need my strike to be out of the money, I'm going to be much more inclined to sell near-term premium because I know that implied volatility is higher. There's not enough time, or there's not as much time for the product to move against me in a big way. It can still happen, of course, but that 30 to 60 day window is where the implied volatility is nice and high relative to a nice blend of time value as well. So that's why we are selling premium in that window. We have research that shows that that's kind of the sweet spot of implied volatility value plus time value. So selling premium in that 30 to 60 day window. Buying premium, I prefer to be outside of that 60-day window. Honestly, I would rather buy premium in a 90-day, 100-day option cycle if it's something I can afford. In the case of Nike, I can do that in a 25K, 30K account, of course. Even smaller, you have the ability to do it because the stock price is so low. But in something like SPX, $7,300 stock price, I don't have the ability to sell premium in here. I can trade spreads in here. I can do calendar spreads, some diagonal spreads in here. But sometimes the stock price is the determining factor of your strategy. So keep all this in mind and just really make sure if you're selling premium, you need to be able to withstand the variance of any kind of move. I prefer to, if I'm selling a put or a strangle, let's talk about puts. If I'm selling a put, I would rather sell it in a product where I can just hold that premium or take the shares. I would rather not exit at 2 or 3 times the loss of that short put, because if I'm selling an undefined risk put, I kind of want to have that bullish delta anyways if it does get down there. I don't want to be stopping myself out and then 2 weeks later see that it could have moved out of the money. So that's just me. But to summarize, if you're buying options, you get what you pay for. I think in this kind of market environment, I'm always going to have something against it. Like if I'm buying a 60-day option, I want to be selling something in the 30-day cycle or maybe the weekly cycle against it. If there's an earnings announcement where that premium is really juicy and I can reduce the cost basis on my long option, because the more you can reduce the cost basis on your long option, the more flexibility you have going forward to have that long option be profitable or even a scratch. If I'm selling premium, I'm very cognizant of the fact that it is a higher probability trade. You're going to have a lot of winners when you're selling premium, but you should also understand how to manipulate that trade. With defined risk debit trades, when you're buying premium, there's not a lot of things you can do. There are certain things like with calendar spreads and diagonal spreads where you can manipulate that short option by moving the strike or moving it out in time. But with short premium, undefined risk short premium specifically, you can do a lot of different things. You have a ton of flexibility in the ability to manipulate strikes. And if you look at my order chains for the MES position, this is my year-long strategy for 2026. I've clearly manipulated this position over and over and over. And every single time I do it, I collect more credit. I started with 93 points in credit. I now have 700 points in credit overall, which means my break-evens are 700 points beyond my strikes. And this is a profitable trade because I've been selling premium to offset any kind of intrinsic value losses that might show against me. So short premium, I like to reserve it for either products that I can afford any variance in or something in like an index, like MES is a great example, or IBIT even, the Bitcoin ETF. That was my year-long trade from last year. So I think when you compartmentalize these things, it puts you in a good spot to be able to withstand variance. And again, if you have a day like today and you're like, my account is really suffering, then I think your trade size might be off. I think maybe the strategic decisions might be a little bit off. Again, we want to be able to withstand as much variance as possible. With undefined risk, I think it's got to be any variance. The trade size has to be small enough to where you can withstand any variance. It just sets you up for success in the future, and it gives you that flexibility to manipulate the trade as the markets move. And with defined risk, same story. I like to keep them within $500 to $1,000. I think that's a healthy level for me. But again, if I'm doing a diagonal spread or calendar spread, I have a plan for if things go wrong. I know I can move that short strike out in time. I know I can move that short strike up or down depending on the strategy. But yeah, let me know what you think in the comments below. That was a long-winded segment. Wasn't expecting to go that long, but hopefully that kind of mental shift helps a little bit. Again, if I'm selling undefined risk premium, it's usually in an index product or a micro futures product, and it's sector based. It's not something that's going to move 20% pre or post market. But if I am involving myself in those types of products, it's going to be in a product size that is small enough to where I can withstand any variance. I can manipulate the strikes up and down. And I think that's another interesting and important point is undefined risk trading, super high probability if you're doing out of the money sales of options, but understand what you can do to manipulate that risk profile. And that's just going to give you another leg up in the future of trading as the markets move and things go wrong for you. I mean, you're going to have your winners, you're going to have your losers, but you got to know how to manipulate and adjust those losers if they are undefined risk trades. But thanks for tuning in. Let me know what you think in the comments below. Please like this video, subscribe to the tastylive channel, and we'll see you on the next episode of Options in Action. What's up, everyone? Mike here from tastylive with another episode of Options in Action. If you've missed the previous episodes, this is a series where I'm talking about old whiteboard videos where we're looking at concepts and strategies, but we're giving it more of an advanced twang, and we're looking at the platform itself, talking about certain concepts that I'm using today and how it applies to everyday trading. We talked about expirations last time, and today I wanted to talk about letting an option expire in the money and ultimately taking shares of stock. Also, we can talk about expiration risk and assignment risk and how it's not something that I'm worried about at all. I think we can wrap those up into one and kind of just give you a nice package of ways to think about expiration and why not to be afraid of assignment risk, especially if you have defined risk spreads or an in-the-money short put or in-the-money short call, something like that. So let's dive into the tastytrade platform and we'll break it down for you. So we're looking at SPY right now. As you can see, SPY has had a massive rally from the lows of this year. In April, we were all the way down at 635-ish. Now we're sitting at 755. Just an insane run to the upside. And maybe that has resulted in the money options. So For those that don't know yet, if you have an in-the-money option, it's ultimately going to expire and turn into shares of stock. So if I have a 760 put, for example, that is in the money, I will ultimately be assigned 100 shares of SPY at 760. Same thing with the opposite side. If I have an in-the-money call, a short option that's in the money, and it is assigned or expires in the money, I will be basically have 100 short shares of stock at 750. Now, a lot of times we're not really dealing with assignment risk because we're rolling our options positions out in time. And really, assignment risk is highest when you don't have a lot of extrinsic value in your option strike. So even with a 750 call that's in the money, 15 days to go, there's still $600 of extrinsic value that somebody would be giving up to exercise this option and turn it into shares of stock. In other words, they're taking $600 and lighting it on fire. That's why I don't really worry about assignment risk, because it just doesn't happen all too often. I've been trading for over 10 years and I've been assigned maybe 3 times. 4 times maybe. And one of them was a celebration. In this case, it was literally like I had an in-the-money option that had $200 or so of extrinsic value, and I woke up the next day, I was assigned on it, I got the shares and kept that money, the extrinsic value. I closed the shares and I just resold the option, and I basically doubled my credit overnight. So that's another thing. If you are assigned early and there's plenty of extrinsic value associated with your option still, it can actually be a benefit to your position. The only situation where that would not be the case is if you had a dividend that you had to pay. So like with an in-the-money call at 730, for example, let's say SPY had a dividend of $400, there's $288 of extrinsic value here. The counterparty would give up their $280 of extrinsic value to get the $400 dividend. So in that case, it's a net positive for that counterparty. And that is the circumstance where you can get assigned early. Your options can be converted to stock early if there's a dividend where the dividend exceeds the extrinsic value left in the option. But other than that, like you can look at these options here, like this is a 715, 720 option. It's 35 points in the money and it still has $200 of extrinsic value. This is still an option that has a low assignment risk here. So not really worried about options that turn into shares of stock. What I do want to bring up is how it can actually change your risk profile for the better in a lot of cases. So yes, if you have a spread, so like let's say you've got a 755, 750 put spread, right? You're kind of teetering on this short option here. This is a defined risk trade. However, if SPY drops significantly and over time someone exercises this short put, you're still left with the long put here that protects your risk, right? Because a short put converts into 100 shares of stock. A long put represents 100 short shares of stock beyond the strike to the downside. So even if I have a short put spread and I'm assigned 100 shares of stock in SPY, if I can hold that buying power, that's the big caveat. If I can hold that buying power, that would certainly be increased relative to this $300 buying power here for this narrow spread. It actually increases my max profit substantially, potential max profit substantially. And that's because the most I can make from this spread is just the credit I received on entry. However, if SPY drops like a rock and I'm assigned on this short put and I still have this long put, as long as I have the long put, my risk profile doesn't change on that package. But I would now have 100 shares of SPY with a static delta of 100, which means if the market dropped dramatically and I get assigned on the short put, I still have the protective long here. If the market rebounds and now all of a sudden we're back at 755 and beyond, I'm making money on those 100 shares of stock where I wouldn't have been making that money on the shares, because with just this options trade, I can only make the credit received. So another situation where that makes a lot of sense is just like take the shares and just use the shares as a static delta lever is in products that are smaller priced, and maybe you've sold a put and you're trying to roll the put forward. Under Armour stands out to me because I already have 100 shares of Under Armour for this exact reason. But let's say you sold a put in these options expirations. There's not too many here, but let's just say you sold the 7.5 put or like the 10 put, you can see there's very little extrinsic value here. The deltas are super high. And if you were assigned 100 shares of stock in Under Armour, yes, you can only make the amount of the put if you sell this put. And I think that's the big key here. If you're assigned 100 shares, you now have unlimited upside potential on how much you can make if the market does recover to the upside. So the deeper in the money a short put goes, the closer it gets to 100 delta, the less extrinsic value you're going to have. So if you're thinking of rolling a deep in the money put and you're trying to roll it, let's say from July to August or something like that, and you're not picking up a lot of credit, but you have a really high delta on your short put, it actually might make sense to consider taking the shares of stock where you no longer have a option that you can only make as much as the option's worth. You would have 100 shares of stock where you can make a lot more to the upside. So that's pretty much it when it comes to options that expire in the money. I mean, again, I don't really hold things to expiration to risk that. That is one of the things that we should talk about, though. Like if you have a spread that's teetering in the money and out of the money, if you let the spread expire and you're assigned on the short put and your long put goes away, now you don't have the same risk profile. You still have the 100 shares that you're assigned on the 755, but you would no longer have the protective put down here. So something to consider, but deep in the money options that have no extrinsic value, if you take the shares instead, you have a higher max profit going forward, and you have the same risk profile as you did with the deep in the money short put or deep in the money short call. But you now have the static delta in the shares, where a short option that's deep in the money, if it starts to rise towards the at the money price, you can only make the amount of the option itself. So again, deep in the money options, close to 100 delta with no extrinsic value. In almost all cases, your max profit is higher if you just convert the shares, if you're willing to do that. If not, you'd have to manipulate the strategy and change the risk on it by rolling out in time and moving it if you can. But those options that are super far in the money are trading like stock basically anyways. So let me know what you think in the comments below. Please like this video, subscribe to the tastylive channel if you haven't already. But yeah, let me know if you've ever been affected by a short option that had a couple $100s of extrinsic left, not a dividend stock, but like maybe someone made a mistake. Maybe the counterparty made a mistake. They converted to shares. You get to keep that premium. You sold out of it again. It's only happened to me once in 10 years. So hopefully that kind of stuff happens to you guys more often. But let me know what you think in the comments below, and we'll see you on the next episode of Options in Action. DraftKings is down 40% from 2025 highs, but the business keeps improving. Q1 revenue grew 17%, sportsbook margins are expanding, and the new prediction market world is already running at a 3.1 billion annualized volume. Wall Street is overwhelmingly bullish. 29 analysts rate the stock as a strong buy, with targets as high as $52 per share. The World Cup could be the catalyst. Tournament expands from 64 to 104 matches, runs 39 days, and could generate up to $4 billion in U.S. betting handle. DraftKings is expected to process more than $1 billion of wagers alone. The stock is still trading like a company in decline. The question, is the options market pricing the biggest betting event in history, or just the 40% pullback? Let's check it out on today's episode of Options Math Check. So we've got the Tasty Trade platform pulled up here, and the DraftKings chart, as you can see, is looking a little bit better than it has recently. But when we zoom out, we can see this thing has taken a beating here. But I think what's really interesting with DraftKings is simply the fact that you constantly have high implied volatility in here. Like even the product right now, not many people are talking about it, not many people are trading it, but it still boasts a 50-60% implied volatility. They've got earnings coming up at the end of August, and I think that could be really interesting. DraftKings is one of these products where it's like when football season's going, when you listen to their conference calls for earnings announcements, they're talking about the revenue from football season and all these things. The World Cup is obviously a layup for them. They're going to be making a ton of revenue from the transactions alone, from betting. Someone in the office was just like, can I bet on DraftKings for the World Cup? And we're like, of course you can. So I think it's going to be interesting to see how the stock market reacts. specifically with DraftKings alone. But when we dive into the options here, we can see and take a look at the probabilities of being in the money on either side. And we can clearly see that there's an interesting pricing dynamic here when you look at the out of the money strikes relative to the puts and the calls. So I always like to check out just equidistant strikes to see in the near term and also the long term if there's any kind of skew here, and clearly there's a little bit of call skew. We've got a 40 cent option bid on the 25 strike, which is about 5 points out of the money to the downside, but we've got about a 50 cent bid on the upside, 5 points out of the money to the upside at 35. That's in the July cycle, doesn't account for earnings. But if we look at August, which will have the earnings cycle, and we do the same analysis, we've got a 25 strike at $1 and the 35 strike at $1.25 or $1.30. So the market's pricing in the velocity of risk to be to the upside with this call skew. And that's really what call skew is. It's just the options are more expensive compared to equidistant out of the money puts. And that tells us that the market is pricing in velocity of risk to be to the upside if we're going to see a big move. And if we look at the end of the year, December 2026, looking at these same strikes, the 25 strike, 5 points out of the money, trading for about $2.50, and the 35 trading for way more, $1 more, trading for about $3.25. So I think this is super interesting and super telling. Just the fact that the stock has been beaten up, but to the earlier point, you have increasing products, you have increasing revenues, you've got almost every state available in the U.S. For betting markets and prediction markets and whatnot. So I think when you look at all these things and you bring in the fact that we've got the World Cup, we've got football season right around the corner, I think it's only going to be good things for DraftKings. Now, that doesn't necessarily mean that the stock price is going to rally or should rally or will rally, but based on the pricing alone, we've got plenty of call skew here. We looked at 2 different options expirations. So I would say, if we're looking at bullish strategies, at the very least, we can use that call skew either in July or August or even longer term cycles. We can use the call skew to our cost basis reduction advantage by selling that option against something else. So like a call diagonal spread where you've got a short out of the money call further up the options chain, you're collecting more than if you had a bearish strategy on. And the stock's already at 29. It, of course, could go to 0. But if I'm playing for a move to 45 or 50 or 55, at the very least, we've got that call skew to help us out in terms of cost basis reduction. But let me know what you think in the comments below. Please like this video and subscribe to the tastylive YouTube channel, and we'll see you on the next episode of Options Math Check. The smart money is getting nervous. Bank of America says 7 of 10 bear market signposts just triggered, the same average seen at every market peak since 1990. The Buffett indicator, which measures the total value of the U.S. stock market as a percentage of GDP, was at 219% as of March 2026, which is 65% above the long-term trend line. Buffett himself said that when it approaches 200%, investors are playing with fire. Hit a record of 228% previously. The Shiller Cape is at 39.8%, only higher once at the .com peak. Kramer flipped cautious Monday night, warning a wave of mega IPOs, including a potential $1 trillion OpenAI deal, could drain liquidity from the rest of the market. Goldman says crowded positioning means when this unwinds, it unwinds fast. The bulls aren't dead. Morgan Stanley sees 8% upside still, and history says the 4th year of a bull market finishes positive. So who's right? A lot of conflicting information here. Let's find out on this edition of Options Math Check. So we got the SPX chart pulled up here, and like we were just mentioning, I mean, what goes up fast might come down fast, and we're kind of seeing that play out here. The E-minis went from 6,300 all the way up to 7,600 in a matter of a month and a half, and just over the past 4 days, we're seeing market moves and intraday moves that are massive here to the downside specifically. E-minis down 1.5% today, NASDAQ down 2.8%, kind of mirroring that big washout we saw on Friday. I think what's really interesting about this market, and maybe a testament to the potential bearish case, is that crude oil, the one thing we've been hanging our hat on time and time again in terms of if we see the market down, we typically see crude oil ripping higher. Crude oil is not moving to the upside. It's actually selling off today. And you parlay that with the fact that when you look at the near-term expirations in these different contracts, this is the most narrow backwardation I've seen in crude oil in quite some time. 87.95 in the front, 86.43 in the back. This thing got as wide as 15 points at the height of the war. So I think with this backwardation going away and crude oil down today, I don't think we can lean on that anymore in terms of finding a reason why the market is selling off today. And I think the fact that crude oil is down and the market is down big is a testament to this being an equity move versus a reaction in global tension. So I think that's really interesting. And when we look at SPX specifically, for the end of the year here, 200 days away, we're seeing some really interesting things play out in terms of implied volatility. We've got a $6,600 price on the 8,300 call, which is 1,000 points above the current market price with a 15% probability of being in the money. You go to the downside 1,000 points, and we've got put skew here, plenty of put skew to the downside now. You've got an option price at 6,300 that is about to eclipse $13,000 with a 21% probability of being in the money. So not only is the probability higher to the downside now, you've got more than twice the amount of premium, or almost exactly twice the amount of premium when it compares to put versus call premium. This wasn't the case about a month ago when the markets were rising higher. You saw similar pricing from the put side to the call side, and we also have to factor in the fact that SPX prices in interest rate premium on the call side. So take that for what you will, but as of right now, we are seeing put skew getting infused into this market, into the sell-off, as you might imagine, pretty sizable sell-off. Probabilities are higher to the downside now, and I think the most interesting thing here is this volatility curve. So when we had the big market rally, we saw volatility creep into the teens. We saw the VIX in the low teens. But now we're seeing the volatility curve flatten out here. Just a few days ago, we had a 2-point contango between the M and the N contract. The M contract currently sits at 2040. The N is at 2115. So it's not even a point of contango now. We are flattening out across the curve. A couple months ago, maybe a couple weeks ago, we had a 5-point contango between the near-term contract and the V contract. Now you can see it's only a 2-point contango. So this entire vol curve is flattening out. You're seeing an 8% increase in the M contract, and the VIX, I think, is the story here. Up 14%, up 3 points, up to 21.5. I think if we see this continue, another red day in the market, down 100 points or 150 points, and the NASDAQ selling off as well, with crude oil selling off, I think you could see this vol curve completely flatten out. Maybe we trickle into backwardation. And I've always said, if the vol market goes into backwardation, that is the gate that opens for a further market sell-off. I'm talking 10, 15, 20% to the downside. Until that happens, though, I'm going to be trying my best to pick my spots here to the upside, staying defined risk. But again, if this vol curve completely flattens out, or if we go into backwardation, I think that might be a sign that we could see a bigger move to the downside. There's lots of warning signs out there, like we mentioned earlier. But again, the vol curve and volatility is my crystal ball in terms of my guiding light and how I position myself. But I've always been placing some downside hedges in SPX, NDX. I actually just closed out of a couple of them today. So make sure that you're accounting for all things. Even if you're bullish, you should still have some bearish hedges on, albeit small. That's how I like to play it. But let me know what you think in the comments below. Please like this video, subscribe to the tastylive channel, and we'll see you on the next Options Math Check.
Jim Schultz here for Calculated Risk, and don't forget, before we get started, the best ways that you can help us are by liking the video or subscribing to the channel. Either one of those guys really helps us out a lot. Alright, so earnings season is here, and we all know what that means. Everybody wants in on the action. We're like, you want to get going, I want to get going, we want to trade our favorite stocks, we want to get in on the big names, use our favorite strategies, take our directional shots, and what have you. But we all know that earnings, man, it can go either direction. I mean, these events are binary in nature for a reason. There is most likely going to be a very explosive move in the stock one way or the other. And so when it comes to earnings specifically, a lot of times using a strategy that is defined risk is going to make a lot of sense. I mean, hey, you guys know, if you follow me for any length of time, you know that I don't love defined risk strategies. You know that I think there's a lot more opportunity with undefined risk strategies. But still, we have to be aware of kind of the potential quagmire that we're walking into. And so around earnings, I definitely have a greater love, at least a greater like, for defined risk strategies. So today, I want to walk through my all-time favorite defined risk strategy for earnings, the expected move butterfly. So most of the time as premium sellers, like we're trading time and we're trading volatility, right? We're selling premium, we're playing time passing, we've got the positive theta, we've got the time decay, we've got all those things working for us. Okay, that's great. We're also trading volatility. We're trading volatility's natural tendency to contract. We're trading volatility's natural kind of grind lower over time. And so these two things are non-directional in nature, and that's typically what we're hanging our hat on as a premium seller. Okay. But every once in a while, we might want to trade direction. Like every once in a while, we might want to take a bullish shot. Every once in a while, we might want to take a bearish shot. And around earnings, one of the metrics that can be really nice to kind of have an objective view of the analysis around that stock or the market at that given time or what have you is the expected move for that cycle. So looking at the expected move, using the expected move for that cycle in that stock can really give you an unbiased look at what the market is pricing in for the upside or the downside. And the really cool thing is we can use the expected move alongside the expected move butterfly to set up a really nice directional shot that's relatively cheap to play earnings and play it to the upside or the downside however we see fit. So let's hop into Tasty Trade now and let's set one of these guys up. All right, so I'm inside of my Tasty Trade platform and I picked a real doozy of a time to do an expected move butterfly around earnings because it's not really earnings season right now. And so if you go to like the Tasty default watch list, I mean, you can look at the all earnings. I was looking at this before the video, and it's like, man, we've got Len. Like Len has earnings today. Never heard of them. Right? We've got Adobe coming up maybe later today or this morning. I guess we could potentially trade Adobe. But you've got Kroger next week and JBL on ACN, and it's like, okay, this is not exactly the season for the heavy hitters. Like if I go into the Tasty default watch list and I sort by earnings just by clicking on the earnings column, you're going to see that, I mean, there aren't really any decent ones coming up that we like to trade on a regular basis until later on in July. And so really, this isn't the best possible time to do a video like this, but we are so far into it now, we can't turn back. So we're going to go ahead and still use the same basic principles of trading an expected move butterfly like in the front week around a binary event. And so that way you are ready come time July when there are more earnings opportunities. Okay, so let's use Google for the purposes of this example. Now, I may not have done a good job from a calendar standpoint in terms of the best possible time to do a video like this. However, it is a Thursday. So today is a Thursday, and oftentimes using an expected move butterfly, I'm looking to set that guy up in the front week, so using that Friday's expiration. And the reality is this: Thursday into Friday butterflies are really, really nice because with a butterfly, you want to nail the direction of move close to expiration. That's going to allow you to achieve the most profitability out of the strategy. And so by choosing an expected move butterfly on Thursday going into Friday, if you do get the move that you want, you're going to be in a situation to potentially make a decent amount of money in a pretty short amount of time on that following day's opening bell. Whereas if you did a butterfly, the previous week or even like a Monday or a Tuesday going into Friday, it's a little bit more challenging to make significant profits on the strategy because with a butterfly, you want all the extrinsic value to come out of the options. You want all the extrinsic value to drain out of the options, and butterflies oftentimes cling to their extrinsic value until the very end. And so Thursday into Friday butterflies, Wednesday into Friday butterflies using the front week are going to be my favorites. Monday into Friday and Tuesday into Friday, I'll still do them because they do give you more opportunities to make money, but you're not likely going to make that much money. Okay, so if we pretended that Google had earnings tonight, let's say, and I wanted to set up a butterfly to take advantage of that, then what I might do is, let's say I wanted to play Google to the downside. So a lot of times the way that I'm going to set up my butterfly is I want to situate my strike right around where the expected move cuts off. So this copper strip is the expected move for this cycle. So it's only a one-day cycle. The expected move obviously is only plus or minus about $5. And so if I bought a 345 and I sold a 340 and I went ahead and bought a 335 because the butterfly has to be a 1 by 2 by 1. So I go back into the center and I double that guy up. And you can see that is a very, very cheap way to take a directional shot, right? I'm only paying 90 or 91 cents for a $5 wide butterfly. And so again, very cheap way, take your directional shot. If you miss and if you're wrong, and in this case, if Google rallies, then you're only going to lose what you paid. Like you're not going to lose any more than the debit that you paid. And if we were to set this guy up on the call side, you're going to see a very, very similar setup. If I buy a 345, I sell a 350, I buy a 355, I double up on the 350, again, it's 95 cents. It's basically a symmetric market right now with Google being right around 345. And so with us kind of starting at that 345 market, we essentially have the same pricing on both sides of the market. So whether you want to play it down or up, it's effectively going to be the same risk in both trades and the same risk return dynamic. And generally speaking, what I want to do here is I want to size my butterfly such that it fits with my position sizing parameters, right? Remember, with defined risk, we want to be typically 1 to 3% of our account. Now, in this account that I'm trading here, the From Theory to Practice account, this is about a $35,000 account. So this is a very small position relative to my account size. I could easily go up a few more dollars, no problem. But generally speaking, somewhere between 1 to 3%. If you want to live on the lower end, you want to live on the higher end, that's completely up to you, of course. But generally speaking, that's going to be a pretty good range where we can live. Now, the wider you make your butterfly, the easier it's going to be to make money. That is just the truth. But of course, we've heard it before, and here it is again. For every gimme, there's got to be a gotcha. And so if I'm going to widen out my butterfly, then I'm going to have to pay more for that additional width. So for example, if I just stay on the call side here, just to make this a bit simpler, let's say I move my 345 strike down to 342.5, and I move my 355 strike up to 357.5. Look at what happens with to the debit that I pay. It's gone up to $2.32. But now I have a lot more money that I could potentially make. Now my maximum profit is over $500, whereas before it was only about $400. My probability is higher than it was previously because, again, the market understands and the metrics understand that this is going to be an easier trade to manage if it moves in my favor. If you have a super tight butterfly like $1 wide or $2 wide, like, yes, it's going to be dirt cheap. Like, yes, it's not going to cost you anything. Like, you're literally not even going to know that it's gone if you lose it. The problem is those are very, very hard to manage. Those are very difficult to manage. You have to thread that needle. You have to get the perfect price at the perfect time. And so I much prefer to widen out my butterflies to give them kind of more room to breathe. So I would probably settle on this butterfly. Whether it's to the upside or the downside doesn't really matter. It depends on, the directional bias that I might have. But this is going to make a little bit more sense. Give me a little bit more kind of meat on the bone when it comes to, the risk-return dynamics. Give it a bit more economic significance. And so when you're setting up your butterfly, your expected move butterfly, I should say, pin the expected move with your short strike, and then choose the width of the butterfly relative to your position sizing parameters in your account. And again, this is a great strategy for a binary event like an earnings release. So there you go. That is an expected move butterfly. Now, again, it's not technically around an earnings event because I couldn't really find one today, at least in terms of a stock that we all know and trade and are familiar with. And so save this in your repertoire for when earnings season comes around in just a couple of weeks. And so you will be ready to go because we want to hang our hat as premium sellers on time and volatility. But still, from time to time, taking a directional shot, it's fun. It's fun, it's part of the game, and you might even make a little bit of money. And now you have a really, really cheap way to do that, relatively speaking, with the expected move butterfly. And I'll see you guys next time. Jim Schultz here for Calculated Risk. And don't forget, before we get started, the best ways you can help us are by liking the video or subscribing to the channel. Either one of those guys really helps us out a lot. So generally speaking, here at Tasty, we like to sell premium. Right? We want to play into the high probabilities. We want to play into the positive theta. We want to be on the short side of the option contract, generally speaking. But every once in a while, we also like to flip the script. Like every once in a while, we like to buy volatility. Every once in a while, we like to use debit strategies and kind of play for volatility rising. And one of the classic strategies to set up for that type of play is a calendar spread. So what I want to do today is hop into the platform and let's set up a calendar spread. But before we set this guy up, let's just talk in general terms. What does that calendar spread look like? Well, it is going to be a multiple expiration cycle strategy where you're selling the front month and you're buying the back month. You're choosing the same strike in both months. So it's very much an overlapping feature of the strategy between the short option in the front month and the long option in the back month. And the reason why you set the strategy up this way is because you want to take advantage of two elements. You want to take advantage of time decay, even though it's a debit strategy, and you also want to take advantage of any potential volatility expansion. So the time decay comes from the simple fact that that short option that you're selling in the front month, it's going to burn faster than the back month. It's going to decay more quickly than that long option that is sitting in that back month. And for the volatility aspect, the back month option is going to have a higher vega than the front month option. And so by having that higher vega in the back month, if there is any volatility expansion in that underlying stock, you are likely going to see a pop in your P&L from that volatility expansion. This is why we typically like to do calendar spreads when volatility is on the lower end of the range. So all right, let's hop into Tasty Trade and let's set one of these up. All right, so here I am inside of my Tasty Trade platform and I've got Meta pulled up. And this is a $600 stock. Okay, so the first thing you want to understand is we really like to use calendar spreads on higher price stocks. So not necessarily $600, but the price of the stock doesn't necessarily kind of preclude you or prohibit you from doing a calendar spread in that stock, because the higher price of the stock really plays well with the more aggressive management style that we typically deploy with calendar spreads. We're typically managing these spreads at 10 to 20 to 25% of our debit paid. And so if you choose a really low price stock, like a $50 stock or a $75 stock, it's going to be a super cheap calendar spread, which is nice because that is indeed your maximum loss, but it's just not going to give you a whole lot of economic significance when it comes to the profit potential on that strategy. So, okay, so I'm in Meta. The way that we would generally set up a calendar spread is going to be, again, I'm selling the front month and I'm buying the back month. Don't worry about the earnings right now for the purposes of this illustration. We'll come back to that at a later date. Usually, we like to be at about a 1-to-2 ratio between the front month and the back month. So you can see we're at about that ratio right here with this Meta calendar spread. So when I go to set this guy up, I'm going to open up my July cycle first. Now, in terms of the strike selection, remember, we're going to be selling and buying the same strike. So the 580 in both cycles or the 560 in both cycles or what have you. Usually, calendar spreads, the spirit of the calendar spread is more of a neutral strategy. So you're usually typically choosing a calendar spread with some strike around where the stock is currently. Now, you want the stock to pin the strike. So whatever you choose, that's where you want the stock to go. So if you want to be more directional, then you can certainly choose strikes on the low end. You can certainly choose strikes on the high end if you want to be more bearish or more bullish. But usually, the spirit of a calendar spread is more of a neutral strategy. On that note, we typically prefer put calendars relative to call calendars. It's not a huge difference, but remember, this is a volatility expansion play. This is a long volatility play. So if volatility rises, that's going to help our calendar spread. Well, we know, or maybe you don't know, and maybe this is the first time you're hearing it, but market prices and market volatility typically move inversely. So when market prices are down, volatility is typically up. You can even see it on a day like today where the market is down huge and volatility is up pretty significantly. And so we typically observe this relationship across the board with a lot of individual stocks as well. So if I'm playing volatility to expand, I'm playing volatility to the upside, then I want to position myself to potentially extract as much benefit from that volatility expansion as I possibly can. So choosing the put option slightly below where the stock currently sits, even if it is mostly neutral, choosing a 580 or a 575, that's going to allow me to situate my strike such that if there is volatility expansion and the stock price moving lower, that's going to really help me. So right here, let's say I sell a 580 strike, which is just slightly below where Meta is right now in July, and then I close up July, I go to August, and I buy the same strike, the 580 strike. And so notice how this is a debit of $14 on this strategy. So this is a fairly significantly priced calendar spread. You would probably want to have, I would say, maybe $30,000 in your account or so, or maybe even more than that, or maybe even a little bit less. But this is not going to be a strategy for a tasty bite-sized account. But if I'm managing this at 10% of debit paid, that's $140. 20% of debit paid, that's $280. So it's pretty significant when it comes to the management. when I'm using when I'm selecting my strikes, I want to make sure that the extrinsic value in the front month is over and greater than the debit that I pay in the strategy. This gives me the best possible chance to make money from time decay, because I know if nothing happens and the stock just sits here, which we know that it won't, but if it just meanders around and ends up back here when all is said and done, then all that extrinsic value that came off of that front month is going to cover the debit that I pay in the strategy, and it's going to effectively make it a little bit easier for me to make money. So this $14 and some odd cents, if we go back to July, where my front month is, you can see I'm collecting over $22 in extrinsic value. I know that that's all extrinsic value because this option is out of the money. And so the way that this calendar spread is setting up in Meta looks pretty good. This would be a great candidate for a calendar spread. And so hopefully this kind of makes sense from the higher priced stock preference to the put preference. It's mostly a neutral strategy, managing aggressively at 10 to 20% or even 25% of debit paid, and then making sure that front month extrinsic covers the debit. So, okay, so that is a calendar spread. Hopefully that makes sense. And we kind of covered the major points of setting up a calendar spread. Now, in today's market, with the VIX skyrocketing and volatility rising, this may not be the best market to sell or put on a calendar spread in, but when volatility eventually collapses, when volatility eventually contracts, as we know that it will, if history is any guide, now hopefully you are ready with a strategy that can take advantage of that low volatility, and I'll see you guys next time. Jim Schultz here for Calculated Risk, and don't forget, before we get started today, the best ways you can help us are liking the video or subscribing to the channel. Either one of those really helps us out a lot. Okay, so around here, you guys already know the drill. Like, you already know that we are premium sellers. You already know that we want to live on the short side of the option contract. We want to play time. We want to play volatility. We want to play probabilities. We want to do all those kinds of things. But time to time, every once in a while, we want to venture off onto the other side of the contract and maybe buy a little premium. Well, today, that's what I want to talk about. When does it make sense to maybe consider being on the long side of the option contract? Well, I can think of 3 specific scenarios, and I want to unpack those in detail right now. So again, by and large, we want to be on the short side of the contract, right? We want to play the higher probabilities. When you sell premium, especially out of the money premium, you're going to have probabilities of profit that are in excess of 50%. Could be 60, could be 70, could be 80, could be 97 for my 3 delta put sellers out there. I probably wouldn't do that myself, but you've got to blaze your own trail. We want to trade the high probabilities of the marketplace. Okay. We also like being out of the money because that gives us room to be wrong. That gives us a little bit of buffer and a little bit of wiggle room on the position when it comes to not needing to be right historically. And then lastly, we've got the implied volatility, overstating realized volatility on average over time. Doesn't happen every single time, of course, but that is what we're hanging our hats on. So when it comes to why we're on the short side of the contract, those are the main reasons why. But when does it make sense to be on the long side of the contract? Well, here's the first scenario. When the VIX is super low. Like, you've got a VIX at 11, 12, 13, 14. You're just not really getting paid to sell premium. You're just not really getting paid to be on that short side of the option contract. And so in these markets, when volatility is at these levels, it's now going to make a lot more sense to be on the long side of the contract because A, option prices are cheaper. So whether you're buying the options outright, again, something else I don't know that I would necessarily suggest, or even buying your spreads, they're going to be relatively cheaper than they would be if volatility was higher. But then also remember, volatility has a tendency to mean revert. Like, volatility has a tendency to move back towards its long run average. So with a long run average VIX at like maybe 16, 17-ish, when you've got a VIX at 13, 14, like, there's some upward pressure for volatility to expand. Now, volatility can live on the lower end of the range for a very, 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 very long time. And so it doesn't mean that it's going to revert back, today or tomorrow or the next week. But statistically, this is a decent time to take a shot by buying premium and playing for that volatility expansion. Okay, so scenario number 2, earnings. Right? If you've been around the Tasty world for any length of time, you know we love to trade earnings. There's high volatility, there's lots of movement, lots of action, and honestly, it's just fun. Like, you want to do something in your favorite stock, you want to do something in, some hot stock in the marketplace, you want to take a shot, whatever, upside, downside, doesn't matter. It's fun, it's engaging to trade earnings. Well, earnings can be a little, I don't know, man. I mean, it can be a little crazy, right? The moves after an earnings event can be rather significant. So it can make a whole lot of sense to maybe buy options going into earnings rather than selling options. By and large, we do think the opportunity is still on the short side of the contract, even for earnings announcements. But I respect the fact that some people might look at the scenario and the situation and say, man, I'm looking at AMD earnings. I'm looking at Amazon earnings. Hey, maybe you're trading NVIDIA earnings. And you're like, hey, I don't want to do this from the short side. I would much rather do this from the long side. That's totally fair. That's very reasonable. That's going to be a great time and a great scenario for you to lean into the long side of the options contract and consider buying some premium. You could buy vertical spreads. Hey, you could buy expected move, butterfly, shout out to yesterday's calculated risk. You could buy a lot of different strategies, diagonals, calendar spreads even, around earnings and play that long side of the option contract in a much more controlled way. Okay, scenario number 3. It's also going to give you a little bit of strategic diversification. Right? When you've got a portfolio, when you've got a book, as the pros call it, and it's mostly short premium, it's mostly short options, it's like, that's all well and good. You got the probabilities, you got the theta, you got all those things. But just to smooth things out a little bit, just to smooth out your directional bias, just to smooth out your, your exposure and smooth out the different strategy sets that you might be using, it can make a little bit of sense to add in some long options and add in some long spreads and add in some debit strategies that really kind of balance everything out. Now, let's be clear about this. You're buying verticals, you're buying calendars, you're buying diagonals. In my humble opinion, those are not going to be the things that move the needle. Those are not going to be the things that ultimately kind of get you where you're trying to go. And so we can't expect too much out of our long premium strategies and put too much pressure on them to carry the load and carry the weight. That's what the short premium is supposed to do. And so it definitely allows us to strategically diversify, but we just have to temper our expectations. Make sure that we're not asking too much out of these strategies, things that they were really never intended to do. Because remember, when you buy options, especially naked options, but oftentimes even with spreads, what are you giving up? What are you sacrificing? What are the gotchas, as they say? Well, effectively, you're not going to have high probability. You're either going to have like a 50-50 shot, like an at-the-money spread, or you're going to have very low probability, 10%, 20%, 30%, with like a butterfly or something like that. And you also don't have time working for you. So the two primary pillars of what we like to lean on as a premium seller are essentially going to be either A, non-existent, or B, working against you when you buy premium. So hopefully now you can kind of see we can't really expect too much out of these strategies in the end in terms of being a really significant needle mover. And that's why at Tasty Trade, we lean on the probabilities, we lean on theta, we lean on the short side of the option contract because we do feel like that's where we're going to be able to tap into the big needle movers. Those are going to be the things that get us where we're trying to go and move the portfolio forward. But still, there's a time and a place to add a little bit of long premium to your portfolio. And hopefully now it's a little bit clearer to you what those times are and where those places are. And I'll see you guys next time.
Welcome to Trading Trends. I'm Ilya Spivak, head of Global Macro here at Tasty Live, with a very special guest joining us today. Jeff Curry's here. He's the executive co-chairman of ABAC's Commodity Futures Exchange, a senior advisor to the Carlyle Group, and the global head of former global head of commodities research, I should say, at a little place called Goldman Sachs. Welcome, Jeff.
Hey, it's a pleasure to be here. Looking forward to it.
I have the perfect guest here, I think, for the events that we have unfolding in the world. Obviously, we have some sort of a U.S.-Iran deal, maybe possibly finally coming together. You've pointed out that you can't print molecules, and so all of this stuff may be kind of a moot point. What do you think is going on here? Obviously, crude is down on it.
Well, I think there's a couple things creating the downdraft in prices. One is people were anticipating a deal, so they've quit buying. There's a buyer strike going on. You can see it in tertiary inventories around the world. They're dropping, which tells you they're withholding their buying. The Chinese are withholding their buying. All of them are withholding their buying, which means you're going to have pent-up demand on the other side of the deal. So that's point number one. The investors liquidating their positions. Anticipation prices are going to drop. By the way, when the deal on Friday, more likely than not, you're going to rally because you have all of this selling pressure into this, which I would argue is probably the more likely outcome here. The other factor is what's likely this deal has a near-term impact, which it could unleash the pent-up oil that's inside the Gulf right now. That comes out, but that's not much. Call it 60 plus million barrels. We're drawing 6 million barrels a day. That buys you 10 days of inventory. That's not a whole lot. Longer term, there's a much bigger issue here. You listen to the likes of Maersk and Mitsui, they're not willing to take the ships back into the Gulf right now. And the reason being is they don't see how this thing is solved. So I think there's a lot of unanswered questions right now. It means that the uncertainty remains high, and the sustainability of the deal is highly questioned. The bottom line is both sides are claiming a victory, bragging about things that don't match. So I'm really curious what's going to happen on Friday when these issues come to a head.
And of course, the immediate read-through when this war began was, all right, so we have a disruption in oil. That means inflationary impetus. That means higher yields. That means a stronger dollar. That means the price of gold comes down. All of this obviously coming together. And it's a very interesting time to have this deal because, of course, we have the FOMC policy announcement, the first one for Kevin Warsh coming up. Do you think that the markets are right to still think we've got a rate hike on the menu here because all of this is not going to go away quickly and the inflationary impetus remains?
I definitely believe this stuff's not going away quickly because even if you wanted to, one, you got to resolve the mines. France just said they're not willing to start demining this until they see how it plays out on Friday. Then after you get rid of all of the mines, you got to get the ships to come back. That's number one. They got to get the ships to go back in there. What's going to get them to go back in there when the deal doesn't have all the parties involved party to it? The Israelis weren't a part of it. The other Gulf states weren't a part of it. And when you look at the likes of, and I think it was yesterday, J.D. Vance said, who's going to pay the $300 billion that's owed to the Iranians? And our Gulf friends are going to take care of it. Well, were the Gulf friends consulted? Nobody's seen any details of this. These are big questions that need to be asked before those ships are going to come back. Okay, so let's say they agree to bring the ships back in. Then you have to go find the ships, and the ships are all out of place right now. It's going to take, bare minimum 6 to 8 weeks just to get the ships back after you've demined it. And then they gotta feel really comfortable that there's not going to be another outbreak, and you got your ship tracked in there. And so that means you got to have some time behind this and be comfortable that it's a sustainable deal. So I think there's a lot of question marks that remain open here, which means in the interim you're still drawing inventories, markets are getting tighter, and creating the potential for substantially more upside.
Well, I think the question of inventories is a very important one. I mean, I think you've made the point very clearly that much of the kind of resilience we've had to this oil shock so far has come because inventories have been pulled to such an aggressive extent. And certainly not just in the U.S., where it looks like we're exporting a lot to kind of cover the gap, but global inventories as well. How much of a price shock and how much of a durable price shock do you think there is here? Obviously, we've seen CPI and PPI numbers are already showing spillover from this into core. Is this something that's with us here? Is this now an inflationary shock that's already in the cake?
Well, you're already seeing it. As you point out, you're seeing it in the numbers already. It can only get worse from here, not better. Because the situation is tighter today than it was 2 months ago, than it was 3 months ago. It's progressively getting tighter every single day this goes on. So therefore, you have to come to the conclusion that global supply chains are more stretched today than what they were then. So if it was a problem already in the CPI data then, it's got even to be a bigger problem today and tomorrow until this thing absolutely resolves itself.
That's right. Okay, so let's then follow that lead. So if this is more of an issue, we already have an economy where the consumer is getting squeezed by this, certainly not just in the U.S., but everywhere. Let's focus on the U.S. for a moment. We have this blistering build-out of AI that's driving the economy, but the consumer is obviously a much bigger piece of the pie, and that's the piece that's getting squeezed. Are we starting to flirt with some sort of stagflation type of a dynamic? Obviously, you can't call stagflation so early, But is this where we're heading, and what is the Fed supposed to do with this?
Well, I'm not going to be going out saying I'm not a macro guy. I got to make the stagflation type of argument, but I think they're stuck between two conflicting dynamics. You have AI as a deflationary force, and you have commodity scarcity as an inflationary force. So you got these two things going in very different directions, and I think we're going to create a lot of cross signals for them. But I also want to make the point is that the deflationary pressures on AI are predicated on the ability that it's like the old tech model, infinitely scalable at zero marginal cost. This one's not infinitely scalable at zero marginal cost. This is your standard commodity supply curve, because not only does it have data going in it, but it has atoms and molecules who face upward sloping supply curves. So this is not your standard tech model anymore. This is good old fashioned commodities. So, all I like to do is we're replacing humans with commodities in AI. And human beings are renewable, commodities are not. And I think that point gets lost. So, that deflationary pressure that comes from traditional tech frameworks, I don't know if it really applies here. This is just good old-fashioned commodity production. And I think this is what's been lost by the investors. They think that these companies are magic and that they can trade at whatever times earnings. These are good old-fashioned cyclical commodity companies now. They get 10 to 15 multiples, not 30 or 40 multiples. Then that point, I think, is completely lost on many of the investors, as well as the macro community, assuming how deflationary this whole thing is going to be.
I actually agree. I think you look at the growth mix, at least in the first quarter, you see business investment spinning at over 10% annualized rate. Meanwhile, consumption is growing slower than the economy itself. And you go, well, I wonder if you spin a tiny piece of the economy that fast, what's going to happen? Inflation. So the build out may be inflationary, and then we'll get to the deflation part when and if this thing is finally built eventually, possibly. I think you're spot on here. So for me, as I look at this, sort of the natural question then becomes, we've had these really exuberant moves in stocks this week with the announcement of this deal. Ostensibly, people are celebrating that we're going to get the inflation risk out of the equation. We're going to get oil back down and sort of get back to business as usual. Do you think all of this is actually setting up to be a disappointment for stock markets?
Absolutely. Unfortunately, I think that is going to be the case. But one thing I don't understand, the corporates are telling you, I'm not willing to do this. The foreign governments are telling you they're not going to go mine sweep this because they don't believe it. So why do U.S. financial markets believe it if the corporates don't, the other foreign governments don't? That's the part that I'm a little baffled by, that they're just selling all of this really hard and trading it as if it is a permanent sticky deal. But the reality is very few participants actually come to that same conclusion.
What do you think is the demand destruction aspect of this? I mean, obviously we're going to get to a place, ostensibly, if crude oil keeps marching and the consumer keeps getting squeezed, where it's going to start to bear down on the economy as a kind of cyclical squeeze. What's the window where that starts to counteract the supply shortages and sort of the bottleneck there?
I think it's not going to happen in the U.S. Unlikely to happen here in Europe. It's most likely going to happen in emerging markets and places in Asia, and we're already beginning and have seen it. So it's not something that you will likely feel at home, which is part of the reason why people are ignoring this. It's something that's going to happen more broader on a much bigger scale than just happening, on a more smaller scale. So I think these are I think what'll probably happen is once it encapsulates and becomes bigger, is the U.S. is exporting oil and product all around the world. The end game is that the U.S. prices spike and shut down that hard to the rest of the world. That's how this probably ends. So the Americans will feel it, but it's not going to result in demand destruction because they're too rich relative to the rest of the world.
One last question here. Obviously, the implication for all of this, as we've said, has been higher rates because the markets have sniffed out the inflationary impetus basically on day one of this war. And one of the consequences has been gold prices, which were on a relentless march last year. And really, the whole precious metals complex has come down significantly because, of course, these things don't yield anything in real terms. And when rates go up, that's not a good thing for them. Do you think that is a thing that's going to continue if we're looking for crude oil to continue to be sticky at these higher levels? Is gold going to continue falling here?
Yeah, I put out a piece, a few months ago where I was short gold. And the reason being is for precisely what you just said. The rates are going to be higher. They're having to sell gold to fund defense and energy security programs, which is putting a lot of downward pressure. Last week we went as low as 4,000. I think the key message is you don't get long gold again until you're on the backside of this, and central banks are now beginning to think about rate cuts. And at that point, that's why I think you really open up the upside on gold. 5,500 was the previous high. I think we could even double from there, because ultimately you're asking what kind of share of central bank assets does gold need to get to you look at places like China. On a global basis, we're somewhere around 27. Actually, with prices down, we're probably back down about equal to where U.S. Treasuries were as a share of reserve assets. So call it in that 25, 26%. But if you go back to where we were in the 60s or 70s, you got to push that up into the 40 to 50% range, which is essentially another doubling in the price from here. So that's why I would argue that there's still a lot more upside left to gold. However, I wouldn't want to be long today. I don't think we're ready for it.
And that, ladies and gentlemen, is where we'll leave it. Jeff Curry, thanks very much for joining us. Let the folks know where they can get more from you.
Yeah, you can see in Carlisle.com a couple of pieces: the New Drill Order, the Abundance Illusion, you can't print molecules. And another one is the new Marshall Plan. I would take a look at all of those. Those might be useful.
Beautiful. Thank you very much, Jeff. We hope you'll come back and continue to enlighten us here on Trading Trends.
Thank you. Take care.
Prediction markets are certainly having their moment right now. In my view, it's just another way for traders to take a bet. That's a good thing, though, right? For tasty traders, that's what matters. This is how options traders think. They're thinking in the terms of probability, in terms of betting. How much is the market implying? What's my payout if I'm correct? That's what we have on a pretty interesting guest here today. Maria Canizzo, founder of Kelvin, an AI platform used to help prediction market traders. Before Kelvin, she was VP of product over at Zero Hash, where she built crypto infrastructure for some of the world's largest financial institutions. She's previously held roles at BlackRock and 21 Shares, so she has the institutional side, she has the crypto side, and now she has the prediction market intelligence angle as well. Maria, welcome to Trading Trends.
Hi, thank you so much for having me. Very happy to be here today.
So let's start about prediction markets at the top line level. For a trader who's never used Kalshi, Polymarket, or an event contract, try to ground this quickly here. A contract may ask whether or not the Fed could hike at the next meeting, if CPI is going to print above a certain level, or a company contemplates or completes an IPO by a certain date. So what's a prediction market? How does pricing work? And how does the settlement work compared to other financial assets?
Sure, yeah. Well, as we know, more and more of the world is being priced as an explicit probability. So we have Fed, we have sports, we have IPOs as well coming up. The challenge is making sense of them. So some traders are actually starting to use event contracts as precision hedges on specific binary risks. So it's early and liquidity is a constraint, but that's the direction we're going. As an example, let's say your book is rate sensitive. So a no cuts in 2026 contract pays off in exactly the scenario that would hurt that book. Some people might ask, what is the difference between hedging your portfolio with options versus hedging your portfolio with prediction markets? And the answer is an option hedges the market's reaction to an event, so the volatility, the move in the underlying asset, and an event contract pays on the event itself. So these are binary contracts. They settle at $1 or 0, and therefore you have defined risk on both directions. So as a prediction market trader, your max loss is what you paid for the contract, and your max gain is $1 on each contract. So you know your risk going in when you're setting up your strategies.
So our Tasty audience already trades probabilities every single day. Option traders are constantly thinking about implied volatility, expected move, break-even skew, defined risk, whether or not the market is overpricing or underpricing an event. If someone already understands options, what's the easiest bridge over into prediction markets? Where does the logic overlap or perhaps even break down?
Yeah, so let's take a macro lens at Fed rates as an example.
Sure.
So the Fed has held rates steady for the past 3 meetings. We have next meeting coming up next week with our new Fed chair, Kevin Warsh. And an interesting find in prediction markets is that Warsh leans dovish, but the market is pricing roughly 57% odds of 0 cuts across all of 2026, while the Fed's own dot plot still calls for 1. So we do get a new fresh dot plot June 17th, so that's something to look out for. But this is just one of the ways you can use macro events to as a part of your strategy with options, equities, prediction markets.
So when we're thinking about the options, we're talking about how much the stock can move, how much time's left,
Correct.
volatility inputs. But you mentioned already that the payoff structure for prediction markets is often binary. Is the event happening or is it not? So do you find in your research that options market pricing or say predictions market pricing is more efficient than options market pricing?
That's a really good comparison. I would say they're pricing 2 different things. So you can actually use both of them together. As you mentioned, options are pricing volatility, they're pricing movement, they're pricing the magnitude of maybe an event. Maybe we have an earnings event coming up, and you would take a position in an option based on what you think the magnitude of the outcome would be versus the earnings result itself, which would be the prediction market, whether they'll beat earnings, whether or not. So there's actually some pretty interesting strategies that traders are coming up with to take positions in both options and prediction markets to play a more holistic view on these macro events.
I'm trying to think about edge here in this case. You know, for options traders, there are some folks who just so fundamentally understand how pricing works. They can just look at the options chain and say, this is out of whack. I need to buy this. I need to sell that. I can make money doing this without respect for the underlying. So how does a prediction market trader get edge? Is it just by having speed and access to information before everyone else?
That is one of the ways. So prediction markets, as we've all been learning, they are an information game. It's all about information asymmetries, finding information quickly before everyone else does. However, prediction market traders can't just trade headlines. So especially with Kelvin, providing that underlying research, we encourage traders to really look at what is underlying that headline, what are we actually impacting, and use it as another data point. So some traders are even using prediction markets as a data point into other models, into equity models, into options models, and larger strategies, which is a flip on the viewpoint of, let me take a position in a prediction market and hope that I'm right. Instead, we're seeing that prediction markets actually have around an 89% accuracy rate across, on average, across all of the categories. So what's interesting is we can actually take prediction market analytics and plug them into more traditional strategies.
You've had a lot of experience at various institutions. I mentioned this at the top of this show, but Zero Hash, BlackRock, 21 Shares. What did you see in prediction markets that made you say traders need a better platform than this, that led you to Kelvin at the end of the day?
100%, yes. So I've been in crypto for around 10 years at this point, and I've been a trader myself. Early on, I've traded equities, options, forex, crypto, and now we have prediction markets. But what I'm seeing is prediction markets feels like crypto, let's say 2017, where we had an explosion of the exchanges, but really no data, no tools, and traders just kind of flying a little bit blind that early on. And now we're seeing volume just pour into prediction markets. It is coming from crypto somewhat, and we have all of these different categories with really no tools at the moment. So having something that is AI native, that can synthesize information faster than any human can, and is connected to real external data sources, is something that really helps ground traders in reality, versus maybe taking a little bit more of a blind strategy.
So I think the question at the end of the day for most traders is whether or not prediction markets are just another sentiment gauge where they can actually give you insight into the market that maybe other products or asset classes don't. So what do prediction markets see that the stock markets just aren't right now that provides them this level of intrigue and interest?
Yeah, I think what makes prediction markets so powerful at the moment is they are global. So it's taking in global information. It's information of the masses, if you will. Something that prediction markets have maybe that traditional markets don't. Let's take a look at IPOs. We have SpaceX coming, biggest IPO ever. But what's cool is that you don't need to wait for the bell anymore. So these companies aren't public yet, but you can already trade on when they will be public and what they're worth. So that's something that prediction markets has ahead of traditional markets.
You mentioned liquidity before. It's coming in. The space is new. It's a new way of expressing one's view in the market. But how should traders think about liquidity in market? Are these markets ready for serious size right now, or are they still viewed as ways to express targeted expressions around a specific event?
I think there's a lot more headroom when it comes to liquidity. So a lot of these strategies that are just now being explored and developed, in order to really have an impact on traditional markets or to have a really strong hedge in larger portfolios, let's say like hedge funds or larger funds, we're definitely going to need more liquidity to come into the space. So really excited to see how that grows over time.
As we wrap this up, when you think about prediction market participants making mistakes, what's the most common one? Are they trading around the headline? Are they anchoring to stale probabilities? Are they just chasing a consensus? Why do people fail?
Yeah, well, I think a lot of traders in prediction markets, it's a very social activity at the moment. So trading off of headlines, trading off of social media, and there is this perception that you do need to move quickly and you need to get in before the probability shifts. So sometimes moving too fast can also be a hindrance to making a solid, informed decision backed by data and using prediction markets in your broader portfolio strategy rather than a single, maybe you have a single high conviction bet. But prediction markets, I believe, have more value in your larger portfolio.
She's been Maria Canizzo, founder of Kelvin, an AI research tool for prediction market traders. I've been Chris Vecchio. You've been watching Tasty Live's Trading Trends. Come back for more videos, like and subscribe. We'll see you next time.
Welcome to Trading Trends. I'm Ilya Spivak, head of Global Macro here at Tasty Live, joined by who I think is perhaps only our second repeat guest here on the show. Rick Rule is once again with us. He's the founder and CEO of Rule Investment Media. Rick, welcome back.
Pleasure to be back with you. Thank you.
Rick, I've saved all kinds of hard questions for you since our last conversation, and I wanted to go right to the dollar and gold, which we explained last time, how it has been that since the beginning of this war in Iran, we've had, of course, an inflation scare, and against that backdrop, interest rates have come up, and so contrary to what people might have thought, episodically, the dollar is up because there's been a reach for liquidity and higher rates, and gold is down because things have sold it to gain that liquidity and gain exposure to those rates. I want to keep that conversation going. Obviously, this inflation scare is now impacting the broad range of markets. We're seeing it in stocks, we're seeing it in all manner of asset classes. And I wanted to see if in your mind this is an input into the larger gold conversation. Obviously, people have looked at gold as something of a value hedge against fiat currencies being hampered by tremendous levels of debt across most large governments, not just the US, certainly, and not just Europe, certainly. And so I wonder if this kind of inflation in your mind, in that it inflates the debt away to some extent, if that hurts the long-term case or changes the long-term case in any way for gold and precious metals and kind of physical value as a counter to fiat in general.
I think a study of history would suggest that fear of the decline, or in certain cases the decimation, of purchasing power held in fiat instruments has been responsible for most gold moves over the last 1,000 years. People attribute all kinds of attributes to gold. What one finds is that, as an example, other forms of fear, war, political unrest, things like that, have a near-term impact on gold, but they seem to have a negligible long-term impact on gold, except sometimes for participants like refugees, the Jewish community, the Vietnamese community. Those people had a different use for gold. It wasn't speculative, it wasn't investment, it was survival. But for most people, in less dire circumstance, the primary motivation for gold is to shield one's savings from the depreciation in the purchasing power of the currency. It's important to note, as a student of fairly recent history, that is to say my lifetime, that reaction to inflation takes place over longer periods of time. As a very young man, I began to notice and become interested in inflation literally in high school. In 1968, I began reading what are now regarded as Austrian economics or hard money books. And I would suggest to you that although inflation was a topic on people's minds, that the investing public didn't really begin to react to incipient inflation till 1972. In other words, there was a hiatus between the point in time when academics and politicians described inflation and the time that people began to react to it. During that 5-year period, as an example, a hamburger at McDonald's went from 20 cents to $1. By the next year, with the Arab oil embargo, the price of gasoline went from 25 cents to $1. In 1968, 1969, 1970, despite the fact that we were undergoing inflation, investors' expectations of the future were set by their experience in the immediate past. And the 1950s and 1960s have been very good times. People were extremely optimistic. You're probably too young, but your older listeners will remember things like the Nifty 50, which is to say high growth stocks that did extraordinarily well. When your anticipation of the future is set by your experience in the past, and your experience in the past 2 decades is rosy, you don't react to negative stimulus as well. So it took probably 5 years for the population to react to incipient inflation. And I think the same circumstance is happening today. Exactly the same circumstance. We have lived through what I believe is the most benign economic climate in human history in the period 1982 to 2022. People's expectation of the future is set by their experience in the past, by the dips. Believe government inflation numbers like the CPI. If you believe in the CPI and you believe that the destruction of your purchasing power is clipping along at 2.5 or 2.6%, then current interest rates seem very adequate. You know, the 10 years yielding 4.4. You're getting over 100 basis points in real yield if you happen to believe in the CPI. My problem is I don't. I believe that the CPI is better characterized by Mike Maloney as the CP lie. I believe that the deterioration in the purchasing power of the US dollar, marked by the basket of goods and services that I consume, suggests that the destruction of my purchasing power is proceeding along at an 8 or 9 or 10% clip. That presents a very different picture. If you're making 4.4 in a currency that's losing value at, say, 9, you aren't making 4.4. You're losing 4.5. It is when that realization becomes more widespread that gold really performs. Gold is viewed by many people right now, after a 50-year hiatus, as an investment class or a speculative class. I would argue that 1,000 years of human history teaches us that gold is a liquidity class or an insurance class. And right now, people don't feel the need for insurance. My suspicion is, unfortunately, that feeling will change.
Well, I think you make a very clear distinction there, and it echoes what we talked about last time as well, that when we say that the dollar is set to underperform, we're not talking about underperforming against other fiat currencies. No. We're talking about underperformance against hard assets, and fiat currencies as a grouping underperforming against hard assets. And typically that conversation is presented as, oh, well, governments will try to inflate away this debt, but we don't need them to try. We have the inflation here. And so I think the next kind of natural question is, well, gold is having a bit of a hangover here after an incredible rally last year. One thing you've talked about recently that hasn't been caught up in this macro narrative is uranium as another kind of vehicle for sort of expressing a view on physical assets and the kind of value storage that is. Break that down. What's the conversation with uranium?
Well, I need to start by saying in most commodities, the easy money has been made. The easy money occurs when a commodity goes from being hated. It doesn't need to go to being loved. It just needs to go to being unhated. When uranium was at $20 a pound, although it took the industry $40 a pound to make it, so the price had to go up, it was a hated commodity. The move from $20 a pound to $85 a pound means that the easy money in uranium has been made. It also means, however, I think looking forward, that the sure money is in front of us. Why do I say that? Well, for several reasons. The most obvious reasons is that the world needs more power of all kinds. All kinds. Global power demands, global energy demands are set to double by 2050. And we don't have the capacity to produce that much energy. We just don't have that much. Energy will be rationed by price. Nuclear power is extraordinarily reliable baseload power. And importantly, in today's political discussion, it's baseload power that doesn't generate carbon. It isn't the same as burning coal and burning oil. Uranium has, in 5 short years, gone from being a pariah to being a politically correct commodity, which amuses me greatly, frankly. The thing that's really changed with uranium, though, Ilya, was and is the conflict in the Gulf. It has been 50 years since the world cared about energy security. If you dial all the way back to 1973 and the Arab oil embargo, that form of energy insecurity stimulated, as an example, the French to build what is now the 4th largest nuclear fleet in the world. It stimulated the Japanese to build the 3rd largest nuclear fleet in the world. The impetus for that was energy security. energy security ceased to be a concern for 50 years, but is suddenly a very relevant concern. Uranium is the only fuel on Earth that has enough energy density that the Japanese, as an example, could, if they had sufficient reactor capacity, store enough uranium to power the entire country for 5 years in one uranium storage facility. You can't store that much oil or that much coal or that much natural gas. You can't build that big a battery. The only material that can give energy short nations, Korea, Japan, China for that matter, Taiwan, Singapore, energy security is nuclear. The only one. And the big thinkers of the world are beginning to come to understand that. And I think ordinary citizens are beginning to understand it too. That's very important. We are right now producing less uranium than we consume. And two things are impacting demand. One is that the Japanese are now speeding up in earnest the restart of the plants that were closed as a consequence of Fukushima. This isn't demand that's going to occur 10 years from now. This is demand that's going to occur 10 months from now. A very different circumstance with regards to pricing. It also is part of a broader trend to nuclear plant construction. Even nations that forswore nuclear, in particular Germany and the United States, are learning that if they are to fund their existing economies, never mind data centers, that they need reliable, inexpensive baseload power, and their voters would prefer that power to be non-carbon generating. I would suggest that the biggest unsung beneficiary, if there is ever beneficiaries of a war, would be uranium with regards to the Gulf conflict. People think of oil, they think of gas, they think of nitrogen, nitrogenous fertilizer, sulfur, helium, all things that move through the Straits of Hormuz. They don't think about the geopolitical attractiveness of a form of energy that gives a country energy security. And there is no other form of energy that gives a country energy security.
Well, I think that's a really important insight here. It's sort of the next step in the conversation where you say, okay, well, today it's a story about a bottleneck, but a year from now, 2 years from now, 3 years from now, there will be some kind of resolution of this bottleneck this way or that, but countries will have learned that they live in a different world now. I think you made the point last time we spoke that the 40 years that were there sort of through the Volcker disinflation almost right up to COVID is a very different period than what we're entering now. Certainly deglobalization and inflation and thinking about kind of the disillusion of U.S. enforced norms would suggest that countries need to start thinking about things like energy security in these kinds of terms. In expressing a view on uranium, because I think, obviously with gold it's easy. There's any number of ways you can gain exposure, from physical to ETFs to futures. Same thing for silver. What's the vehicle for exposure to uranium in your mind?
There are several. I think for most people, the lowest risk exposure to uranium is to buy something called the Sprott Physical Uranium Trust. Note here conflicts of interest. I'm the largest shareholder of the manager. I'm not an officer. I'm not a director. I'm not an employee. I'm just a beneficiary. The Sprott Physical Uranium Trust is a deposit receipt representing physical ownership of uranium at 4 facilities worldwide. Uranium is one of those commodities that one is well advised not to try to buy and store at home for fairly obvious reasons. So the best form of physical ownership is, in fact, certificated ownership, and by far the most liquid.
I'm running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1. Jim Schultz, and this is From Theory to Practice. Welcome to the show, Taylor. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. Welcome to the Micron edition of what it is that we are trying to do. Guys, this is it. This is the moment you've been trading for. Your financial future comes down to tonight's earning. Listen, guys, we have no time to waste. Guys, come back to me. If you are multitasking, come back to me right now. Because I've been trading for a long time. 20, maybe 18, maybe 11 years, maybe a couple of years now. The earnings call that is set to release tonight by Micron, I have never in all of my professional history seen or been up against a more impactful potential earnings call than what is coming on down the chutes tonight from Micron. Your future, your children's future, your children's future all comes down to whether or not they beat revenue estimates, whether or not they beat earnings estimates. Now, is all of it made up? Of course. Is all of it actually tracking to reality? Of course not. But everything that you've been working for comes down to this. And so there's not much time left if you don't have your bunker materials in your driveway being put together right now, then it is too late. But you're here with me, so thank you so much for being a part of the show. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program, man. You can celebrate, man, I don't even know, a day like today, I think everybody's kind of celebrating and commiserating all at the same time. But get in the chat, pump that algo, questions, comments, stories, and jokes. I want to hear about all of them. The algo is dying to hear about all of them. Drop them in the chat. Laura, bring us into the market. Matt, bring us into the market. Somebody bring us into the market. What's going on out there? EME S&P's up 4 1/4. Man, it certainly doesn't feel like an unch day. Does it feel like an unch day to you guys? I mean, they were up 50, then they were down 30, now they're unched. I mean, that's some pretty crazy stuff. Got the risk-free instrument, also known as the NASDAQ futures, down 128 on the day. Got the boomers doing some boomer things, up 317. You got the Russell 3000 up 20. You got bonds up a point. You got notes up about 20 ticks. You got oil down $3. Man, look at oil. Guys, come on, man. The oil bulls told me. They told me. I'm not sure who's worse, man. I'm really not. The oil bulls or the gold bugs? Like, who is worse when it comes to, like, you don't hear a peep from them for years, maybe decades. And then all of a sudden, something happens that sends oil up to 100 or it sends gold up to 4,000, which it isn't even at 4,000 anymore. Is it at 4,000? It's barely at 4,000. And man, they all just come out of the woodwork. They just come out in droves. Like I told y'all. Man, I've been telling y'all for years and years and years. I'm like, I know you've been wrong for about 9.5 years in a row. And so you finally got one day, and man, now we can't hear the end of it. But oil down $3 today. Man, I was assured that we were going to 150. I was assured that 150 was a jumping off point, a springboard to 200. And here we are banking on a 6 handle here in the next couple of minutes. Got oil at 70.29. Was it actually under 70? Hang on a minute. Was it under? Yeah, well, look at this. Look at that. Oil was 69.63. I mean, look at that, man. That is crazy stuff. I mean, up here. Wait, that's not even right. Hold on. I gotta look at the continuous contract. Because I know it got up to like it got up to 120, right? Or like 119 or something. Yeah, 119.48. There's your high print right there. Right there. Do you guys remember? I mean, it was only in early March. I mean, it was only a couple months ago. Do you guys remember that? Like, I remember, like, up here, like the internet, the internet, you couldn't even get on it. Because that's all you got hit with was oil bull propaganda, right? You got the oil bull propaganda, right? You got the gold bug propaganda. You got the perma bear propaganda, which we all have to deal with pretty much on a daily basis. But it's like, I'm kind of used to that. I can tune that out. But I wasn't quite ready for the 200 oil propaganda to hit the old airwaves there. But yeah, they had us, man. They had us right where they wanted us. And then all of a sudden, they got you with that triple inverted head and shoulders pattern. And boom, oil back to 70. Gas is still $4 a gallon, but that's pretty much how that works. And so anyway, oil getting hit. Got the shifties, man. Yeah, they're hanging on to 4,000. They're hanging on for dear life on to 4,000 to 140, 142, 143. I mean, there you go. You've got, let's see. Yeah. Wow, man. They were under 4,000. Were they not? I mean, well, wait, hold on. Because I know silver's getting smacked pretty hard. I may have been smacked pretty hard in silver in some stealth accounts earlier today, but we'll leave that for a future project another time. But gold down 143. You all don't want to know about the stealth accounts. Trust me. You don't want to know. And you're probably thinking, Jim, I'm actually dying to know. Be careful what you wish for. And so gold down 143. Yeah, wow. Look at that, man. Gold was down to 39.75. Look at that, man. 39.75. Wow. Man, that's crazy. Yeah, what are my Hunt brothers doing? Hunt brothers not doing too good, man. I mean, I think they passed on about 20 years ago, so that kind of goes without saying. But the Hunt brothers in the here and now, the spirit of the Hunt brothers, I should say, 57.51. I mean, man, that is like, man, that's some nasty stuff right there. Silver down $5 today, down 8% today. And that's the September contract. Like the front month that we've all been trading, which has been July, right? SILN. I mean, that's down to 57. Wait a minute. Yeah, that's down to 57. And the September contract is 57.51. This guy was down to 55 something earlier. Yeah, it was 55.74. Man. I mean, again, the silver, I mean, look at the silver, like the Facebook. Look at silver up to It was up to 120 something, 122 or whatever, right? Oh, let me grab. There you go. I mean, this is the exact same pattern as the oil pattern. Like, this is it, man. I don't know, man. Maybe the markets are manipulated because you see the same pattern all the time, like over and over again. You know, on the way up, this time is different. On the way up, like, I know it's different. Like, on the way up, like, trust me, bro. Like, I got this covered. It's like, I don't know that you have anything covered because oil did it, silver did it. And now the question is the NASDAQ going to do it? Because look at this. All right, guys, just let's use some imagination. Just extrapolate forward what could be, right? We don't know what's going to happen, right? We know what could potentially happen, right? I mean, bloop, bloop, bloop. You could get a triple bloop. Like, you could get a triple bloop. And so look at all that area off to the right there. This is all the stuff. This was silver going to 120. This was oil going to 120. Hey, that's kind of interesting, right? And so you got NASDAQ going up to 30, 31,000. What's going to happen over here? I don't know. And I don't even know if the bloops can help us. I'm not even sure if the bloops can guide us. That kind of looks like a loaf of bread there on the screen. Look at that. That's kind of fun. And so anyway, I'm very curious to see what's going to happen next. I wish I knew, because if I did know, I wouldn't be here with y'all. I would be with iPod Touch on some remote location somewhere, trading that information and just making a whole bunch of bank. And then I'll write a book about it. You guys can buy the book. You can read about it 7 years after the fact, and it really helps no one. But yeah, that's just a standard protocol, I think. And so yeah, NASDAQ down. The rest of the market looking okay. You got volatility on a day like today. Volatility futures unchanged on the day. Wow, that's pretty crazy. And then you got the VIX down. The VIX is actually down today. Certainly doesn't feel like the volatility index should be down today, but maybe it should be. I don't know. And so, all right, let's see here. Let's go ahead and, man, I see you guys in the chat. Look at you guys doing work, man. Guys putting in work. Man, look at you guys. Man, I see you guys so much. Grumpy Mike is here. Man, Grumpy Mike in the house. What's going on? Point B is here. Rets is here. Yeah, Yadara is here. E-Media is here. Argent Purr is here. Man, I appreciate you guys. Man, I see BDH is here. That's pretty fun. And so I see Ryan LP is here saying release the stealth accounts. Yeah, I'm not going to do that. But if you want to know more about them, though, you can check out my Twitter. I got a fun little trading lab project that's related to the stealth accounts, so you guys can sign up for that. It's completely free. At least the first couple of emails are free, and then I'll start spamming you for some product and stuff later on down the road. But for right now, it's all completely free. And so, but give that guy a look. It's fun. It's been fun. A lot of you guys have signed up. It's been a lot of fun. And yeah. So okay. So I'll get to you guys in a minute. Let's take a look at what's going on here in the market. I mean, obviously MNQ. I mean, this is bonefish worthy, I would say. I mean, bonefish on a Wednesday. Are they open on a Wednesday? I mean, they're running a pretty lean operation over there because they kind of have to from a funds standpoint. And so I'll have to call ahead. I mean, I don't know, nobody's there. There's plenty of seating. But in terms of, are there actually employees there? Is there actually staff there to actually make the meal, serve the meal, et cetera? And so we might be going to Bonefish tonight. I don't think Autumn's ready for that. I really, really don't. She's typically not ready for Bonefish. When I recommend Bonefish, it pretty quickly gets discarded upon receipt there usually. But we may have to give it a go with this MNQ move down a couple hundred points. And so now the question becomes, what are we going to do? I kind of like just sitting tight for a minute. I mean, we're at 23 days to go. You know, again, the Thursday contest not going to write itself. The Friday contest not going to write itself. And so let's let the MNQ position carry us into tomorrow. Let's let the MNQ position carry us into Friday and kind of let that be that. And so MNQ, we sit tight. And then, yeah, MES, we took off the static short yesterday. And so that was a short call that we had on. That's gone. So now we just have a lonely little strangle, man. It feels so incomplete. Like to look at MES and not have the short call. Because we had that guy on for, I mean, I want to say it was 2 months, maybe 3 months. I mean, it was a pretty lengthy project. It's not like the Starbucks deal, but it still was. I mean, it had a little oomph to it. And so now looking at the MES, it's kind of like, I mean, it's kind of like going in and training buys and not training tries. You know, like it's kind of like going in and training quads and not training hams. Like you always feel like, all right, I feel like I left something on the table. Like I feel like I forgot something. Like you're leaving the gym when you're done. You're like, am I done? Like, I think I forgot something. And so when I'm looking at this MES position, it's kind of the same thing. I feel like we forgot something, and it's our short call from yesterday. But we're not going back now. I'm not going to sell them in the hole here. And so we'll sit tight on MES. But MNQ, yeah, we do nothing. And then you got Apple. You got Amazon. I know you guys are all waiting for the Micron trade. I got you guys, man. Don't worry about it. I 100% got you guys. And by that, I mean, if you are new to the show, please, 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 you need to be fading my earnings trade. Now, I haven't felt this good about an earnings trade in quite some time. And so I'd be very careful fading this guy because check out FedEx. We'll get to FedEx here in a minute. But it looks like a boy might be getting a little hot streak started here for earnings. So be careful. But if history is any guide, the fade Dr. Jim earning strategy, it's safer than a US T-bill with NASDAQ-like returns. That's the best way that I can describe it to you, right? Again, I can't promise anything. This is no guarantee. Nobody knows what's going to happen. I'm just giving you data. Right? It's all there. It's all there in the archives. It's all there. You can watch it for yourself. Safer than a US T-bill with NASDAQ-like returns. That's a perfect description for the fade Dr. Jim strategy. And so we'll get to that here in a minute. But Apple, we have a short put spread on. We'll sit tight. 23 days ago, but it's defined risk, so it doesn't really matter. And then Amazon, short put spread that's a little further in the money. Again, also defined risk. So we sit tight, we do nothing, and we'll come back to that guy as well. Look at B-Fly. Let's talk about B-Fly really quick. Man, look at this thing. We are up 30 cents on this guy. And wow, that's just the greatest. It's the greatest ticker symbol I've ever seen. Because if you look at hang on a second. Oh, you know what? So I wanted to open up FedEx. So we've got B-Fly, right? So I knew that when you open up like a ticker, like it will show you the strategy that you have, like a butterfly. And then like if I open up GDX, I think that's like a strangle, right? Like you got all that. But I was kind of, because I couldn't remember how they labeled it, I was kind of hoping they gave me the abbreviation. Like that would be amazing if they put B-Fly right there. Because then we would have B-Fly the stock and B-Fly the strategy, right? And I can't think of a better pairs trade on the board. You've got B-Fly straight stock exposure and you've got B-Fly strategy. It can be bullish, it can be bearish, it can be whatever you need it to be. And obviously for FedEx, it worked out for us. But man, B-Fly, that's going to be between B-Fly and Snapchat. I think we have our long-term financial objectives covered for the most part. And so we'll loop back around to that in the coming months and years. But I think we're good. I think we're pretty much good. And we'll talk about Disney and Microsoft, all the other stuff later on. But I want to talk about FedEx here a little bit because we're already like 10 minutes into the show and I haven't even started the victory lap yet. Like we haven't even left the batter's box, right? We've got a long way to go to round these bases as we're going to take a very, very, very slow trot because I have a feeling we're going to light some stacks of cash on fire with Micron. And so for maybe just one stack of cash, I'm not sure it has to be plural. Usually we get enough work done with the singular stack of cash that gets set ablaze. But with FedEx here, we picked up a few $100. And so, I mean, Autumn doesn't know it, but we are 100% going to Bonefish tonight. And I'm going to let her get whatever she wants. Like, normally, I got to keep her under wraps, man. Like, normally, I got to run a pretty tight ship because otherwise, she just throws the budget out the window. Like, she's getting drinks. We're getting bottles of wine. We're getting this, that, the other thing. We're getting banana natties on tap. It's like, all right, listen, you can have the banana natty, but it's got to be in the can, right? We can't do the banana natty on tap stuff. It's too expensive. It's just too expensive. And so it looks like we are going to be going to Bonefish tonight, though. And so FedEx, we played a downside butterfly. And you know what's funny? We didn't even really nail the move. So in perfect Dr. Jim fashion, we kind of just barely like scraped into this position from a P&L standpoint. And we didn't even really do very much positive when it comes to this. And so with FedEx, where was FedEx this morning? I say we're rounding first right about now. Wow, look at that. We actually had them a lot lower this morning. Hold on. Let me grab I want to grab an intraday chart. I don't think we need the Errol Coleman settings. We don't need like a 1 minute or a 2 minute guy. I just need like a 5 minute guy. Let's see here. Let's go ahead and do 5 minute guy. Yeah, look at that. They opened them right on the open there, or right before the open. Wow, they actually rallied them into the opening bell. Wow, look at that. Okay, so that's actually, that daily chart is a little bit disingenuous, maybe, because we couldn't sell them. I mean, we couldn't get out of the position here. The options weren't open yet. The options weren't open until 9:30. And so because of that, that's not a true representation of what we could have done. What we could have done is basically where it is right now. I mean, it opened at 9:14, it opened at 3:14, it's at 3:12. And so basically this is the spot that we could have been in. And so, right now you can see, we're $8 in the money on the long put, which is really, really nice. So we're going to have a ton of theta that's built up in the position now. But again, it's Wednesday. We're going into Friday. I've never seen a more important earnings call that's going to be released tonight coming from Micron. So I don't know that I necessarily want to not take this off. Again, given the fact that we're going to Bonefish, given the fact that autumn, we might even bring the kids, man. We might even bring the kids to Bonefish, right? Nothing says I don't really want to enjoy this meal, then let me bring my 3 small children to dinner with me, right? Now, I'm a family man. I love my kids, right? Love them to death without question. But come on, guys, that's the truth. Nothing says, all right, I'm going to have to do conflict resolution for 2 straight hours. I'm not even going to be able to enjoy this petite filet. Right, I'm not even going to be able to enjoy the bread and the olive oil and the other things. And so it's like, man, banana natty on tap or in the can. If the kids are coming, none of it's going to be enjoyable. But FedEx, I think we're in a pretty good spot here. So let's go ahead and take this guy off, and because I do want to leave a little bit of time for Micron, because I got one for you guys, man. Man, I feel so good about this trade. Oh, man, it's going to be great. All right, so FedEx, we got out at 792. So there you go. There's a little FedEx earnings. And, man, I see you guys in the chat putting in work, man. Look at you guys, man. I see you. Look at Brian Dowdy is here. Man, look at you guys. Weiss is here. Danish Dynamite is here. Man, I appreciate you guys so much. All right, let's go ahead. Let's go to Micron. Here it is. So Micron down $34. Guys, I don't think we need to overthink this. Oh, not GDX, Micron. Don't overthink this, guys. You got an IV rank of 90. Right? You've got super high implied volatility. You've got Micron over $1,000. I mean, Micron is the way forward, right? I still can't tell you what they do, but they are the way forward. I think it has something to do with memory. So maybe they sell like blueberries and stuff. I'm not sure. But Micron is the way forward, right? Chips, computers, AI agents, right? AI bots, AI slop. Like that's what's happening. That is not only the future, that is the present. That is now. So I'm not talking about 2029. I'm talking about now. I'm not talking about 2031. I'm talking about this very moment. Micron is the answer to whatever your question might be. And so when it comes to playing the stock, it's got to be the upside, guys. It 100% has to be the upside. Not to mention, guys, look, all the stars are aligning for us right now. The expiration 2 days ago, of course, we're going to do a butterfly, of course. June 26th, guys, you know what June 26th is? There's Autumn's birthday. June 26th is Autumn's birthday, my wife's birthday. I still got to figure out what I'm going to get her. I'm running out of time. And so if you don't have your bunker materials, man, you're in real trouble. I think I'm kind of in trouble going into Friday because I'm thinking about like Amazon delivery times. And it's like, all right, like, yeah, we have Prime, of course, blah, 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 blah. But sometimes they don't come through for you, man. Like sometimes like they'll kind of lull you to sleep on the order page and say, yeah, it'll be there in 4 hours. And then you get 3 emails like, yeah, your guy's still, 27 stops away. Now he's 31 stops away. It's like, man, my man's moving backwards. This is not good. Right. And so I'm going to need to go ahead and get my act together forthwith right after this show and get her something. I might just hand her cash. Actually, I might just give her a card and just hand her some cash. And 17 years of marriage, I think we're probably at that point. But let's go on here. I'm going to do a butterfly. I'm going to try to make it as wide as I can. But again, the wider the butterfly, the better. So it's going to cost you some more. I want to keep this guy to around $5. But it'll be fun. It'll be fun because again, tomorrow, Friday's content, not going to make itself. I will say, so be on the lookout. This is a little bit tricky because my mouth is actually, I'm recovering relatively well. But today's been kind of a rough day. I had a doctor's appointment earlier this morning, but that was not a dental thing. That was something else. That's why I didn't do the skinny this morning. But today's been a little bit rough. And so I do kind of feel like I'm hitting maybe a bit of a down path. So if I do disappear tomorrow or Friday, that's just because, I needed to take a day off and kind of give the mouth the rest of there. The surgeon said it would probably be a week or two, and it's only been a week. And so we've powered through, I think, reasonably well. But let me go ahead and do, I'm kind of thinking, let's try a 1080, 1130, 1180. It's probably going to be like $8 or $9. 485, 485. Guys, what are we doing? Guys, look at that. 471 for a $50 wide butterfly in Micron, right? This isn't Walmart. This isn't McDonald's, right? This isn't Procter & Gamble. This is Micron, right? This is the way forward. This is the answer. $5 on the butterfly. I love it. I've never loved anything more than I love this trade. And so bullish Micron. If you can't beat them, you join them. Somebody get me my 3-minute sizzle reel, just like Tom Cruise. I've seen that thing at least, 37 times in the last hour. Have you guys seen that sizzle reel that our boy is putting out there to pump his new movie called Digger or whatever? Which, I love Tom Cruise. He's great. I'll go see it for sure. But it's like, man, nobody can pump their next movie with a 3-minute sizzle reel of all their previous movies quite like Tom Cruise. I don't know that it's ever been done before. I'm not sure it's ever been done before in the history of, pumping future movies. But it's a pretty impressive marketing strategy, I think. We'll kind of see how it works out for him. But let's go. Let's play this guy. 456. Come on, man. I don't really know. I'm trying to figure out why it's so low. That's really crazy. 470. Okay, the mid price is bouncing around a good bit here. Wow, we got filled at 472. Man, that is really, really crazy. And so, all right, so we're in Micron to the upside. There you go. There's the Micron play that you guys have been waiting for. I got you covered. And so there you guys go, man. All right, let's go ahead and let's see where you guys are at. Man, let's surprise and delight a couple people at the end of the chat. Man, I'll see Brian Dowdy says, I'll sell my Micron today. Now that I just heard that, as you should, my friend, you 100% should. And so, Origin Purses cash, that's a bold strategy. I'd go with that. Yep, that's what I think I'm going to do, man. We'll see if we can wrangle something up here in the next couple of days, but just in case we can't, I'll just give her a crisp 20, man. Or maybe a couple crisp 10s, because that'll feel like it's, there's a lot more work that went into it on my end. And I'm talking newly minted. You guys know what I'm saying, right? I might even get her a couple 10s with those really, really awesome serial numbers where it has 3 of a kind, or not 3 of a kind, but 4 of a kind or 5 of a kind, just in case she finds herself in a Lyra's poker game, which I don't think she's ever played that game before, but just in case, you don't know what's going to happen. Markets move and things change. But I see Danish Dynamite is here. Danish Dynamite says, Dr. Jim, I'm heading on a 5-week European vacation. That's amazing. France, Germany, and of course, Denmark. There you go. In the spirit, I placed an Assam Tasnov. You mean a bomb Naznov. A bomb Naznov recommended strangle in the Euro for August. There you go. 111.5 and then 116. Nice. I don't trade the Euro too often. And so we did one before. I think that was an Ash Finn special that we did here on the show. And so we did that guy before, but it wasn't, it's not something I trade too regularly. But man, look at you guys in this chat, man. Nice work out of you guys, man. Let me go back to the beginning. Orgdenu is in the house. What is going on there, Orgdenu? Orgdenu says, hello, Dr. Jim. The DNS is hard. It is hard. I have a gold 415 July 31st short put. I rolled it twice already. I don't like to add to positions, so I don't end up chasing my tail. Any advice? Thanks. You are the greatest, man. I appreciate you. Yeah, that's a tough trade right now because gold is down so much. Yeah, the 415, so you're 50 points underwater, and it's obviously getting worse. If you look at kind of where gold has been lately, that's quite a move, man. In just the last, the last couple of months, really, you go from 460 to basically 360. That's a 25% move, right? It's 100. That's a little over. That's like a 21 or 22% move. That's a pretty significant move. Okay, so a couple of things to think about. So number one, you said you rolled it a couple of times. That's great. So that means I'm assuming you probably collected maybe $10 to $15 on this trade, I would imagine, maybe 10 or 12 or something like that. So be aware of where your break-even point is. So your break-even point sounds to me, I'm just guessing, of course, but it's probably around 400, maybe slightly over 400. So that's kind of the number that, I would like that I would keep in my head. That's the number that I would be kind of mindful of in terms of, where I need this stock to come back to kind of get me back above water. The next thing to keep in mind is the short put is a great strategy. It's a terrific strategy across the board. It does make more sense in terms of a do nothing, to the death, put it in the ground with me. It makes a lot more sense to do that with the equities, more so than something like the metals, because the equities have positive drift and the equities have the positive risk premium. The other asset classes kind of have that, but not in the same way that the equities have that. And so I still think the do nothing strategy is the move, but it is a little bit different when you're with something like gold or you're with something like silver where you're with something like, bonds or whatever, like fixed income. And it's like, all right, I want to lean into the DNS, but, I don't have that positive risk premium to potentially like bail me out. And now we've got wars with navy blue ties. Like nobody knows what to believe now. And so that could obviously be working against us as well. So that's the first thing I'll say. The second thing that I'll say, I would just not be so married to the position that you're not willing to take an off ramp when it comes your way. Case in point, you've taken a ton of heat. My hat's off to you for staying in the position. I'm assuming you're small enough on entry, right? And so a $50 move in gold, I mean, that's that's obviously a $5,000 loss. And then you take into account the credit you collected and what have you. So maybe you're down, let's say $4,000 on the position. If it comes back and it retraces and it gives you back $1,500, $2,000, in my opinion, that is a logical time to say, all right, look, I'm done with this, man. Let me just take my off ramp. Let me take my exit ramp. I fought the good fight. Let me move on to something else. If you really want to dig your heels into the ground and say, listen, I am going do nothing strategy to the very end, I don't think it's the worst strategy ever. Now, you could add calls. You can keep rolling out. There's other things you can do to bring premium in and potentially improve the break-even point on that side. But remember, if you bring in like a call on the other side, then you're adding upside risk, which you don't. And you might be thinking, Jim, I'm not worried about upside risk. I'm worried about downside risk, of course. But markets move and things change. And so all of a sudden we get, a surprise QE print, right? We get emergency, ZERP again, and gold's going to shoot up $20, $25 in a day, right? And so I kind of think be mindful of the break-even point. I also kind of think be looking for an off-ramp at this point. I don't think you have to puke it out at the bottom right here, as long as you're small enough. If you're not small enough, that's when it's puke city, man. If you're not small enough, that's when, we're buying lows and we're selling tops. And, oh, wait, no, that's actually good. We're buying tops and we're selling lows. That's what I meant to say. And yeah, so if you're small enough, I wouldn't necessarily feel like you need to do anything right now. But again, if you get, $10, $15, $20 coming back in your direction, that might be the time to do it. That's how I would think about that. BBB Finance here. Hello, Dr. Jim. You need to take over the network, man. Be careful what you wish for. Man, be very careful what you wish for, because you guys, you never know, man. Could be a lot more Dr. Jim. You never know. And be very careful, right? Because it may sound good in theory. It probably doesn't even sound good in theory. I can assure you it's going to be far, far, far worse for all parties involved in practice. And so I'd be very, very careful. Very careful. Point B is in the house. Painting Dr. J. I'm here for my daily dose of theta therapy. Good afternoon. What is going on, my friend? Good afternoon to you too, my friend. Thank you for being here. Sebastian is here. What's up? There's Sebastian. I appreciate you. Point B is here. Doc J. Hood, poor man's covered call. Man, let's go. Long the January 21, 28.55 call. I'm short in October 16, 26 October of this year, 75. I rolled into it and it's been a losing trade. How would you manage this? Well, I don't know what you, you said you rolled into it. I don't know exactly. Oh, hoof. I don't know exactly what that means, that you rolled into it. But if I take a look at this, so you've got, yeah, you're way out there, man. Wow. You've got the January 21, 55. Yeah, so that's selling for, wow, that's so far out there. This is like the first time I've looked at the long leg of a poor man's cover call that's this far into the future. It's very rare that I would look at a poor man's cover call that's this far out into the future. I mean, it's really kind of crazy that I'm looking at this 55 call and it's actually selling for more than the actual intrinsic value of the strike. And I just mean like the actual strike itself. Like if I go in and buy Hood, like if I just go buy like, oh wait, yeah, okay, no, that makes sense. That makes sense. For some reason, I was thinking Hood was selling for 55, and I'm like, wait a minute, the 55 strike is selling for more than the stock price itself? No, that's not right. Okay, never mind. So scratch everything I was saying there and the road that I was going down. It is not a good road, so we're not going to go any further down that road. But yeah, I mean, you've got a super long call, and then you've got a 75. Yeah, you've got a 75 short call that's part of this strategy, and it's now really deep in the money. I mean, I'd have to kind of know how you got to this position and like what your basis is. I mean, generally speaking, if you're in a poor man's cover call and it's in the money, that's a good scenario for you. And it's obviously not for you right now, but I just kind of want to back up a little bit. If I'm in a poor man's cover call and the short call goes in the money, that's a positive scenario for me. I generally speaking want to try to avoid situations where I do something crazy. I kind of roll into it. This might be the situation you find yourself in now, where it's like, all right, I actually put myself in a position where now if it goes in the money, I'm actually losing money. It's actually a bad outcome for me. That can be a really, really tricky spot to kind of manage your way out of. So what I would do there, point B, email me. Shoot me an email. Give me more details around kind of like the debits and the credits and the basis and stuff. And that can give you more pinpoint, kind of ideas to think about in terms of kind of what comes next. But generally speaking, this is why with something like a poor man's cover call, I don't like to get too creative with the strategy. I'd much rather just kind of, leave it be and kind of let it do what it's intended to do, which is a bullish strategy. If it goes in the money, that's a good outcome. It sounds like maybe you're in a different scenario. So shoot me an email. I'm jschultz@tastylive.com, and I can help you a little further on that guy. Let's see. Point B says, I'm trading Micron for downside with the broken wing butterfly. There you go, my friend. You are good. You are 100% good. Now, when you say to the downside with the broken wing butterfly, do you mean with the calls or with the puts? Because the broken wing butterfly is like an omnidirectional type of trade, very similar to a ratio spread. It's basically the defined risk version of a ratio spread. And so I ask that because, if you've got the calls and you have a credit if it rallies, that's very different than if you have a put, broken wing butterfly, where you have a credit if it falls. You actually make more money if it rallies. And so I'm not even sure. I don't trade broken wing butterflies too often. I do them from time to time, but I don't do them that often. And so I'm not even sure like what the typical like lexicon is for that in terms of, a call broken wing butterfly, I guess would be a downside butterfly, I suppose, because that's where you can potentially make the most money. But I could be wrong about that. Let's see. SC Golfers here. Thanks, Dr. Jim, for all the advice. Pump the algo, man. Do it. It's my pleasure, my friend. Yes, reach out anytime. And Ash, if you're watching today, Shane is looking for a group. So you guys should sync up. And Ash typically watches most days, and so you guys should sync up. And I told him to find you, and so hopefully he can do that. And so Grumpy Mike, Dr. Jim survived his dental adventure. I did last week. I'm still recovering, and it's kind of up and down. Some days are better than others, but we're here, man. We're here and we're doing it. You think I was going to miss Micron earnings for you guys? You think I was going to miss like the most important earnings date, like in the history of earnings dates? Now, of course, if it doesn't go wrong, then I can assure you that my mouth will be hurting tomorrow, and I will certainly be MIA. But I had to be here for this because we had to get the trade on. Sam L's in the house. What's going on there, Sam L? Doc, 3 red days in a row. Is that even allowed anymore? I don't know that it is. And so we got to see how we close here. Well, I guess ever since your MES naked call, the market has fully committed to the fade doc strategy. It most certainly has. Once I closed out of my short static delta position with that deep in the money call, it's like, all right, now the market's like, we can go down even lower. Like we can test, last week's lows. We can test, last month's lows, like whatever. Like it's open season now. And so, that's just too funny, man. It's just too funny. Let's see. Imagine actually getting close to your strike call the next day. The algo simply could not allow that to happen. I know. We still had a long ways to go to get to my strike, the strike of my call, though. A very long way to go. Like we were not close to that. E-Media, hey, Dr. Jim, how do you plan a long position in platinum and gold? I haven't traded platinum in a long time. Will you trade a platinum post and a gold crown? I see what you did there. I already have a gold crown in my mouth. I've had it for like 20 years and it's done pretty well. When it comes to gold, I'm not trading platinum, but obviously GLD is going to be, the go-to here. The Ivy rank is 52, so you can get in here and do whatever you want from a short premium standpoint. There's a million things that you can do here with, with GLD. And so, GLD would be the go-to move for, a gold position. You could do something naked if you have a larger account. You do something defined risk if you have a smaller account. If you want to trade like gold outright, you could do, the micro future. MGC is not a very big product. It moves around 100, 150 points a day. That's a pretty sizable move, but that's not usual for gold. It does happen, of course, and, you've seen it happen on the charts, but usually most days are going to be 30, 40, 50, 60 points for the most part. And so, even if you've only got, 30, 35, 40 grand, I think you could trade an MGC contract, and I think you'd be okay. And by okay, you probably won't be sleeping a ton, but you might be able to grab a couple winks here and there. And so E-Media is in the house. What's going on there, E-Media? Hey, Dr. Jim, how do you plan on... Oh, this was E-Media. I already answered that question. Brian Rakuten is here. What's up there, Brian Rakuten? Point B, I enjoyed your recent show on rolling with Jermal and Mike. That's pretty good. I like that. I like that a lot. I might steal that. That's actually really, really good. Thank you, my friend. I appreciate that very much. Yeah, the short put. And this gets back to your situation, Organ, you right? With a short put, you kind of have that forever roll possibility. And so if you are bullish on gold, if you do think like, gold is going to go higher or whatever, you want to be bullish on gold, maybe as as like a complement to the rest of your long equity portfolio, or maybe your short equity portfolio, like whichever way you want to play it, then you still can tap into that forever roll type of philosophy, as you've already done yourself, Organu, with rolling a couple of times and bringing in credit. So anyway, I think it's an interesting thing. It was kind of more suited for the for equities, of course, but it can apply to pretty much anything. Point B, I've got a chronic case of overrolling and I need a second opinion. Yeah, it's so common, man. Like I do the same thing. Like we all do the same thing, where it's like, the market's moving really crazily and we all kind of feel like, man, I got to do something. I got to do something. I got to move around. I got to zig. I got to zag. I got to do something. I got to wiggle. I got to waggle. Like there's something to be done. A lot of the time, man, I think doing nothing is the move. Like a lot of the time, it's like you've already got it set. You've already got the beds been made. The Betty Crocker recipe's right in front of you. Man, just follow it step by step. Right? Step 1, do nothing. Step 2, do nothing. Step 3, remember steps 1 and 2. Like it's pretty straightforward. Right? And so, I really kind of like it as just a, kind of simplify things down. But, there's definitely a time and a place for lots of adjustments. But I think, tapping into the DNS is a solid move. And again, you just have to make sure that your size is in check and make sure that everything is, you've dotted all your I's and crossed all your T's and, those kinds of things. And so, but let's see, Ranch is in the house. What's going on there, Ranch? Rets Media is in the house. What's up there, Rets Media? Silver must be dumping. I got assigned. Yes, it is dumping. What is silver doing now? Yeah, it's actually, it's down a little bit, 57.12. And so the end contract is probably 56.60 or 70 or something. And so that is, that is some pretty wild stuff. Samuel, Dr. Shifties and the Hunt Brothers are getting absolutely smacked. Meanwhile, the Dixie is doing whatever the Dixie does when nobody's paying attention. You haven't traded the Dixie. The dollar index? We're doing Dixie now? Is it / Dixie? Man, I haven't looked at this in so long. I don't even know how to pull up the quote the right way. Oop. Y'all saw my Dropbox files. Let's see. DXY. I don't even know. I don't even know what the Dixie quote is. And so wait, hold on. It's not DX, is it? Is it DMX? Like Rough Rider stuff? No, that's not it. I'm not even sure that is DMX. But feels like it should be DMX. And so anyway, but yeah, the dollar, I don't even know. I haven't looked at the dollar in quite some time. That's how little of a macro bro that I truly am. Like that's how little of a macro like influencer that I truly am. Like I don't even know how to pull up a dollar quote. I know what the Dixie is, obviously the dollar index, but I couldn't pull up a quote if I had to, obviously. And so Rand says the biggest call in modern history. I can't remember a bigger one. Look at the NASDAQ right now, down 380 now. It's down 380 now, man. We're almost like 4% off of all-time highs. The Russell's even red. Guys, man, call your senator, call your congressman. You got to call somebody. Call somebody. Write letters. Like show up. Like cold walk these places, man. You got to let them know that you're not happy with this. That you are not happy with this at all. Udara's in the house. Hello, Dr. Jim. For today's Micron trade, could you consider looking at a put or call broken heart butterfly? Buy an out-of-the-money call spread and sell a further wider out-of-the-money call spread. Route the trade for credit. That's very interesting. Since I already did the expected move butterfly to the upside, we'll have to revisit this for maybe another earning. So remind me of this there, Udara. I'd be happy to do this and set this guy up. But since we already did Micron, I'm not going to do a second trade in Micron because that just sounds like you're asking for a whole lot of trouble to kind of come your way. But yeah. Thank you there, Udara. Just remind me and we can do that later on. Rets Media, I only have one pizza left in the freezer. That's not good. If you're talking about like bunker type stuff, that's not good at all. And so, Samuel, come to think of it, I don't think you ever have given us a proper bloop analysis on the dollar because I can't. I just tried and I can't. Right? Whether it's proper or improper, I can't even pull it up. And so maybe the dollar has been the original bloop all along. Anyway, it's all made up until the chart says otherwise. Yeah, the chart's all made up. That's for sure. But as far as the Dixie is concerned or DMX or whatever, somebody tell me, what is the dollar ticker? I need to know. Can somebody put it in the chat, please? I'll scroll down to the bottom really quick. $DXY. Really? Oh, I was so close. Thank you there. I see Mr. Pillows and Ryan LP. No, that's not it. I'm not getting it. I thought that was it. I'm not getting it. You guys took me down, man. You guys 100% took me down. Look at you guys, man. Can somebody give me a dollar quote? A dollar ticker? Somebody in the chat, really quick. We have like a minute left in the show. $ Dixie. Am I crazy? I don't have the monovision. I got actual contacts in. $DXY. Not found at all. Can you guys see this box right here? Not found at all. Click on the chart. Oh, they're going to make me do that. What? Look at that. Okay. All right. Man, look at you guys. Man, I made you guys pump the algo. That's what that was all about. Man, the algo is going to be so confused now. The algo is going to think this is some good stuff. And then they're going to watch it and be like, this is the same as it's always been. But yeah, okay, there you go. Look at the dollar. Okay, up to 102. I don't know what that means. I mean, does that mean that I'm going to be able to buy some more stuff? I mean, probably not. All right, does that mean that inflation is not going to eat your boy alive and eat all you guys alive? Probably not. But yeah, Dixie's looking pretty good. I guess we're breaking out. Is that what that is? So I guess we're going to get like a kind of like a blop bloop, kind of like one of those jobs. I mean, is that what we're going for? Again, this is probably a little bit too advanced. If you're brand new and just starting and trying to learn about different ways to analyze charts, I would go back to kind of the beginning phases. This is probably a few steps down the road. But I think we're kind of doing like a blap bloop right there when it comes to the bounce off of these recent highs. So, but yeah, the Dixie, wow, I learned how to pull up the Dixie. How about that? And that's a perfect way to end the show because I'm totally out of time. And so I appreciate you guys, man. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello there, Tim Knight, and it is Wednesday,
It's a really red day. I'm digging it. When the day started, we had a rally, and it stopped. And we are down, not massively. And, you know, listen, RTY is green. YM is green. It's not all, you know, it's not like both bears on the planet are celebrating right now. But it's working out pretty good over here in Palo Alto. And I hope some of you are partaking. The good news is that the stock market is fantastically overvalued. So don't feel you're too late because we're like, you know, only hours into this. Couple of big events coming, I guess, in the next, what would it be, 15, 16 hours. Micron will be announcing after the close today. And tomorrow morning, I think it's the PCE that's coming out. The oft-cited Fed's favorite inflation indicator. So let's go into the wonderful world of charting, and we can talk about this pretty glorious day happening. It's like, I don't know if you ever saw, years and years ago, there was a Honda commercial, Garrison Keillor narrated, and they had this, they disassembled an entire Honda Accord into little parts and made sort of a Rube Goldberg contraption out of it. And the closing line was, isn't it nice when things just work? And that's how I feel today. Everything's just working out really well. Assets across the board are getting hit. Bitcoin is working out great. I see the president has been ceaselessly tweeting out about how crude oil is dropping, which I don't know. I mean, to me, it's like if you worked in an office building in Austin and I shut your power down and it was sweltering inside, and I turned the power back on and roamed the hallways saying, Tim Knight knows how to provide coolness, doesn't he? You would agree, it would feel better, but, you know, don't thank me. But I wouldn't do that to you. I've been to Austin. I know what it's like down there. But the ES has been, we got 3 red bars in a row, and it's a mess. There's no real pattern here to speak of at all. This is a totally not organic market. It has not been organic since certainly 2008. Before then, it was pretty au naturel. But yeah, since the late Alan Greenspan got involved, it has been nothing of the sort. So it's kind of a mess. All the same, I think we've broken the uptrend, and you know, between now and October could be awfully interesting, and I'm definitely positioned for the downside. The diamonds, I came into the day short this. I got stopped out, took a loss. It is off of its highs. It's still probably not a bad short. We had not hit lifetime highs on this. We're still below the trend line. You know, there's certain things to recommend as a short. I'm not going to touch it. In fact, as delighted as I am about today's red, I'm not that heavily positioned. I'm about 120% committed, and you know, full on Bitcoin short, but not, you know, wild-eyed or anything like that. And you know, one of the reasons is because my biggest position was the diamonds, and I just got boinked out of it. But still not a bad-looking chart. I wouldn't be surprised if this took a tumble tomorrow. But I probably won't monkey with it anymore. The small caps, IWM. As I said, small caps are still green, although just barely. This is up 0.04% at the moment. You could call that a shooting star today. Not a particularly good one, but it's all right. Lifetime highs on an intraday basis. And like I say, I doubt there's any bears out there besides me. But if there are, the market's very richly valued. I still think there's plenty of opportunities out there in spite of the demolition we've seen in some sectors thus far. The big news yesterday was South Korea. And I was sort of bracing myself today for a big counter-turn rally across the board. You know, this market being what it is, I figured today would be a pretty big up day to undo most of the damage from yesterday. Didn't happen. Today's a very good day. In a lot of ways, it's better than yesterday. The EWI is up almost 1/10 of a single percentage point. So pretty lame counter-turn rally. It basically opened at its high and it's trading now as low. My dumb guess, and my Micron position's about this big. They'll use that for the screenshot. I just know it on the YouTube. The Micron position small. My dumb guess is that it'll fall. Just a dumb guess. If it does, I expect we'll see things like this continue to weaken. EFA, which I did hold my short on and is now my biggest position, continues to sink. We're down about another 0.5% on this. Here again, a pig of a pattern, just really absolutely inscrutable. But what can you do? I'll still take it. FXI China, as I've mentioned time and again, China's bull market ended almost 20 years ago. And that's in nominal terms. I mean, I've talked about normalized terms, in which case the US bull market ended 25 years ago. But even in nominal, constantly degraded fiat terms, China has been getting in this sloppy bear market for almost 20 years. And today ain't helping. For weeks now, after the absolutely pointless summit, it's been falling day after day after day after day after day. And I wish I had a position. I don't. It's a very, it's a messy chart. There's individual Chinese stocks like PDD and WRD that I think are terrific shorts and have been. I think will continue to be, but I don't have any Chinese positions right now. It's like a bad Kama Sutra. Gold, GC. This is down again, as God intended. We're down below $4,000 now. Every day I've mentioned the right triangle pattern, and this is potent stuff. This could easily get down to $3,500 an ounce. And my kind of supposition here, unless I love analogs, so the analog here is, January is to gold as June is to semiconductors, because the mania, which I rah-rahed all the way up, the mania in precious metals terminated in January. My shoe-shine boy moment there, of course, as I mentioned, was going into my local bullion dealer and it being like a mob. Usually it's like one really lonely guy sitting on a squeaky old chair, and this is like mayhem. It's like, whoops, okay, that's not good. And sure enough, it's been barfing up ever since. So silver, gold, you name it, platinum, palladium. So gold continues to sink. Silver, same right triangle, same diminishment, same demolition. This has lost way more than half its value at this point. So grandma's tea kettle is safe for now again. GDX, the miners are down again over 4%. Pretty cool little distribution top there, breaking below that. I only have two precious metals related positions. One of them I've mentioned daily here, which is Equinox, EQX, and that's down about 5.5% today. Beautiful little pattern. I don't know when to close it or when to cover it. I'm just kind of letting it ride and tightening up the stop each day. And then XME, another wallop there, down 4.2%. The failed bullish breakout I pointed out yesterday being a good signal that this ain't popping. And that's been sinking away. And as I've mentioned, I'll just say it again, the ratio between XME and GDX suggests that if metals are going to be almost irrespective of what metals are doing, but if you want to short one of them, short XME, I think, because historically and from the cycle we're in right now, XME is going to vastly underperform GDX. Now, let's talk about Bitcoin, because I am delighted to be completely short Bitcoin. And there's a lot of exciting things happening across the whole cryptoverse. One item, which surprisingly a lot of people don't talk about, I think it should be like, headline news, is STRC. Now, STRC was a concoction by one Michael Saylor, who in an interview stated that he had used ChatGPT to invent this financial instrument. And I have not studied this. I've not read about it deeply. I've just seen little snippets here and there. So if this isn't exactly right, you've been warned. But my understanding is that this was created as a very appealing, high dividend, kind of stable, boring instrument to fund the acquisition of Bitcoin. And so the draw was, hey, STRC pays 11.5% interest. And for a while here, you can see, very steady, very dull, very boring, basically $100 day after day after day after day. Some wiggles and wobbles here and there, but on the whole, pretty much a $100 creature. I'll just kind of zoom in here so you can see. So it was like a passbook savings account. It was just kind of $100, and you enjoyed that 11.5% rate. Well, it seems to me that 11.5% or not. Let's reset this. Come on, this is just wretched. It's really getting zapped, as you can plainly see in front of you, because this thing today alone is down almost 8%. So it's gone from around 100 to 80. So I guess it pays 11.5% a year, but in the span of about a month, it's lost 20%. So that doesn't really work, does it? So to me, that's sort of suggesting some real fundamental concerns about, whoa, is strategy going to exist in a year or whatever? So consider this not just a canary in a coal mine, but like he's got a bullhorn screeching that something's really wrong here with strategy. Bitcoin itself is a big part of that, obviously, because strategy is basically a Bitcoin coin holding company. We have breached the crucially important $60,000 level. They are fighting like hell to reverse that, but we have slipped down there. Today we're down almost $3,000, a little more than 4%. And strategy itself, MSTR, is down about twice that, more than twice that from a percentage standpoint. This company was like $542 in December of 2024. It is $94 now. It's about an 83% drop, 84% drop, something like that. And it is priced now the same as it was last millennium. Okay? How many things can you say that about? So 27 years, think of technology 27 years ago. So a high-tech company 27 years later is unchanged. So that's Michael Saylor, the genius for you. BITI, I'm long this, and it's up nicely. And my hope is that we can break out above what would be a tremendous inverted head and shoulders pattern right there. So that's looking pretty right on. The cubes are down a little bit, about 1%. Again, kind of a mess of a chart, but so far so good, and not getting the massive rally I was fearing we would have today. A few shorts I got here and there. MRVL down almost 4%, going nicely. AXTI, our old friend, mentioned it every day, down almost 12% more today, breaching the distribution top that I've been tracking. SCRV, another frequent mention here on the show, 5.15% negative today. Lifetime, no, not a lifetime low, but we have clearly broken below that beautiful distribution top on that one. The storage companies like Western Digital, like Seagate, like SanDisk, finally stopping their daily ascent. STX down over 7%. Beautiful trendline failure there. Of course, perpetually critical SMH, against which I own January puts. This is down not quite 2%, over $10 right now. Looking real good there. And an example of another short I've got in that realm is CLAC, KLAC, KLA Core. This is down over 3%. But the belle of the ball in a few minutes is going to be Micron, MU. Presently down almost $40, almost 4%. And the key for me here is this island reversal gap right here, which took place, here's Tuesday, Monday, Thursday, I guess, flanking that. And there's the gap. So we've got some sunshine between each of those. And if we can stay below that, then it could look pretty good on the downside. Like I say, I'm short Micron, but just a teeny little bit. But if it gets a wallop, that would definitely be good overall. So, kind of a cool market we're in right now. It's a fun one. and hope you're enjoying it. And I will see you post Micron and post PCE. So bye-bye.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We are back. You're watching Tasty Live. It's the final 30 minutes of the trading day, which means it's time for last call. He's TP. I'm Chris Vecchio. TP, markets basically at the lows of the day ahead of those Micron earnings.
This was a pretty sharp reversal. Now, you and I had called for a rally yesterday and last call, and that's what we got. We were down, $110 or whatever, and we were right. It bounced higher. The sell-off of the past couple of hours, the range is, we're down 25 now. It's about a 75-point range, if I recall correctly. And this was a trade, what I had done earlier, I put on my SPX Iron Condors, and this was exactly the time or the type of day where you want to take the 50% profits, which I did. Again, not any kind of genius on my part. It's just the mechanics of doing that trade. And I still would have been the SPX was still above my short put strike, and I probably could have made some more money if I had held on to it, but why bother? I hit my 50% of max profit and I move on. But looking at what's weighing on this stock, what's weighing on the S&Ps right now, Chris, I see it in all, or I should say most of your favorite trillion-dollar companies. NVIDIA down 1.5%, Google down 67% or 48%, Microsoft down 144, Amazon up 92%, Avgo down 70, Meta down 0.63%, Tesla down 189, Micron down 5%. And it's those stocks. And again, the last one on my list is Eli Lilly. There's Berkshire Hathaway up 90. Lilly, LLY is up 0.69. But obviously in these market cap weighted indexes like the S&Ps, it's those, NVIDIA is a $4.7 trillion company. Apple is $4.3 trillion. Google, $4.2 trillion. They vastly outweigh anything at the bottom end of those 500 stocks. So when they're down, the S&Ps are down. But I do see, Chris, a lot of very broad-based selling across here. UNH is down. Some of the financials, like we were talking yesterday, Goldman Sachs down, Morgan Stanley down, CME down, Robinhood down. Stocks like that are just pulling everything a little bit lower. It is. I'm seeing a lot of red on my map right now.
There is a lot of red on the map right now, and it feels just like a big de-risking kind of day. I wish I could point to a single catalyst. Oil's down, another 3-4% here? 4.4% right now. 2-year yields are down. This isn't about concerns over the Fed.
No.
At all. Right? You can't point to the Fed funds futures curve here, SR3Z6, and say, oh, well, it's because rate hike odds are going up. That's not a narrative that you can construct today. People are just raising capital.
Well, yeah, and so Chris, you've been doing this for a while, and after Micron reports after the close, of course we could be surprised. Of course, anything could come out of left field and surprise the market. But what are any big news events coming in the next few weeks? I don't really see any. You're on top of it better than I am as far as the upcoming big events, but I just don't see it. After Micron, what is there?
Inflation tomorrow. Inflation tomorrow is something that we look at. PCE.
Okay.
I believe. Let me just check my calendar here because next week should be 3 weeks after the week of the 12th. So that means that we could have non-farm payrolls next week, which it looks like we do. No, we do not. So those aren't going to be coming out for. No, yeah, we do. July 2nd. July 2nd,
right.
we get non-farm payrolls. So that's it. I mean, that's the calendar. PCE inflation tomorrow and non-farm payrolls next week.
And I think those numbers are pretty slim as far as actually being able to. I don't think people know how to evaluate them, higher, lower, whatever. I think, as you said. There's a bias.
Traders are looking at the personal consumption expenditures and making trading decisions around that report.
I guess so.
I don't. I personally don't.
I mean, yeah, you can make any kind of argument about what it does. What's interesting here is, it's rallying. General Electric, Coca-Cola, Procter & Gamble, Costco's up today. Home Depot. Stocks like that are up. Johnson & Johnson up a little bit, as we were talking about earlier. LLY. Some of the consumer non-durables, some of the industrials are up. Everything else, though, but those are they're not small cap stocks by any means, but they're relatively outweighed by the trillion-dollar companies. As far as the biggest rallies I see here, the Home Depot is up a lot. The housing stocks like DR Horton, Lennar, and you're just looking at XHB, the ETF that tracks the housing stocks, that's up pretty significantly. ITB, the home construction index, those things, the housing sector is rallying. I don't know how much of that is the failed, what's going on in Washington with Trump not signing the housing bill, whatever it was in it. I have no idea. I don't think that's what's causing this rally.
That can't be this.
That's the political news. I don't think that has any impact. But I am surprised that with the rally, no, I'm not surprised. The rally in the 10 years today, again, it's on par. The ratio between the rally in the 30s versus the 10s, that's about on par with what we're seeing today. But the rally in bonds means interest rates are lower, and that 10-year yield, the yield on the 10-year notes, is still the benchmark for mortgage rates. If it gets a little bit cheaper for people to buy a house, as far as the interest rate costs go, I'm all for it.
Yeah, I think just for a sake of conversation, the political mechanism, Trump saying he's not going to sign this the housing bill, which is incredibly bipartisan, passed the Senate and the House with overwhelming majority on both sides of the aisle. He could pocket veto it. Right, he could just sit on it and not sign it, but then Congress would have to leave session for that to stay unsigned. Otherwise, he has 10 days. 10 days, not including Sundays, but 10 days. And if he doesn't sign it within 10 days, nor veto it, then it automatically becomes law. So presidents just can't sit on things that Congress passes. So why would this be a mechanism then that the market would be reacting so confidently to? Because we all know this, like the people who make these decisions for housing stocks, they're aware of these laws and rules.
I don't see this, and I don't think it's an issue. I certainly don't think it's what's pushing up the housing stocks. And anything coming out of Washington is going to take months at the minimum to percolate through any housing sector. I think this is an interest rate driven decision. Look, Chris, the yield curve is flattening out. Right, the short-term rates are going up, longer-term rates are falling. Gold is getting crushed, silver is getting crushed. All those interest rate sensitive products like gold and silver are selling off right now.
Gold is pushing below $4,000 an ounce. In fact, the daily chart, because of the open outcry close, doesn't exactly capture it. We're starting to get a little bit of a dip here down below $4,000. And you know what? We do this segment with CME Group one or two times a week called 5 Futures, where we highlight a trade. And I'm seeing here that this is actually a great time for execution on what we want to do. I already had an initial position in 10Z, and I want to keep building into that position here as gold breaks down further. The drop below 40.20 to me seems like another opportunity to get a little bit more going on here. So in the vein of doubling down on something winning and adding on when something breaks out, I really like 10Z. And just as a product size, right? You know, when you think about gold at $4,000 because of the $100 multiplier, that's like $400,000 of notional exposure that you're taking.
It's a big product.
GC is a very big product. And MGC is manageable for a lot of people, but when you take a step down by a tenth, it's still $40,000 of notional exposure, which can be a lot for particularly newer traders or smaller accounts. So 10Z here, right? I'm adding in. It's bringing my cost average down to 41.62 on the short. I'm comfortable with that because gold has been breaking down, and it's been a liquidation type of day in the commodities.
Hey, Chris, just really quickly before you move off of 10Z, there, can you just create an order to buy one future? I want to see what the margin requirement is on that.
Sure.
So everybody can play at home right now. The buying power effect is $65, and I don't think. Yeah, I mean that's what it is. So if you have a relatively small account, again, futures. I'm not saying futures are. It's not the Wild West. That's not what I mean at all. But that it is easy to open up a futures account, to have it to be able to trade futures right alongside your equity account. And one of the advantages of trading at Tasty is that you can see them side by side on your position page. So whether you're trading IBM and Tesla or or GLD, the ETF, which is strictly speaking an equity, you can trade 10Z/10Z and see it right along your positions. And that's what's nice about this platform. If you do not have a futures account or futures capability yet, please go into your account management, log into Tasty Account Management, And I would strongly suggest doing that. Is futures trading for everyone? Not necessarily. And understand that it's a little bit different. There are nuances to it. But to your point, Chris, this is if you are brand new to futures and if you want to put on a contrarian trade, a bullish trade in gold, 1/10Z is a relatively low capital way of doing that.
Dollar for dollar. Before we move over to Micron here, just to point to the PCE tomorrow, it's probably going to be a little bit warm still because all of the oil decline's been over the past few weeks. That's not going to be fully captured in that data set. So I would go to the Cleveland Fed just as like a intellectual exercise here. We're looking for the PCE numbers for May. But when we look to how the June data is tracking, and it's June 24th, so a lot of the month is behind us by now, headline CPI could come in at negative, right? We're looking at PCE coming at 0.11%. Tom, to get to a 2% inflation rate, you need to have 0.18% month over month inflation. So at 0.11, the Fed's going to look at that and go, oh, all right, maybe things are cooling off. Maybe we don't need a hike rate. So the market always looks through this kind of stuff. Tomorrow could be like a last waypoint for maybe some inflation scares, particularly if it misses and comes in a little soft.
I mean, I was looking at the Fed funds, the CME Fed funds watch, but they use the Fed funds futures to calculate the probability of a rate hike. They actually dropped a couple of percent from yesterday to today. They're still well above zero as far as the probability of a rate hike in one of the next few FOMC meetings, but it has come down a little bit. And we'll see. Again, I don't make trades based on the government data. I've been through that too many times. I have no idea what an actual bullish number or bearish number is. Chris, you brought up Micron, and I know that the sell side estimates for what the earnings per share and revenues are going to be for Micron are lower than the buy side shares. In other words, it's the sell side being like Goldman Sachs or JP Morgan, UBS, versus buy side, which would be the big pension funds, that sort of stuff. And they're oscillating back and forth. Buy side's more aggressive, buy side is more bullish, sell side is less so. Right now down $28. Let's check the skew in there, Chris, please, if we could. Go to the trade page.
Sure.
Let's take a look at some of the options.
And I have a question for you that's following up to a confirm and send that we have this morning. Curious your thoughts on that. You want me to go to the 2 days here?
Yeah, sure.
97% IV?
Yeah, let's. What's not to love about 196 implied volatility? So the stock right now is 1022. That's right in between 1020 and 1025 for the sake of argument. Go down 10 points, up 10 points, 1020 down to 1010. The puts are 51.80 on the ask price, up $10 from 25 to 35. Or it could be up 25 to 35. 54 versus 51. They're pointed north. So the skew is pointed towards the upside. The market sees risk to the upside. Is that going to play out? Who knows? That's the market's guess. Chris, what was the question?
So on Confirm and Send today, folks were asking about how Jermal and Mike were operating in Micron, and they had put on a long butterfly call, which at 2 days to expiration, it's slightly out of the money. It was, I think, the 1,050, 1,100, 1,150 strikes.
Okay.
I'm curious because Liz and I had asked the question this morning, and I think we just arrived at the same conclusion together. But on your take, why would you want to put on something like a long call butterfly 2 days out from earnings that's slightly out of the money?
Okay. So butterflies, and I hate to use analogies, but an analogy here works. Butterflies are like bets on a roulette table. There's going to be a winning butterfly where you have the two long options and the short center options, right? The butterfly maximizes its value if the stock is right at that middle strike, If it's much higher, the butterfly is worthless. If it's much lower, the butterfly is worthless. It is a pinpointed bet, like a number on a roulette wheel. So here's where we now move into the option world. When something has a 200% implied volatility, that means Micron, who knows where Micron's going to be? Up 50 points, down 100 points, up 200. Who knows, Chris? Who knows? Which one is going to be the winning butterfly? No one knows. So that depresses the butterfly prices. When you have very, very high volatility, that tends to push down butterfly prices. That's why a long butterfly here, if you want just a cheap lottery ticket, because they typically have very low deltas, low probability of profits. If you want a cheap lottery ticket, a butterfly is the trade. That's what it is. And if you nail it, you're awesome. Great. You can make a lot of money. If you don't, well, okay, not a huge cost. But that's why in low volatility products, Chris, butterflies are too expensive. The low volatility means that the stock is probably, the market kind of knows where the stock is going to be.
Right, exactly.
And it jacks up. That's the winning butterfly. So everybody bids it up.
Right. That's exactly what Liz and I were discussing this morning. You don't want to do something like this in a low volatility product because the market's like, why are we going to compensate you for the risk? We know where this is going to be pinned. But when it's in a high vol product, the market says this thing can go anywhere. And so if you want to punch this ticket, it's cheaper to express that view because of all the relative uncertainty that's inherently priced in. So I find it really interesting that they want to put this on. But one of the typical tasty ways to operate around earnings, of course, is to look for IV crush here, Tom. So let's try to figure out how to approach this right now. It's still a 92. We're close to a 200 IV. If you're looking to make a trade around earnings today, as one of the frequent questions we received here today, how are you approaching this? Are you going short iron condor? Are you being directional with a short call spread, a short put spread? How do you scramble this egg?
By default, just short an iron condor. That's it, Chris. I mean, if I were directional, sure, sell a put spread. Bearish, sell a call spread. But I have no idea. I would go into 2 days and I wouldn't go out that far. If I want to make this an earnings trade, I'd sell. Yeah, I'd tighten up. Let's do 5 points. Do a 5-point spread. And I would make the short options have roughly equal prices. So, Chris, what did you sell those puts for?
So we're going into
$7.90. I would go further out of the money on the call side to about $7. I would match up the options just like that. Exactly like that. So I have a 5-point spread taking $1.20 credit. My max risk is $380. I'm okay with that. And I don't pay my bills with earnings trades. But if I could make $60 on this iron condor, I'd be very happy.
Right, and so I think usually my inclination is just to go out to the one standard deviation move here, but I like that fine tuning where short strikes should be the same prices there.
Because Chris, here's why: you and I pay our bills with dollars. Options are priced. The theory is with percentages and all that stuff. But the bottom line is when the market is saying two options have the same price, that implicitly says this is how far we think the stock is going to go. That's it. In other words, I'll pay $7 for that call. I'll pay $7 for the put because I think, that's maybe how far the stock might go. If you want to take in a bigger credit, pull it in. Right, pull it into closer strikes. I've got no problem with that. But the point is, when you match up the prices, even more so than matching up the probabilities, Chris, I think that's what I do. I match up values because the market is telling me that's what the likelihood is.
Before we hop off this, quick reminder about where we are in the market. Stocks are getting a little bit of a bounce right now. S&P down by 0.16% here off the lows, 74.26. We have the NASDAQ here off the lows, only down by 0.6% now. Quite little fight here. The low for the day was 29,264. We're back about 200 points to the upside, 29,470. Volatility is coming as we go into the final 5 or 10 minutes here. And get ready for those Micron earnings back below 1961 here. So another one of those weird days, TP, where volatility is up, stocks are down, but because vol really hasn't made that leap,
No.
You're not seeing like a ton of downside traction. It's kind of death by 1,000 paper cuts right now. Let's go back to Micron for a second here, though. One of the other questions we've run into over the course of the day, and it's fairly typical when you get big volatility readings heading into earnings in some of these more popular names. What if you want to avoid the earnings themselves? How far do you go out? Where is the volatility still juicy enough at the various strikes and the expirations that you would say, yeah, I want to sell the vol, but I don't want to do it at 2 days? How do you make that decision to go to 8, 16, 23, for example?
I don't. If I don't want to trade the earnings, and I know that's kind of an open-ended question, but if I don't want to trade the earnings, I'll wait until tomorrow morning. Let the earnings come out, let Micron do whatever it's going to do. And then I will I'll go out to, 37 days. Tomorrow there'll be the July weeklies with 36 days. I'll start looking to create an iron condor in them. The bottom line is, even if volatility drops, Chris, even if volatility is halved tomorrow, it's still going to have a 50% implied volatility over 2 times what the VIX is. You're going to get rewarded for selling an iron condor.
Patience is the virtue there, and sticking to your plan and having the discipline. Tom, if we're moving away from Micron here, is there anything going on in the semis, broadly speaking, where maybe people don't want the idiosyncratic exposure to Micron, but they want to stick to semis? How would you execute a trade here in SMH?
Sure. I mean, it's the same thing. I would, in this case, Chris, I would maybe go out to the 37 days. And you want to bet on a drop in volatility that you think, 97% IV rank, okay, fine. You have a short put spread in there. If you're bullish, that's the trade I would use. A defined risk trade. Again, we're talking about a $600 product. Selling naked options in here requires a lot of money. Some accounts just don't have it. Use verticals, that gets around it. You define your risk, you reduce the amount of capital you need to do the trade. But I would say, yeah, if you're bullish, I would go a little bit longer term. I wouldn't trade SMH as a Micron earnings product. I would trade it as generally bullish on the chip AI sector.
You know what I find interesting where SMH sits right now, 97 IVR, right at the halfway point between the lows that we had in that second week of June and the all-time highs we established earlier this week right now. And so looking for something that's a little bit directionally neutral around these levels, I don't exactly hate it here. You go too far out in time, the way that SMH trades, you're probably going to see one of your levels tested. So doing this on a more short-term basis kind of makes sense to me. You mentioned 37 days here. I would even go in a little bit more than that right now, if only because the levels that we're looking at, I'm looking at that low near 550 and the highs up near 670, 550 and 670. I mean, look, we can get paid there, 540 and 670. We can go just right outside those highs and lows. And it's kind of a coin flip here.
Chris, what you're doing is you're taking in 20% of your risk. Okay? Your risk on this is I thought you're
fixing it up there.
5 points. You're taking about a third of the width of profit in a third of the risk in your potential profit. That's a decent trade. You have a decent probability of making half the money. You're generating $3.40 of positive theta. That's how I would trade a neutral outlook in SMH.
And that's exactly how we're going to do it. Maybe we get filled here in the last few minutes. It never excites me when we get filled that quickly, but that's the market we have in front of us. What are the best opportunities on the board right now? Yesterday, you were speaking fondly of some of these consumer names that were turning around as rates were coming back in. There's a little bit of an extension there today. S&P down by 0.2% here. But the Dow and the Russell.
The Russell.
The Russell, the Dow are not for nothing.
No,
this is the pigs.
I'm still short a bunch of call spreads in IWM. They haven't reached their maximum risk at this point, but I have zero risk in actually holding them, hoping for a sell-off. What little sell-off we had in the Russell doesn't even get close to them. I need a good move down in IWM. Right now, it's not a huge loser, but it's one of the losers on the board. My biggest loser right now are my short put spreads in crude oil. That's what it is.
Crude, I'm genuinely shocked that it keeps falling like a knife down. It's at 79 or 70, dropped to 69 earlier. I was very surprised to see a 6 handle on there, but vol keeps coming in. TP, I mean, that's the story of crude right now. The story of crude is that the war's over. Where does this stop? I mean, I could see this going down to maybe 67, but that's the technician in me. And at that point, we start to get down to the pre-war levels. Flows are resuming, though. Hey, TP, we're going to have Micron earnings coming up just shortly after the bell. Ilya is going to be joining us for overtime to get that coverage in. But as we get ready for those Micron earnings, a little bit of a bounce here in the stock market. 0.1% lower here in ES. NASDAQ only down by 0.5%. They fight back.
They
Some of
are.
their losses.
They are battling for the hearts and minds, Chris.
And we shall continue that battle on overtime, which is coming up next after a brief break. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Micron is printing money right now. We are back on overtime. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, let's just get right to it. Micron earnings out right at the top of the hour. EPS comes in at $25.11 versus $20.71 expected, so it's a beat by 21%. Revenue's coming at $41.456 billion, which is up against the expected $35.82 billion, so that's a beat by 16%. EPS is up that's not a typo, 1,215% year over year. Revenue's up 346% year over year. EPS up 106% quarter over quarter. Revs up 74% quarter over quarter. The guidance is good, Ilya. You know, we got to talk about that too here. Micron is telling us that they see fourth quarter adjusted revenue 49 to 51 billion. The consensus forecast was 43.24 billion, and their 3Q adjusted gross margins 84.9%. Versus an estimated 81.9, 84.9%. That's gross. That's no pun intended, but that is filthy. So we have a Micron rally here, 1,083 after hours. The share prices were trading lower effectively all day long. We're fighting to get back to 1,100. It's providing a lift back into positive territory here for the broader stock market, which was moving up in those final 5 or 10 minutes of trading for what it's worth. The S&P's effectively neutralized the day now. It's only up by a little bit more than 0.1%. Same for the NASDAQ, up by about 0.1% here. So the tone's a little bit different. Not sure if we're out of the woods, and the earnings call for Micron is going to have to do a lot of that heavy lifting. So we'll call today a bit of a scratch, all things considered. Ilya, this sets the table, though. Micron did its job. You beat on EPS and revenues by 20% or more, and you guide higher in the same degree by 15% or so. The market's going to like it. I'm not saying we're going back to highs here, but maybe this stems the bleeding, perhaps overnight, and a lot of the semi-chips has been hit hard the past few days.
You might stem the bleeding episodically. It doesn't look like you're really going to do much because even if we look at what the futures are doing here, they're testing the underside of a range they just broke on a 4-hour basis, on an 8-hour basis. This looks more corrective, and I would not be surprised at all if this fades because the nature of this has had very little to do with anything that changes the story. We go back to this idea that if we fix the Strait of Hormuz and the war and oil comes down, everything will be okay. Is it? No. Crude oil is basically back to the pre-war levels, and yet sentiment is melting. So if you were going to fix that, were you going to have anything different? No. Did anything break in the AI story to give us this sell-off over the past several days? No. Absolutely nothing is different. Why are we melting down? Because sentiment itself has turned, and if you look at the bonds, you can see it.
Yeah, so ZT here, we see that yields are lower at the front end of the curve. And across the curve today, you have home builders, as TP pointed out earlier on last call, as the top performing sector, which when you look at the long end of the curve where you're going to have your mortgage rates based 10s, 30s, they're looking pretty good. In fact, Ilya, maybe we just re-anchor this here to give a slightly different perspective for what's happening in ZB. That to me is a pretty classic left head, right shoulder that's breaking out right now. So maybe lower yields are on the way.
Today.
I wish I jumped in. I missed my opportunity, but that's a nice little flip through the moving average envelope and then using it as support after it's been resistance April, May, June, and then now it's support for a few days before you run to the upside here. So home builders are doing really well today, up 6.15%. XHB 5.62% higher. Consumers as well. You know, I don't want to look past these things. XRT retail nearing the top side of its range. It's been trading sideways for a year. So XRT is now up 2.84%. XLY adds another, we'll call it 1.15%, mostly range bound for the past several months as well. But you know, I can't help it. Oil's down 4%. 2-year yields are in. 30-year yields are in across the curve. And the consumer-facing stuff is having the best day.
Yeah. And I think that's really the thing to be concerned about. Why? Because if all the market cap sits in tech and semiconductors and has sat there forever.
Nasdaq's up 0.5% now.
Then when we look at what has been motivating the sell-off over the past, let's call it, month or so, where stocks have clearly stopped rallying, basically since mid-May, and are now in some sort of consolidative setup. Over the past several days, since the ostensible positive news that the war is over, we've faded. And you got to ask why. And it's not because anything has gone wrong. It is because sentiment has changed. And the nature of sentiment is such that when sentiment has changed, that's it. There's nothing left to do. There's nothing to fix. Because nothing was an episodic catalyst to trigger this. There was no headline. This is something that is occurring, as I've pointed out, because of the inherent nature of the cost of money. We have had a relentless rise in the cost of money, and eventually that becomes an issue because the situation, as we just saw in the PMI numbers, as we'll probably see in the revised GDP numbers tomorrow, the actual growth mix and the interconnection between inflation and the AI story is sentiment negative at this point because the actual growth mix is inflationary. Manufacturing is outpacing services.
So you wanna
Business
fade
investment is outpacing consumers. This is not a positive environment, and the markets have already recognized it.
So 0.7% higher here on NASDAQ. You have short deltas in your equity book right now.
Yeah.
Two questions then. One, will you fade this? Because, hey, the market broke down. It's now bouncing back to I think this is a key turning point. I'm looking on the 4-hour chart. Find me highs and lows going back for the past month or so that have been more pivotal than the psychological level around
This is
30K.
critical right here.
Okay, so one, are you selling into this move higher? Two, if you're not going to, are you then worried about this flipping back through this key level? And at what point do you tap out?
I have been sitting on bearish exposure for the better part of a month. And my kind of line in the sand is the highs from the top in June. I'm short against those highs. So for me, these are already positions that are working. I did not want to add to them today in the teeth of Micron because this thing might happen that we're looking at currently. Because again, this story hasn't changed. I don't think there's anything that should suggest that Micron ought to stop printing money. I just don't think it matters. I think the markets have long since discounted that, and we're off into a different story. So yes,
15,
I'm looking to fade it.
15%
I'm going to look
here.
to fade it perhaps tomorrow, depending on what the market gives me in terms of vol. I mean, obviously, risk reward still matters. Pricing still matters. We'll see. But I would be looking to sell calls against this.
So Micron's up 15% here after hours, give or take. It closed around $1,000.
Cocaine is a hell of a drug.
You know, it's not going to be at all-time highs tomorrow, but Ilya, I can't help but notice here, just technically speaking, sell off into the 1 month, sell off into the 1 month here today, sell off into the 1 month and another bounce. SMH, a very similar type of pattern where we have recent swing levels that appeared here. We've been watching this for a few weeks. That nice little hammer candle becomes resistance, support, 1 month.
No, it could hold.
It just feels
let's
like
be clear. It could hold here.
Yeah, I mean, this feels like this is the place that I should be. Well, I mean, I'm hoping it. What? You know, well, it kind of hurts my feelings. I need it to hold here, Ilya, because I'm still sitting short of put spread. 37 days to expiration, 615, 600. So
I'm completely open-minded, by the way, to being wrong about this because there is the possibility of another inning here where the markets look at the bonds, they see the bonds coming back up a bit, and they misread the tape. But so far, over the past 48 hours in particular, what we've learned is that stocks fall and bonds rally, and that's new since the war trade started. And that war trade was about inflation, and this apparently is less so that now. This seems to be a cyclical thing. Look at the breakdown in sectors, yesterday in particular, but today obviously a bit of a Micron themed story. But yesterday it was very telling. Today it's not altogether different. I mean, let's consider the sectors that did the worst today. Energy, basic materials, and tech. What is that? That's the data center build out. Which sectors did well today? Healthcare, utilities, defensive. Yesterday, which sectors did well? Healthcare, real estate, consumer, defensive. Which sectors got killed? Tech, basic materials, energy. Again, we're looking at now a much more cyclical themed mix, as though the market has concluded the economy is already overheating.
So I'm trying to think about tomorrow's PCE report that's coming out.
Yes.
I'm looking at the five-year inflation swap forwards, which have been trending lower over the past several weeks, and quite frankly are where they were back in October of last year, which is to say that in October of last year, no one was thinking that the inflation, the market-derived measures of inflation expectations were signaling any sort of stress, right? And then I'm looking at the inflation nowcast from the Cleveland Fed here, And I'm starting to notice that you're getting a little bit of downdrift in the headline PCs. Now, it's not filtering over into core yet, in core PCE, and you can see from May to June, there's still expected upward drift. But when the Fed sees headline PCE coming in, headline CPI coming in, it does give it a reason to pause and go, okay, well, if there was a lag in the core readings going up, then there's probably going to be a lag in the core readings coming down that now that headline inflation has a negative month-over-month impulse. I'm not sure. The market's always forward-looking.
Yes.
So tomorrow we get
so.
PCE inflation that doesn't reflect the narrative of oil trading at $70.
No.
How much stock does the market put into that then?
I think it's really important, as it was with the CPI and the PPI numbers, to look at the core, because what you're really looking for here is not the oil shock. The oil shock is a foregone conclusion. What you're looking for is spillover into stickier parts of inflation. That's number one. And number two, you're looking at inherent inflationary impetus, which is, again, something that was on the tip of the tongue for Fed officials before the war, where they were saying, look, inflation seems to be perking up. We seem to not be getting the fade out that we thought we were going to get when we cut by 75 basis points at the end of 2025. Hold on a minute now. And the reason why the Fed was talking about that, again, even before this war, was because the very nature of growth as led by business investment and manufacturing is inflationary relative to growth driven by the service sector and consumers. Because you have to spin that lesser engine much faster to get half as much growth. And so if you look at the velocity of money, I know we're getting into real wonky stuff here, but if you look at the velocity of M2 money supply, it's surging. That's inflation. And then you have the war as an added shock. So when you're looking at these PCE numbers, never mind the energy component. We know that's there. We know that's been there for months. Also, the CPI is out, the PPI is out. Usually you can back out PCE out of those components without all that much work. The question here really is, how much scarring is there going to be in core services from the inflation shock on top of what else is there? And if that suggests that the Fed is not going anywhere quickly here, or that in fact they are likelier to hike and that this September move is on, well, then that'll be something to pay attention to.
Yeah, there's a little wrinkle in the Fed funds pricing here in terms of how the market's moving. No longer July on the table favored for a hike, right? That was basically a 2 and 3 shot earlier this week. Now it's down to about 35%. September is still favored as the next month for a hike, but then nothing else for the rest of this year. January, you get to like 50.5% chance of a hike. So there's still a soft landing. I feel myself falling back into the stupid ways of 2022 and 2023. I'm looking at 30,000 here in the NASDAQ right now. If we can start to bump through the lows that we had earlier, I'm going to point out the 617 lows. That's June 17th, 29,923. You bump through there a little bit. You got to close through there on a 4-hour basis. The market starts to feel a little bit better. Maybe you get another attempt at a swing higher then, because then you enter the top half of its a top half of its multi-month trading range going back to, we'll call it early May at this point. There are still some good signs here, though. The Russell is up 0.75%. RSP, your favorite equal-weighted S&P 500, up 0.7% right now. It's still very much in breakout territory and bumping up against its 1 month as it's done so many times before.
As you would expect in a liquidation, because all the money is coming out of highly concentrated names. You would expect RSP to do relatively well here. You would expect that to be a marker of the beginnings of a sentiment shift.
Isn't that the difference between liquidation and people getting out of crowded trades? Like, if this was liquidation, wouldn't everything be falling?
No. And I think that's really the key here. We're not quite in full kind of hair on fire mode. And in that case, yes, everything would be.
Well, let me take a step back. This week, value, the cheap crap, has outperformed quality. Right? So this is not, even under the surface of the stock market, when you break it down by factor performance, it's not like the market has fled to quality names. They're jumping out of high value stuff and going into cheap stuff. And that's one of these little, like, is that really the hallmark of people that are panicking? You don't go into cheap stuff. You go into high quality things when you're worried about, credit deterioration, economic growth decline, drop in consumer spending, higher unemployment, you don't go to the junk. The junk is still holding up.
I think what's going on here is much simpler. I don't think that until the last 48 hours we really were going into a situation where this was a cyclical concern. I think the bonds are starting to show that literally over the past 2 days. I think what we're looking at as far as the stock market is concerned, and the reason why RSP is a little bit better, which, by the way, if this were a rotation that were healthy, RSP would be scorching. It would be breaking out like a rocket ship because there is so much money not in those names that aren't semiconductors and tech. Tech has been outperforming by such a ridiculous margin for 3 years now, going on 4, that the amount of rotation that there is to do is astronomical. The reweighing would be huge if this is that. But it's not. RSP is barely moving. It's just not falling like the headline index is. And to me, what this looks like is about as good as you can get in a liquidation because money is moving clearly. I mean, the dollar is at the highest in over a year. Money is clearly moving into cash. And money is clearly also rotating into some of these less loved, not tech, not semiconductor names opportunistically. If it were really staying risk on, this is what RSP would look like, this chart here.
I'm having trouble digesting the notion that I'm afraid of the cost of capital going up, so I'm selling out of semiconductors, which are cash cows right now, free cash flow machines, and running to the Russell 2000, which is filled with mostly unprofitable.
You're not, which is why it's not breaking out. You're going primarily to cash, which is why that's breaking out.
So I want to bring up this, we're going back to Micron here, is extending its gains after hours, 1166. Again, it closed the day, I guess technically the last trade print is 1048 and a half. So it's about $200 higher, 100. My math is awful right now, $110 higher here right now. There's a great guy I follow on Twitter who writes a great Substack, Tay Kim, at First Adopter. He has like 100,000 followers. He talks a lot about stuff. His reaction to the Micron guidance here is, holy crap. I think this is worth reading through. I'm going to leave it up on screen here, but I kind of just want to translate this right now. When he says that they've signed now 16 strategic customer agreements, or SCAs, we expect will fundamentally transform our business model. Just right off the top of the bat, Ilya, Micron is telling the market here today that the memory cycle is becoming less cyclical. I consider that to be a hugely, this little segment of comments that have been highlighted here, a huge arrow in the quiver, having read through this, for the argument, the thesis that demand for compute, having now risen to the level of importance as energy security or national defense policy, is breaking out of its cyclical cycle. And
would be.
I point that out because overnight we got news that SK Hynix is considering a U.S. IPO offering, which in the George Soros theory of... Well, talking about this in the terms of like the George Soros theory of reflexivity, higher prices attract more supply attracts lower prices. So what's this company trying to do? They're trying to raise capital to expand production. More capital is going to lead to more supply. Micron's telling you that's not a thing you need to be worried about here when you read through this guidance. And I find that to be the most important takeaway. Forget the numbers that they put up. They're making an argument is that they have, this system here, take or pay. These are binding agreements. They have a ton of revenue locked in at 80% plus margins for the foreseeable future. It's a remarkable story that's going on.
I mean,
right now, just in the corporate
that's
world.
incredible, and you would of course expect as much. I think you have to remember that in evaluating how amazing the great and powerful Micron future is going to be, you have to remember a very kind of old and well-worn adage. The economy is not the market, and the market is not the economy. We're not talking about whether Micron is going to mint money. We're talking about whether the market is going to buy it and go up. That's a whole other thing.
Semiconductors and chips and memory in general have been viewed as these cyclical chips. With this, as I'm reading through the comments that they're making here, if my understanding is correct, I'm gonna say that this means about half of Micron's future revenue is booked for the foreseeable future, right? That's a higher floor of production capacity certainty moving forward, and that's locked in prices with customers, right? They're going to produce this stuff. Someone is going to come buy it. We have the demand for it here. You know, this industry is fundamentally changing. I don't think we can ignore that. It's happening right beneath our feet. And usually, right, these types of changes, we only know about them in hindsight. But after this earnings report today, Ilya, I am so excited to look at Micron's new PE ratio, because it was still holding below 10 going into today's report. Where are we at now? 8.6.
Yeah, I mean, there is, I think, the difference of differences between looking at this and saying, well, clearly this is an economically transformative moment in time. And so was 99 and 2000. Well, let's remember, here we are. The internet clearly worked out as an idea. That did not prevent for there to be a distributed crash.
$28 billion of net income on $41.5 billion of revenue. And they're telling the market now that they have about half of that revenue locked in for the next, out to 2033.
Well, good. What's there left to speculate on?
Whether or not
sounds like a reason to take profits.
Oh no, I'm feeling good about the little bit of the semiconductor short put spread that I still have on. I am not feeling good about that short iron condor that was put on today here, although we're getting a little bit of a vol pullback. The short strike is 540 on the short put spread. It's 690 on the short call spread side here, Ilya. So getting to 690 would mean this thing is going to jump another $50, which would be a 9% day, 8.5% day here for semis tomorrow. Not out of the question, but we're already up about 3% or so here in the after hours. I think I'm just going to take this off right away. The short put spread that's sitting out at 37 days, that can hang out for a little while, as it were, because that's working now all of a sudden. Beyond that, I'm thinking about some of the NASDAQ exposure that I have that building into MNQ in recent days. I would love to get a little bit more, but we've got to get through this recent swing point right now. I know you and I differ on this, but I see this little swing high here, the 623 candle, so that's yesterday morning. Why does that matter? It's when we retested the pivot low from 617, right? That's when we established this market was going to go into a new breakdown. So getting through there, to me, would signal we have a durable low here from today to trade around. And I would layer in another short M&Q position. Looking at the strikes, 37 days to expiration seems like the price is right to me. That low comes in at 29,263. So just going out to the other side of it here, I'll go to 29,000 and maybe 250 points wide, risking 3.5 to make one. At a 62% probability of profit, I'll keep stacking that in M&Q and nipping the little exposure on these pullbacks because it continues to work for me right now, Ilya.
Yeah, I mean, look, I think it's pretty clear here what we're going to find tomorrow is going to be telltale. I think we're at a clear inflection point. To me, this looks a whole lot like I'm going to have the clearance to sell some more tomorrow. And I'm going to be doing it by selling calls. So I'm going to be short vol here. I'm going to be risk defined. I'm going to be doing it in the ETFs. But this looks like a mulligan. This looks like a breakdown that is giving you a correction to sell into.
Godspeed, sir. Overtime is now out of time for this Wednesday, June 24th. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. And of course, stick around because Ilya, he's sticking around. He's got Macro Money up next here on Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company. There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Micron saves the markets from another ugly close just in the nick of time, but the damage may be done already and sentiment could be running away on autopilot. That's what we're going to try to explore here and see what comes of it here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And the makeup of the price action that we see today before those Micron earnings, and frankly thereafter too, seems to be telltale. So we'll take a look here and see what it means and what we might infer going forward. Here's the S&P 500. You can see it took a nasty spill yesterday, taking out this internal support right here. And of course, this is starting to look increasingly like a double top. Now, those Micron earnings did help the S&P erase this bit of follow through right here. It looks like we're going to close just a touch in the green when it's all said and done. And of course, those Micron earnings were impressive to say the least. EPS of 25 bucks and 11 cents. That's a beat of 21% relative to expectations of $20.71 on revenue of 41.5 billion. That's against expectations of 35.8 billion, so a beat of 16%. EPS up a staggering 1,215% year on year. So if you needed evidence that the AI build out was minting money, here is your evidence. Not like we were really looking for it, but huge numbers clearly. And so that we get a little wrinkle here that pauses the sell-off is hardly surprising. But perhaps even more interesting is just how little of a wrinkle we end up getting. Now, we did erase intraday losses in the S&P, but only just so, and nothing else. Similarly, we've erased intraday losses in the NASDAQ, not surprising, of course, there as well. But again, the architecture of yesterday's breakdown, very much intact there also. But it's really what's happening in other markets against this backdrop that makes this so ominous. We, of course, have what looks like a top to work with in the S&P, and we also have a broader range with support here coming in at the June low. And for now, we don't have a convincing breakout from this range. We just have a range that's overtaken as the dominant setup after an aggressive rally. And so momentum has stalled, and looking just at this, one concludes, okay, well, we'll see how this goes. Maybe we'll consolidate and break higher. Maybe we'll break down. But the signs in other markets are far less encouraging. Taking a look at gold here, it is continuing to sink, taking out the support here that we saw at this spike low and threatening to take us below the 4,000 level and down into here, these bottoms going all the way back to last year, November or so. The US dollar is continuing to surge. It's taken a bit of a back step here in the second half of the day versus the first half, but the breakout here from range resistance that has held back prices going all the way back to July of last year, that's unmistakable. And now it looks like we're aiming at the highs from May of last year. So a very aggressive move in the dollar here. And altogether, you would think, well, gold is selling off, the dollar is rallying, stocks are kind of wobbly. Surely this is, again, some sort of reflection of the war trade where we were looking since late February, early March at this dynamic where we had this war. Anytime that a bad headline would come out of the Middle East, the market would get jittery thinking, well, this is going to be an inflationary oil supply shock. That's going to drive up yields and tell the Fed not to cut interest rates. So we're going to have a stronger dollar. We're going to have weaker gold. Gold, of course, doesn't yield anything. So rising yields and a rising dollar hurt it inherently. Rising yields can be beneficial for the dollar on the flip side, because, of course, the dollar does confer yield on its holders. It also obviously benefits from a higher interest rate environment in the sense that one person's borrowing cost is another's lending income. And so if you are a holder of dollars and borrowing dollars is costlier, then a lender earns more lending it. And so there is interest in owning it then. So on the surface, this looks like a war trade gone wrong kind of a thing, where something has occurred to stoke the market's inflationary jitters. But looking at crude oil here, it seems clearly something else, because crude oil continues to sink and is increasingly getting to a place where it has erased the war altogether. We're within a hair of this upside gap that marked the start of the war. That's now essentially the bogey, and we're closer to it than farther from it. We've definitely given up the up move here. The series of higher highs and higher lows in crude oil has long since come undone. And this hardly seems like the impetus du jour. Moreover, bonds have accelerated higher. That, of course, means interest rates have come in. And so, although we haven't had a breakout here, this is now becoming a very interesting mix. Stocks down, dollar up, gold down. All of that seems to speak to inflation, but at the same time, crude oil is all but back from that upsurge in geopolitical risk premium from the war. And the market seems to think interest rates are aiming lower, not higher, in this environment. So what's going on? Well, as we talked about yesterday, this seems like the beginning of where the market looks at the current situation and says, right, the inflation that came as a function of the war, together with the inflation that was already there as a function of the imbalance in the way that U.S. economic growth has arranged itself, that was an inflation shock and a reason for interest rates to look like they are probably not going to be cut. But all of that then leads us into an economic downturn. And perhaps the incoming economic data that we're going to get here, the updated PCE inflation numbers, still the Fed's favorite gauge until the new Fed chair, Kevin Warsh's task force, has come up with something different, maybe, by the end of the year, as well as a revised set of first quarter GDP data that really highlights why growth has become inflationary and what that ultimately means going forward. But an environment in which bonds are acting not as a proxy for monetary policy, but as a haven and surging alongside the dollar, while stocks come down and capital comes out of gold, all that seems to come together to suggest that there is a kind of liquidation underway where capital is going to liquidity, that is the dollar, and relative safety, that is bonds. And typically that kind of risk aversion classic, typically that comes with some sort of cyclical risk. And the idea that perhaps the economy is headed for the skids. Now, here is the incoming report on inflation. Now, we can see we've already seen quite a bit of a jump here, and that's to be expected, of course. We've just had a war that's turned out to be a massive inflation shock, and so not surprisingly, the headline numbers have bounced aggressively. Perhaps more interestingly still, the core is creeping higher. And so what we're finding here is a situation where, just like we saw in CPI, just like we saw in the PPI reports that we've seen over recent weeks, we're seeing spillover from what's going on at the headline into core, which excludes energy and, for that matter, food. The expectation for these incoming numbers is that we're going to get a rise to 4.1% year on year for headline. That would be the highest since April 2023. So we'd be going over here. And for the core, that we're going to get to 3.4% year over year. That would be over here somewhere, and would be the highest since October of 2023. So either way, we're approaching something like, give or take, 3-year highs on PCE inflation. And if we look at the forecasting here for the Cleveland Fed's nowcast, we can see indeed the headline is expected to edge up a touch and hit right around that 4% mark. The core seen a little bit flatter here, but it looks like the forecasting envisions a kind of flattening out of inflation. Now, if we look at the PCE and PPI and CPI numbers in concert, because the PCE tends to come later than the other two, and the other two tend to contend with a lot of the same variables and have a lot of the same components, you can usually reconstruct a model of PCE once PPI and CPI are out and get a sense for where it's going. And the critical thing here, of course, is unlikely to be, oh, well, how much of a shock is energy? And could we dismiss that because clearly crude oil has significantly reversed? Well, we know, of course, that these numbers are going to be shaded by an energy-inspired inflation shock. So that really ought not to be a meaningful object of speculation. The much bigger deal for markets will probably be the extent to which there is scarring from the inflation shock into core, sticky inflation that is likely to have a meaningful impact on the Fed beyond the immediate term. And we can see that in spades in the CPI report, where we can see the month-on-month surge in service sector inflation is the strongest that we've seen in, give or take, 2 years. And we ended up there because a lot of the energy shock has moved from just the price of fuel over into things in the service sector like warehousing, like freight. And so we already have that part of it there. The larger issue for the PCE numbers arguably is going to be, do we confirm that that spillover is also occurring into core on the PCE side? And perhaps even more importantly, do we have other inflationary impetus here besides what's going on from sort of a discernible war-related catalyst and the spillover from that? And how sticky is that? Because again, the Fed was worried about inflation heating up before this war began. And much of that comes from the way that economic growth has started to arrange itself. And in this sense, the final revision of first quarter GDP numbers is going to be very interesting as well. Now, it is expected to confirm what we've already gotten in the second revision, which is that the initial forecast of 2% growth got clawed back to 1.6. That's what we see right here. It's also a pickup from the 0.5% growth that we recorded in the fourth quarter, where output was hamstrung by a U.S. government shutdown. So we're a little bit less than halfway back to the average of 4% growth in the second and third quarter of last year before that government shutdown. So once the dust kind of settled from the first quarter acrimony having to do with the rollout of the Trump administration's tariff regime, growth got to about 4% in the second and third quarter, and that was the baseline. In the fourth quarter, because of the government shutdown, obviously, that got crushed. What's interesting about the comeback then in the first quarter is that while we've only clawed back about halfway, a little bit less, we've done it in an unusual mix where investment, which is only about 14, 15% of the economy, contributed more to growth than did consumer spending, which is 5 times larger at 68% of the economy. And so naturally you go, well, how do you get a small engine of growth to contribute more than a large engine of growth? Well, you got to get the small engine moving really, really fast. And that's, in fact, what we saw. We've looked at this chart quite a lot recently, very helpful one from the folks at Bloomberg. And we can see here that business investment grew at a blistering speed, in excess of 10% annualized in the first quarter. Meanwhile, what happened with consumer spending continued to look grim. A second consecutive quarter of slowdown there, and growth meaningfully weaker than GDP itself. So we can see here what this growth seems to be made of, and that the nature of it seems to be inflationary, because when you spin that smaller engine of growth so quickly as to contribute more than consumption, which is 5 times bigger, you're going to have a whole lot of money turning around and changing hands. And that is the thing that inflation is made of. As a matter of fact, the velocity of money has been surging and now is approaching something near a 6-year high. So when we look at the more recent growth numbers, this is the U.S. PMI numbers that came out covering June, and so capturing the second quarter here, we can see there's been a meaningful pickup in growth on the surface. This is, of course, done in the logic of PMIs, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And clearly, in June's numbers, we had the strongest growth, the highest above 50 that we've been since January. But echoing what we saw in those first quarter numbers, if we look at the makeup of the growth, it's being led by manufacturing, which is only about 20% of the economy, as relative to services, which is closer to 70, approaching 80. And so we see here that the much larger sector is hugging that 50 line and barely moving. Manufacturing, on the other hand, is scorching hot. We likewise see the results. Inflation is clearly pointed higher, and although we get a little bit of a pullback here alongside crude oil prices, in the input side of the equation, in particular manufacturing inputs, which is, of course, energy and just more generally petrochemicals heavy, the services output price line here in the orange, note how that continues to move higher, suggesting that the indication here in the PMI report closest to consumer inflation, closest to CPI, closest to PCE, is continuing to build. And so what we find then is a situation where the very nature of growth is becoming inflationary, whether you have a war shock or not. And indeed, this is happening not just in the US, but globally, where manufacturing is outpacing services. This is as of May, the global PMI numbers. We'll get the June update once all of the countries' reports come out, and most importantly, China next week. But as of May, we can clearly see that manufacturing-led global growth is also very inflationary. And again, it's not rocket science. Why? As with the US, the main thing that's driving the global economy more broadly seems to be this AI build-out. And that is, of course, heavy on all things manufacturing, in particular the buying and stockpiling of inputs in anticipation that the costs are going to be even higher downwind. You can see a lot of that going on in the US in particular. But the issue with that is that as you get this inflationary growth, you're only squeezing consumers harder. So consumers that are already weaker, as we saw in this US GDP breakdown, are only being made more so by how quickly this is spinning and spilling over into broader inflation. And so this starts to become something of a vicious cycle. The hotter the inflation that's created by the boom in the AI build out, the more consumers are hampered, and the likelier it is that you get a meaningful enough downturn in consumption that its size overwhelms whatever is going on, and you start to see growth backsliding. As a matter of fact, we saw this already in the PMI numbers that we just looked at for the Euro area, Australia, and the UK. All three of those economies are in contraction mode, with a booming manufacturing sector capturing knock-on effects from this AI build-out globally. But those service sectors have become so weak and demand has so suffered as a function, in particular, of this inflation, that those economies are in contraction mode because those service sectors are just so much bigger. It hasn't happened yet in the US, and for that matter, in similarly AI-leveraged economies like Japan, as we just saw. But the way that this is likely to work going forward seems to be getting foreshadowed in those European and Australian numbers. Not surprisingly, then, there's been an aggressively hawkish shift in central bank expectations. And now, with a lot of these central banks having already made some kind of move, or at the very least seen scope for a move ease back a little. So the Bank of England hasn't hiked, but the markets are starting to question just how much they will do, though they're still on the menu for at least one hike. The Fed is now on the menu for at least one, and a strong possibility of a second. The ECB has already issued one hike and is expected to do one more, but only just. The RBA has already issued 3 hikes and is narrowly looked at as likely to produce a 4th. But as we look at all of this together, what we start to see is after this initial inflation shock, but for the Fed, a lot of this hawkishness has eased back. And part of that surely is that, for example, the RBA and the ECB have already started to hike, but part of it is the implications for growth are starting to materialize, and the anti-growth elements of this inflation are starting to present themselves. And so as we look at then what this most recent price action seems to suggest, what we find is we've gotten to a place where the market is convinced that rate hikes are coming, a cumulative 84% chance that we get a hike by September, a near certainty by October, almost 94%. Come December, we're looking at a significant possibility that we're going to get a second hike. It starts becoming better than even odds by the middle of next year. That's a little bit less hawkish now than it was a day or two ago, comporting with what we just saw in the bonds. You can see that here. And as you put that together with the price action we see in stocks and with the price action we see in the US dollar, as well as gold, we start to see, well, maybe the market is already watching a situation where the ramp up in inflation is going to create demand destruction as it has in Europe and Australia. And maybe we are already in a place where that is a cyclical risk, where rate hike expectations are peaking. And perhaps we're going to get back to a conversation about rate cuts, but not in that good risk on way, more in that growth threat recession way. And so as far as exposure is concerned, I'm still short gold, long the dollar against the major currencies, and I'm long it against the Swiss franc here in my spot account as well. Short baseline risk sentiment, so short call verticals in the NASDAQ via the Qs, S&P via the SPY ETF, and looking at the driver of inflation here, other than oil, natural gas, that's holding up a little bit better. So still a little bit long there, but largely looking for this to become a situation where the story is transforming and starting to look at the long side of the bonds. I still have a little bit left in puts at the middle of the curve, but I have likewise started to put on something on the long side of the long end, because we could be getting to a place where this starts being a cyclical issue and a recession risk. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
What's up, Tasty Nation? Welcome to the show. My name is Mike Butler. I'm here with Jermal Chandler.